Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Good morning, everyone. Thank you so much for joining us this morning for day 3 of our multi-day biggest ever MetaStock event. We're so glad to see you here. I see we have people, already a lot of people coming in. Scott Gao, superfan, always good to see you. As you're coming in, please do make sure to say hello and let us know where you're coming from. Excuse me, I got something in my eye. I beg your pardon. Oh, that was an untimely event. Hey, how did you like our MetaStock commercial? I made that out of my basement during what we've all come to know as the pandemic. I think it turned out okay. What do you think? All right, my name is Greg Lewis. I'm the marketing director here for MetaStock. If you don't know who MetaStock is, we are purveyors of charting software as well as market data for traders, active traders just like yourself. To that end, we're so grateful to see you all here today. We have a great lineup, and let's talk about that really quick right now. Today, cutting over there. So today we have, Steve Bigalow starts off the lineup. Steve Bigalow is always very popular, and we're glad to have him here. Hima Reddy will come up in the next hour. After that, Rob Hoffman. It's been a while since we've had Rob Hoffman here. That'll be exciting. Then our very own Jeff Gibby. And then Steve Primo. And then, my mouse to work. And then, the ever popular Oscar Carboni. After Oscar, we're rounded off by Kevin Nelson. Well, all of today's presenters are old friends at MetaStock. It'll be great to see all of them. And they're all have great histories with us and are exceptionally engaging speakers. So make sure to stick around for all of them. Also, another thing I wanted to tell you about. By the way, we'll be starting our event here in about 3 minutes. This. You probably heard on Sunday we're going to have premium classes. These classes will be presented by Steve Bigalow and Dr. Alexander Elder and also Oscar Carboni. If you want to learn more about this, just go to metastock.com/conference20prime. metastock.com/conference20prime, or just give us a call or chat during the day and we'll go ahead and get you set up for that class. One final thing, let's see, how much time do we have? We're starting in 2 minutes. Well, one final thing I want to let you know is, of course, as always, we encourage you to ask questions. I see, Pratik is on now, as well as Jesse. Hello. Jeff Gibby's here. Hello, Jeff Gibby. Ask a lot of questions in chat. We encourage that. The presenters always can't get to it right away, but usually Jeff manages to get that question in front of them before the end of the presentation, and it just makes it a much more engaging experience for yourself and for everyone. So really do ask questions. Also, we're always asked if this is being recorded. Yes, it is. It's being recorded right here, right now. And I don't know the best way to explain this. Just come to this link in YouTube and you can watch this anytime you want. You could rewind this right now and start watching what I'm doing right now over again if you wanted to. I don't know why you do that, but you could. All right. It's about 1 minute and 40 seconds left. I'm going to go ahead and mute myself, and then I'm going to make sure that Steve and Jeff are ready to go. And once again, thank you for joining us and successful trading.
All right, good morning, everybody. I hope you're doing well. Welcome to day 3 of the MetaStock Traders Conference 2020. Good morning, Shushant, Charles, YT, Kashak, Neil, Salvador, Mark, David, Richie. We don't have a president confirmed yet, but I think it'll be today. So no president-elect yet. They're still counting. We'll see. It's going to be soon. They've got to be running out of votes by now. Good morning, Jesse. Welcome back today, Scott. Hey, Pratik. Welcome. Welcome, everybody. Good morning again, Jennifer. Good to have you back. Let's go ahead. I know your favorite part of the day is reading of the legal disclaimer. We're going to, Greg, your mic is on, just so you know, before you start cussing or something over there. Let's go ahead and read the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information in connection with the company. Gerald asked the question, I missed the first days. Well, I've received the recordings. I was registered. Yes, if for everybody that registered in GoToWebinar within about an hour of the close today, after we get done today, automatically an hour later, there'll be an email sent to you with the YouTube playlist. It'll have all 3 days. So that'll be sent to you. I'll also paste the link for you as soon as I'm done introducing our guests. So there you go. Salvador says, how do I know I am in the list of possible winners of the fantastic prizes you are giving? If you're in GoToWebinar, you're on the list because I just pulled the GoToWebinar list in terms of the people that have registered through our website. So if you're watching on YouTube and you want to be eligible for our fantastic prizes, like Salvador is, go to metastock.com/conference, click on the little free registration button, and it'll allow you to get registered. So Salvador, that's a great question. I'm glad you asked. We'd love to, I pull that list every time somebody starts speaking. So if you do it now, you'll be on the list of the first drawing, which we'll do after Steve, and it's for a Bollinger Band DVD. So there we go. I do want to say thank you to Stocks and Commodities Magazine for supporting us and sponsoring us and being partners with us in the event for the last 7 years. They do a great job. We appreciate what they do. And I want to say I appreciate MetaStock because they employ me. But in addition to that, that's who we are. We're here if you're new. If you weren't here all day watching us use our software and that kind of stuff, we're here, located here in Salt Lake City. Our support staff is here as well. We have a lot of different offices because a lot of us are working out of our basement right now. That's getting a little bit more normal. But we do have a fantastic software program that's been rated #1 27 years in a row now. We keep more people in our support team than we keep in ourselves a marketing team. That's just a great company to work for. It's a great company to represent. We will be doing an all-day offer for a promotion to MetaStock, where if you pay for a month of it, you can get 2 free. And if you have any questions, if you need anything, give us a call. 800-882-3040. Let's get to the guest. So today, our first guest is a gentleman by the name of Steve Bigalow. Steve Bigalow, and I go back a long way. Steve Bigalow has some of my favorite patterns. He's taught me some of the things I like most about trading. One of my favorite patterns that I like to scan for, and I scan for on a regular basis, is called the Doji Best Friend. Steve, this is a pattern Steve taught me. So I really, very, very personally say I appreciate not only what Steve has done for me with my personal trading, but the impact that he's had on our business, the friendship, and he's just a great guy. And he has some wonderful jokes that he's going to tell, I'm sure, today as he goes through his presentation as well. So, Steve, let's go ahead and bring you on and let us know how you're doing today while I get everything switched over to you.
All right.
Let's try it.
Yep, try that. Okay.
Yeah, we can hear you. How you doing today, Steve?
Doing good. Unusually warm here in Pittsburgh. I'll show my screen. Here we go. So hopefully everybody can see that. Does that look good, Jeff?
Yes, it is. I'm sorry. I was looking at the questions, making sure I had. Anyway, we can see your screen. The YouTube videos, just real quick, are going to stay up for until YouTube maybe takes them down. We're not going to take them down, so they'll be up for a long time. Steve, I'm going to get out of your way. Welcome to Thanks for kicking off the conference today.
All right. Well, thank you, Jeff. Yeah, we usually it's good for me to go first because candlesticks are like the building blocks, the bread and butter of just logic put into a graphic condition. And fortunately, I learned it very well because before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. And so every time I looked at a candlestick chart or learned something new, I would say, yeah, that makes sense. Or, yeah, I already knew that. So we had a hard time. We didn't. Through the years, you probably have gotten tons of promotions on how you're going to learn the new secrets of investing. There aren't any new secrets in candlestick analysis. It's 300-400 years old, and it's built on one basic premise, that investor sentiment works the same way time after time. So as we go through this, the first question I usually ask, just so I know how long to describe the charts, is how many people have seen my presentations before? Obviously, a Y for yes, N for no. That'll give me a feel for how much description I need to do on each chart. And then beyond that, if you have questions as we go through, I'll try to answer them as we're going through so it all stays in correlation to what we're looking at. Okay, so everybody, pretty much. All right, so let's do this. Out of the 50 or 60 candlestick signals through the years, I discovered there's 12. But all you have to do is, okay, it looks like now 50-50. All right. All you have to do is learn the 12 major signals. Now, there are 50 or 60 signals, but I tell people, other than the 12 major signals, you don't want to spend a lot of mental time and energy on learning the others because they don't occur often enough to spend time. If you just use the 12 major signals, the Japanese rice traders have provided us two major factors. One, the visual elements of or the graphics of a signal, and two, they describe for us what the investor sentiment was that created those signals. So just to show you kind of the logic, we're just going to concentrate on the Doji today. And the Doji, you will see, it's where there's indecision between the bulls and the bears. But there's a very basic rule about the Doji, and that is the price will usually move in the direction of how they open after a Doji. You've got candlestick patterns, and the reason for that is investor sentiment works the same way time after time. Now, I learned these on my own through the years because back when I first started learning candlesticks, I always tell people there wasn't a way to get a second opinion to see if you were doing things right. So I really had to learn them. I always tell people the only time I could get a second opinion is when I went to the doctor. I'd say, "What's wrong with me?" And he goes, "You're fat." I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So I had to learn each one of these signals and patterns, but I learned them very well because being a greedy person, I wanted to make sure I was looking at everything that was going to make me money. Before we start, here's one of the most powerful aspects of candlestick analysis, the T-line. We call it the T-line, short for trigger line, and it's got a very simple concept. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. What you'll find on our charts is you've got the 200-day simple moving average, the 50-day simple moving average. Those are on our charts, not because we use those. Every major money manager around the world uses those. We're just seeing what decisions they're making at those levels. We also have the 34 EMA, which works fairly well, but the most important one is the T-line, this black line. Works just as well on the downside. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. Everything that I tried to learn or apply to my learning of candlestick analysis was to keep my emotions out of my trading, because the biggest bugaboo of most investors is their own emotions. There's also a caveat to that rule, which is the further away you move from the T line, the higher the probability it's going to come back and test it, which adds additional relevance to a candlestick signal like the Doji when you're in the overbought condition. My overbought conditions are based upon stochastics of 12.33. That's not anything set in stone. That was something that I came up with one night, probably 4 decades ago, that I just tweaked the stochastics to where the peaks were corresponding with the overbought area, and the bottoms are corresponding with the bottoms of the chart. So that simple rule right there will make you a ton of money. Not too long ago, we had people in our options room that were long Tesla. Why did they stay long? Because it never closed below the T line. And then this is one of the basic evaluations of the Japanese rice traders. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. That's what turned me around 180 degrees, because I was the person that was usually buying exuberantly at the top and panic selling at the bottom. And so when I saw the graphics of those charts, I thought, well, shoot, I need to be doing the opposite. So as you can see what was happening here, look what was happening in Tesla a couple months ago. Moving up, and then you could start seeing the exuberance coming in. And what made us start taking profits here, even though we hadn't had a sell signal yet? Look at the distance you are from the T line. So, simple evaluation. If you're that far away from the T line, and you know the probabilities are extremely strong they're going to come back and test it, we've got a very simple trading rule. The T line is the 8 exponential moving average, short for trend line or trigger line. We couldn't figure out what to call it, so we just call it the T line. So the further away you move from the T line, and you're trading up here, I mean, that's a ways away. All you do is you flip to your 10-minute chart. And on the 10-minute chart, you stay long, you put your stop here. Stay long, put your stop here. Put your stop here, put your stop here. Then when it came down through the 10-minute T line, we took profits, which meant we were taking profits way up at the top end of the range, because as soon as we saw a sell signal and a close below the T line, that told us that that was when the sellers are coming in. This is not rocket science. This is just applying common sense to what happens to human nature. So we were selling up here versus waiting for a sell signal and waiting for it to, so on a Doji, if we didn't sell it up here, where was the next place to sell? Remember the Doji rule. It's going to move in the direction of how they open after a Doji. When it opened lower the next day, you would have closed out your position. The T line is the 8 exponential moving average. And it acts like Fibonacci characteristics. So here's the most powerful statement of using the T line with candlestick signals. If candlestick signals are the graphic depiction of what's going on in investor sentiment, which is based upon human emotions, and the T line acts like a natural Fibonacci characteristic, a natural support and resistance level of human nature. When you combine the two, you've got an extremely powerful evaluation of what's going on in investor sentiment. So a Doji means indecision. If you see Dojis in the oversold area, you get ready to buy. If you see Dojis in the overbought area, you get ready to sell. So if you're taking profits up here, when can you go short after Dojis? When it closes below the T line. So a Doji followed by a gap up is what we call your best friend. Oops, darn. Second. Yes. Sorry about that. It's called your best friend. So if you know a Doji, oh, for crying out loud. Hello. No, no, just take it. You see where the chair is sitting there? Go straight toward the driveway on that edge of by the chair. Yeah, and then come around. Sorry about that. All right, so if a doji represents indecision, which is where the bulls and the bears are now in conjunct, or I guess fighting with each other. So these are the four dojis. You got the star doji, which is a small trading range, a long-legged doji, which is a tells you there's been big indecision, big trading that day. A dragonfly doji opens at the top, trades lower, and then closes at the top, looking like a dragonfly. And then the Japanese rice traders describe the gravestone doji, where it opens, the warriors come out of camp. By the end of the day, they're fighting and they're beaten back into camp, leaving their dead all over the field. Thus, the gravestone doji. So anytime you see a doji followed by a gap up, we call that your best friend because it's got two elements to it. One, the probabilities of heading higher is extremely strong. And two, the magnitude of that move is going to be extremely strong. Doji, gap up, you want to start buying. That's telling you not only after that day of indecision, they have made a very strong decision of which way they want to go. So anytime I see this, look at where you're in the oversold area, you have a doji, it gaps up the next day above the T line, the probabilities are that your uptrend is starting. So again, this is not rocket science. It's not like you have to learn formulas. All you have to do is see what the signals are telling you and whether they've confirmed the signals. Best friend Morningstar signal, a 3-day pattern, big down day, a doji, then they take it positive and close more than halfway up this candle. In this case, it's a Morningstar signal that started with a gap up from a doji and closed above the T line. Tells you there's been a strong change of investor sentiment. So you can see a doji, bullish confirmation, good. You can see a doji hammer, bullish confirmation, good. You can see a doji gap up, best friend, very strong. Especially if you're confirming pattern. Here's a fry pan bottom. And what do we know about a fry pan bottom? We're looking for a breakout from that fry pan bottom. What's your strongest breakout indication? A doji gap up. So we buy signals based upon the signal in the oversold area and confirming. We're usually buying a pattern like a fry pan bottom. You can see how this is a big, slow fry pan. We're looking for the breakout, and that's usually going to occur when your stochastics are up in the overbought area. Do you have probability for doji in oversold area? Do I know the statistical probabilities, Ron? No. The reason we're looking at them in the first place is the actual results of that occurring when or of that resulting, because that's what the Japanese race traders have witnessed over the last 400 years. If it didn't work, we wouldn't be looking at them today. I will be doing drawings all day. Hopefully you share them. I will be doing drawings. Okay. All right. And it works just as well on the bearish side. If you see a doji gap down, That tells you exactly what you want to know. The strength of the sellers is going to be extremely strong. Kevin, yes, I think it's based upon the close, like any other moving average. How do you determine the overbought, oversold territories? This right here, your stochastics. If your stochastics are above 80, they're in the overbought area. If you're below 20, you're in the oversold area. So I tell people, don't take my word for it. Put your stochastics on and then see what signals occur in the overbought condition and how often. Probably 90% of the time, when you see a reversal, it's going to have one of the 12 major signals causing the reversal. So anytime I see a doji gap down, I'm going short. The other aspect of a doji is what we call the left-right combo. No, candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether you're trading stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. That's what you can use candlesticks for. So the only difference in Forex is you're not going to see gaps because it's continuously traded. My stochastics are 12-3-3. So a left-right combo is a doji followed by a bullish engulfing signal. The doji being a little left jab, the bullish engulfing being the big roundhouse right. So anytime you see this, especially in the oversold condition, if they start trading positive, you've got an extremely high probability of an uptrend. Left-right combo after a couple of dojis and a close above the T-line. Here's one of the patterns. This is a scoop pattern. Look at the flat handle, then the little scoop, then the slingshot effect to the upside. So essentially, when we look at a candlestick chart and we can see the signal and the pattern, we've already got a prerequisite of knowing what the probabilities are of which direction, and not only the direction, but the magnitude of the move. The major benefit of a candlestick pattern is not only are you going to have like all stocks, all boats rise in a rising tide. When you're looking at the pattern, those boats are going to rise a heck of a lot faster than the rest of the stocks. What are the moving average lengths? Again, the blue line is the 50-day moving average. The red line is the 200-day. Those are simple moving averages. And the reason we have them on here is we want to see what everybody else's decisions are at those levels. So if I see a left-right combo in the oversold area, this is what we call convergence analysis, or 2+2. The more pieces of evidence that you can see there's been a reversal, the higher the probability you're going to have a reversal. So there's a doji sitting right smack dab on the 50. What's that tell you about the sellers going to the 50? They finally reached a level where there's indecision. The bullish engulfing left-right combo produces a very strong probability that there's been a change of investor sentiment coming out of the oversold area, closing above the T-line, stochastics coming up, breaking this downtrend. That puts you in a position where the probabilities are extremely strong. These are all daily charts, but remember the definition of candlesticks. They are the graphic depiction of everybody buying and selling during a specific time frame. This could be a 1-minute chart, a 10-minute chart, an hourly chart, or a weekly chart or a monthly chart. They all look exactly the same. A bearish left-right combo, evening star type signal, you can be shorting this one. Left-right combo closing below the T-line, you're in a downtrend. So again, I keep repeating, this is not rocket science. Now, MetaStock has a great assemblage of good technical traders speaking over the last few days. You can use candlesticks by using any technique that you want, and you can add candlesticks to it. It's going to make you see the charts a heck of a lot more clearly. I do it the other way. I use candlesticks as my top priority, and then I can apply what everybody else is showing to see if it's confirming. If you wanted to, if you're a longer, Scott, if you're trading longer term, you could go to 14.55. I use 12.33 because I'm a swing trader. I'm usually trading average of 2 to 10 trading days. So I wanted something a little bit shorter. I used to trade the E-minis off the 1 minute, 5 minute, 10 minute combination. That also I could also add stochastics of 12.33 and 5.22. Just gave me a lot faster time to analyze. Let's see. Yes, Lon, or is it Lori? I'm sorry. Jeff will give you the. We've been working on putting our information into the MetaStock for the last few years now, and he'll give you the description of all the signals and patterns that are identified by MetaStock. The Doji sandwich is very simple. Again, if you use the Doji rule, which says the price will usually move in the direction of how they open, that becomes a very beneficial. But if you see a bullish candle and a Doji, and it opens positive the next day, it's telling you two things. One, it's going to trade positive, and two, usually this candle right here is the same magnitude as this candle right here. So if you're a day trader or if you're trading on any time frame, what's that tell you when it closed right on the T line? If it opens positive, it's probably going to trade positive, which means not only is it going to create a Doji sandwich, but it's telling you it's staying up above the T line, which means the probabilities of a net uptrend is much stronger. So anytime I see a Doji sandwich, we know the implication of a Doji sandwich. First of all, you've got a good trade on this day, and then you're usually going to have more follow through. This is a very strong reversal signal. And if it occurs on a major moving average, like a Doji right on the 50-day moving average, and they trade up positive the next day, what's that tell us about the signal? It's formed. And what's it tell you about the resistance at the 50? It's not there. The bulls have taken control. So Doji sandwich has expectations, more upside. Or on the bearish Doji sandwich, more downside. So if I see this setup and they open lower the next day right here at the 50, what's it telling me? They're not going to support at the 50. You can be going short. So look at your evening star signal, one of the 12 major signals, started your downtrend. That's telling you that the 50 is not acting as support. You've got more downside. This is all high probabilities based upon what human nature has done over the last 400 years and what human nature is going to do for the next 400 years. Doji sandwich tells you there's going to be more downside. So if I see a Doji sandwich, this is, again, a convergence analysis. This candle is a bullish harami, one of the 12 major signals. This is a bullish harami, one of the 12 major signals, telling you that the selling has stopped. And look where the selling stopped, right smack dab on the 200-day moving average. If the selling stopped, is there a reversal? Well, there's our reversal signal, a Doji sandwich closing above the T line. That starts your uptrend. Convergence analysis, all the evidence right there that that's where the reversal was occurring. The definition of a Doji is It's where it opens and closes at approximately the same level. So again, look at our Doji sandwich. What did it tell us about the 50? The 50 wasn't acting as resistance anymore. How long do we stay in this one? Until we see a sell signal and a close back below the T line. On a Doji sandwich, both slices, yes, are the same color. A bullish candle, a Doji, and then another bullish candle. So remember, if a Doji means indecision, a series of Dojis means greater indecision. Whoops, hang on for 1 second. Okay, sorry about that. Had the whole weekend and everybody wanted to show up right now. So if a Doji means indecision, a series of Dojis means greater indecision. So when you see that you're in the oversold area, you get Doji, 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 look what the reversal was. A Doji and a close above the T line started your uptrend. You consider engulfing and harami, whatever they show, or they must show after a trend. Usually, yeah, a signal is a signal when it's occurring in the right conditions of a trend. Obviously, a candlestick buy signal does not mean very much in the overbought condition. And a candlestick sell signal doesn't mean very much if it's in the oversold condition. You want to see a candlestick sell signal in the overbought area. You want to see a candlestick buy signal in the oversold area. So anytime I see this series of Dojis, especially in the oversold area, that's telling you there's a change of investor sentiment. Get ready for the change. So Dojis have strong investor sentiment expectations already built into the signal that there's a change. So these are some of the parameters that you have when you're doing scans, which is what MetaStock does. If you see stochastics in the oversold area, and then you have the Doji formula, and then very simply you scan for which stocks had the biggest percent move the next day. That's telling you had a bullish reversal. So if you've got patterns that can be enhanced by the Doji best friend signal, if we know this tells you there's an upside potential or upside probability, and we can already see that we've had a wave 1, wave 2, and now we're going into wave 3 as a J-hook pattern, this just adds as additional confirmation. Is this presentation available anywhere? Yes, this is being recorded. Did you say a Doji sandwich has to happen at, no, not necessarily at a moving average. It can happen anywhere. It just enhances your ability to see what's happening at that moving average, that if that moving average is going to act as resistance anymore or not. So as you can see, there's kind of a Morningstar Doji best friend, which means there's more upside. Now we can easily see there's a J-hook pattern in progress heading to the upside. So this is what we call 2+2 analysis. There's our little Doji gap up breaking out through this level. There's our J-hook pattern setting up. And look what happened right here at the kind of the resistance level, a Doji sandwich. What'd that tell us about our resistance level? It's not there anymore, that this wave is now going to be the same magnitude as this wave. What is a J-hook pattern? This is a J-hook pattern. A J-hook pattern is one of the 8 or 9 candlestick patterns. Wave 1, a very strong price move. Then they consolidate, but notice the consolidation. It wasn't selling. The pullback, remember what the definition of a doji is, indecision. So when it's pulling back, indecisive, 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 and then it starts back up, there's your little J hook. And what can we equate on a J hook? This wave right here is probably going to be the same magnitude as this wave right here. So even if you've missed this move, you can calculate what this next move might be based upon that J hook by knowing what that move was. Around December 10, there is a doji short. Oh, let's see. Just wondering how high is the accuracy of doji strategy. Fendi, it's not just the doji. This is just one of the 12 major signals. But the reason we're looking at them 400 years later is because they produce that strong probabilities of a reversal. That's why we're using them. Again, I used to be the worst investor in the world. I would contribute money to the markets every month, and I was even a stockbroker for 8 years. But when candlesticks came along, I started looking for the buy signals. So I was a buyer down here instead of a seller, and I was a seller up here instead of a buyer. What is the 3-8 trap? I don't know. We sometimes have the 3 exponential on here, which we call the 3T line. It just kind of helps confirm that there's been a reversal. If you see the 3T line come up through the T line. And it also works that the further away you move from the T line, the more effective the 3T line becomes. So there's our Morningstar signal. What was our alert? In the oversold area, seeing a doji in the oversold area. If it opens positive, what's our doji rule? It's going to move in the direction how they open. Yeah, these slides can be available as well as the recording. So combined confirmations. This is what we call the McMuffin. A Morningstar signal. That's your big down day, a doji, a day of indecision, the third day comes up. That's your Morningstar signal. Now you have a doji sandwich. So you've got a morning sandwich, which we call your McMuffin. Morningstar signal, doji sandwich tells us there's been a reversal. No, the names Morningstar, Evening Star, Harami, Hammer are all Japanese names. Now, obviously, the McMuffin is not a Japanese name. That was a clever title that I created for it. It also works on the overbought area, but we call that a Dagwood, which is your evening sandwich. Explain T-line 8 exponential on close. I don't know what that means, Mark.
I think he just wants to clarify that it's the 8 exponential moving average on the close.
Yes, yes. So again, here's a Morningstar signal followed by a doji sandwich. Close above the T line. What's your probabilities? Extremely strong that you're in an uptrend. Again, using the signals is kind of advances us from just being in an uptrending stock during an uptrend into strong uptrending stocks during an uptrend. So it just helps us make hay while the sun shines a little bit better. Does your T-line work well on the one? Works on all charts? Yes. All these indicators are what we call fractal, which means they work as well on the 1 minute chart as they do on the monthly chart. This is a combined confirmation of the classic. The classic is a fry pan bottom breakout. What do we expect coming out of a fry pan bottom breakout? A strong price move. What do we expect for a J-hook? A prerequisite of a strong price move. And notice how they pulled back to the T-line. Indecision, 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 bullish left-right combo. What's that tell us? They weren't going to close below the T-line. And if you took profits in here, you get ready to buy back here, because this is what we call the classic pattern. A fry pan bottom breakout followed by a J-hook pattern. That's how human nature works. Strong price move, profit taking, continue the strong price move. So basically, using candlestick analysis can dramatically control your emotions. And that was the big aspect for candlesticks for me, was I knew I was the worst investor in the world. Everything I did, I made based upon emotional decisions. To get rid of that emotions, if you just know what the signals are, know what the patterns are, know what gaps indicate, use convergence analysis, now you're not at the emotional whim of what something might be doing because you hear news on one of the financial news stations or somebody says there's a rumor out. You're making your decisions based upon what investor sentiment is actually doing. So, as you can see, this was one of our trades not too long ago. Fry pan bottom, best friend breakout, uptrend until when? Doji in the overbought condition, we started taking profits. Then we had started looking to buy it back again. If you can see there's a resistance level, essentially what everybody else might be watching. There's our best friend gap up through that resistance level. What's that tell us? That resistance level, especially bouncing off the 50, is not acting as resistance anymore. Stop loss is a completely different topic. But stop losses are just as common sense as anything else. And not as anything else. As much common sense built into candlestick analysis as common sense built into all of candlestick analysis. If this is a signal that tells me the bulls are taking control, and I bought on this day, where would I not want to see it trade? I put my stop loss at the open, because logic says if it comes back down through there, it's not doing a bullish candle, and you're back below this level. The stop loss aspects of candlesticks is very simple and very common sense. In the 40 some odd years that I've been trading, which I can't imagine because I'm only 39 years old, you've heard many times how people tell you to cut your losses short and let your profits run. I've heard that so many times, but I've never heard anybody tell you how you cut your losses short and let your profits run. With candlestick analysis, it's pure common sense. When did that signal not work? If it's not working, close it right back out. So this was the Dow this week. Look what happened right here. Look what happened right here. There's your Morningstar signal. Look what happened right here. There's your hammer dojis, gap up. This week, or I guess it was Monday, Friday, Thursday, Wednesday, Tuesday, Monday. Friday, it closed like this. Our morning comments into our chat room was get ready to start buying and closing out short positions. Because where did your short positions start? Look at the sell signals we're getting up here. There's a bearish Harami. There's your shooting star. There's your bearish left-right combo. There's your close below the T-line. Shooting star, hanging man, gap down. That was telling us there wasn't any strength we should be closing out our long positions and adding short positions. And then look at the obvious. Where did they take this to? Right smack dab to the 200. Everybody always says, well, where do you grab for the fallen knife? Candlestick analysis makes that very simple. You start buying when you start seeing reversal signals. So there's our long-legged Doji, open positive the next day. We're covering short positions and starting to add to long positions. What are the settings on the stochastics? They're 1233 slow stochastics. So we started buying not only stocks, but we also have an option trading room. Started buying calls. You can see what the magnitude of those returns were this week. NVIDIA, if you're trading this, look at your Doji Harami in the oversold area. It opens positive. You can start going long. Or with it closing above the T-line, you definitely open long or start buying on positive trading. Is that a sandwich on this one, or was that, I don't know, was that on the previous one? No, this is not a Doji sandwich. So again, I tell people, no matter whose trading techniques you're using, use candlestick charts to enhance it or confirm. VIPs, we started buying a few weeks ago. Look at all the Dojis down here. And then out of the oversold area, we had a close above the T line. Then they gapped it up. How long do you stay long on this one? We're still long on this one because we haven't had that basic rule. We haven't seen a sell signal and a close below the T line. Which one is the best? That's always a question that people ask. Which is your best signal or pattern? The answer is they're all good. Because this month you might see a lot of fry pan bottom breakouts. Next month it might be J-hook patterns. This month you might be seeing a lot of best friend signals. Next month it might be a lot of bullish engulfing signals. So it's not a factor of which one is the best. You want to know all of them, or at least be familiar with all of them, and know what's happening at any given time in market conditions. Now, there's about 18 signals and patterns that I think we have on MetaStock that they're identified, and I'll let I better jump off here pretty quick and let Jeff describe it. But they not only illustrate the signal, but they describe the signal for you. So the underlying factor to candlestick analysis is not only is it putting us in probabilities of being in the right place at the right time, but it's putting us in situations where the probabilities are not only in the right place at the right time, but very strong price moves. Yes, we have a website. It's candlestickforum.com. We've got 2 chat rooms, one for trading stock and another one for trading options. And I put out 2 or 3 stock picks every day, and I tell people I don't put the stock picks out so people have stock picks. I put them out in a video format so you're still in the learning process of why they're being recommended. And I always tell people, if you just tell people what to do and they don't learn why they're doing it, it doesn't do them any good. And I describe that as being the cop standing on the street corner and he sees this drunk weaving down the street with his car. He blows his whistle, pulls the guy over, and he walks up and he sees there's a penguin sitting in the back seat. And the cop says, "Why the heck do you got a penguin in the back seat?" And the drunk said, "Oh, I found him out on the street and I don't know what to do with him." And the cop said, "Well, take him to the zoo." And the drunk said, "Oh, I didn't think of that." Next day, the cop's standing on the street corner. Here comes this drunk weaving down the street again. Blows his whistle, pulls the guy over. looks in the back seat and the penguin's sitting there. And he goes, what the heck? I thought I told you to take the penguin to the zoo. And the drunk said, I did. He liked it so much. Today we're going to a baseball game. So if you don't know why you're doing something, it doesn't do anything. The Candlestick Forum teaches every single day. I come into the chat room for an hour or two every day to go through all the charts. We've got plenty of people in there that are good candlestick traders. So not only are you learning how to use candlestick signals, but you're also being given a supply of what would be a good trades. Okay, thank you, Richie. All right, let's see. So we're in a lot of these strong trades. Obviously, knowing when to start buying, which was if we saw a Doji gap up, we wanted to be buying, puts us in positions where we have a lot more confidence to be buying at the appropriate time down here where I used to be buying up here. And what's happening up here? We're starting to run out of steam. It used to be when I was a stockbroker, I always ask the rhetorical question, how come every time I buy a stock, it immediately goes down? Or every time I sell out a stock because it's so terrible, it immediately goes up. And that's because that's the typical human nature. That's why candlesticks are so effective. Are all your moving averages? No, the 50 and the 200 are simple moving averages. The T line and the 3T line are exponential. What is your name? My name is Steve Bigalow, Bigalow. Dow Doji Friday. Yes, so that Friday, do I have that on here? Kind of a Doji hanging man. We're not quite in the overbought area, but look what everybody's probably watching. There's a resistance level right here. Wait to see if they open this positive and go up to that level. Then you go to your 10-minute chart and see if it's time to start taking profits. Let's see. Oh, I think it's $97 a month, but then it's discounted if you buy the annual fee or semi-annual fee. Is only T line dependable? Is only if I took everything off this chart and just had the T line and the stochastics and the candlestick signals. Remember, the most relevant indication on this chart is the signal itself. Anything else added is just confirmation. Whoops. So anyways, this allows you to be in the right place at the right time. So with, oh no, I didn't mean to do that. All right. All right. Jeff, do you need time to describe the service, or is that?
I do, and I think I'll probably, just because of the, I probably end up showing a little bit of it later today as well. But yeah, I do want to show the Candlestick Forum. There are a few things in here that, for those of you asking questions, thank you. I'm trying to keep up with all of them, by the way. But I did want to read this out to you, Steve. This is coming from Richie. Steve, I have to personally thank you not only today, but for all your previous tuition videos. You have been a godsend to my personal trading and my understanding of candlesticks, and along with Oscar as well. I've learned so much from the pair of you. Thanks.
All right. Thank you, Richie.
I agree. I think I appreciate the impact you've had on my trading as well. And then there's like tons of people saying how good of a presentation you gave today. So good job. Good job, Steve.
Right, well, the bottom line to all this is there is nothing you have to learn. You don't have to learn formulas. All you have to do is recognize what happens in human nature. It's all common sense. Oh, and I was saying, out of the 18 different strong reversal signals, I tell people, if it's too much to handle at one time, learn 3 or 4 of them and become an expert at those. And you'll always have more trades than you'll ever be able to handle. But that puts you in a position where once you see the good trades, now you're just not doing a good trade. You're cultivating out of those good trades which ones are the best ones.
Okay. Thank you, Steve.
Steve Nissan.
I'm going to show you.
Yeah, I was okay. Go ahead.
Oh, go ahead. I'm sorry. Did you want to say something real quick?
Well, somebody was asking Steve Nissan or Bo Kowski.
Are you going to tell us the joke about the shoes?
Okay. I tell people Steve Nissan brought candlesticks years ago from Japan, but I don't think he actually trades. But I always tell people I don't make a judgment on somebody else's information until I've walked a mile in their shoes for 2 reasons. 1, if I say something that pisses them off, I've got a mile head start. And 2, I've still got their shoes. So.
All right. Let me show. Thank you very much, Steve. We'll see you again tomorrow for the premium sessions. And I'm going to talk a little bit about those as well. Great job, as always.
Okay. Thank you. Thank you, everybody.
All right, let me go ahead. I do want to show this on a chart. I know we are kind of running a little bit, but we can let Hima run a little bit long as well. Let me go ahead and kind of just start to show my screen here. And I want to show you exactly what this add-on looks like on an actual chart. So you should be able to see my screen. Greg, if you see any issues with the video not coming through or the screen not coming through, let me know. But this is just basically a default setting of kind of the way a chart would look like if you pull it from MetaStock. And what you're going to see is it has the 3 exponential, the 8 exponential, which is what Steve calls the T-line, has the other moving averages that he uses on the chart as well as the stochastics 12, 3, 3. A lot of questions about the indicators that he uses. So I'm going to go through them again real quick. He's got the 12, 3. 3. He's got the 3 and the 8 exponential moving average here. And in addition to those, he's going to use the rest of the moving averages are simple. So 50, 20, and I believe this is the 200. And he uses those more to identify the support and resistance areas. He likes to look at them. He says he likes to look at them because everybody else is looking at them. You'll notice that we have like this Doji that's identified on the chart. We've got the Doji best friend, the Doji best friend, the scoop. You've got a hanging man. You've got a bullish engulfing. And somebody was asking, did these work recently? And I was saying, well, my favorite pattern is the Doji best friend. It would have fired here on the 2nd, would have fired on election day, 11-3, and you would have gotten a scoop on election day part 2, 11-4, and all kind of ended this really good movement. So in addition to that, it is fully integrated into MetaStock. I'm very proud of this add-on. If I come into the expert commentary and I just move this little triangle back to this Doji best friend, it's going to identify what this is. You'll see it's a Doji followed by a gap up. It's going to tell me that this is a bullish position. It's going to explain it to me, and it's going to tell me other things to look at. That happened again. Was that the 2nd? That was Monday. So that happened on Monday. On Tuesday, we had the same exact pattern, another Doji best friend, right into this move up. Right before the move down, though, you'll see that we had a dumpling top. I could highlight that, and it would show you an explanation and all that kind of stuff. It's an awesome little add-on. I use it all the time. I think I even mentioned it yesterday. When I run for scans, this Doji best friend is actually the pattern that I look for. And you can do scanning. I'm going to start a scan here, and I might come back to this depending on kind of, because we are, I do need to kind of wrap this a little bit so we can get over to Hima. But I may come back to this during my hour and just talk a little bit more about it and answer some questions. But if I wanted to scan for any of Steve's patterns, what I can do is I can go in, and there's about 5 or 6 different scans that I can look for. If I'm looking for that Doji best friend pattern, it's part of this CPS Doji Dynamite. You'll see right here on the screen. I'm going to it says it's going to look for Doji at the top, Doji best friend, left right bullish, left right bearish. So I can literally just go ahead and click right here, I can go ahead and say, okay, we'll scan that against the, let's just do the S&P 500. And like I said, I'm not going to let this run. We'll go ahead and start it. Maybe I'll show it to you a little bit later, but it's going to run the top dog rubber band trade first and then go to Doji Diamond. You notice it's going actually pretty quickly to go through those stocks though. So that's how the scanning would work. It would just bring back a grid of stuff that had a pattern. Works very, very well. And that's one of the things I like about the add-on. So to talk, and MetaStock as well, to be really, really specific, the ability for me to go through 4,300 optionable stocks and identify just those ones that have a pattern. Oh, that's awesome. You know, allow me to ignore what I don't want to look at and just focus on, you know, maybe the 6 or 7 that have a pattern. It's absolutely phenomenal technology. So here's the patterns that we identify either through scanning or with that expert advisor. These will automatically all show up on the chart. There's another part of the patterns. So all in all, I think there's about, I counted them once, I guess it's about 25, 26 patterns. I don't remember the exact number, but it's been a very, very successful product. I've talked to a lot of people, both in person. In fact, we've done 2 different versions of it now, but I've talked to a lot of people that use it. I was talking to a guy up in Canada back in the before times when we could travel for work, and they were talking about how much they use it. And also the things that we have today, like from the people that were here, Steve does such a great job. And I feel that I've been lucky to be able to travel and learn and kind of do stuff with Steve. So that's how the add-on looks. You can get that. It's normally $4.99. Here at the conference, it's going to be $3.99. If you want to get that, you can go to metastock.com/conf-promo. That'll get you to the link there. You can give us a call at 800-882-3040 or visit us online at metastock.com/saleschat. And we can answer any questions you've got. We can help you get set up. The product for the Steve Bigalow product is only $399. In addition to that, we offer it with a 30-day money-back guarantee. So you make a couple good trades on it, you own it, it pays for itself. If you don't like it, your risk is very low. We'll talk a lot more about MetaStock as we go today, but there's a reason it's been rated for #1 for more than 25 years in a row. So give us a call. We can help you get set up, 800-882-3040. I think it's also a good time to talk about how our traders conference next week, or tomorrow next week, which is also next week. Tomorrow, Steve's gonna come in. He's gonna talk about our top ranked candlestick signals and his strategies. So if you liked what he had to say today, there's a reason I picked him as a guest. He does a great job. He's done a lot of premium classes with us before. And so tomorrow we're gonna have him, Dr. Alexander Elder, Oscar Carboni. They're all going to come in, give us some classes. That class is $450 as a MetaStock conference promo. So get in touch with us. We can help you get set up for that. 800-882-3040. You can chat with our sales guys at metastock.com/saleschat. Dave and Robert are working today. They came in on Saturday. They wanted to be able to help you. And let them know what questions you have. They do a good job. Let's see. There are a bunch of questions. I am going to answer these by chat. I just don't think we have enough of a time. Greg, can you kind of come on the microphone? All right. I would want you to pick a number between 1 and 12,542.
826.
826. Okay, so I'm going that. Thank you for the help. We're going to find out who number 826 is. The prize that we're giving away right now is the John Bollinger DVD. It was filmed in California. I'm remembering these details as I try and find 826. But it's filmed in California. And it's normally a retail value of $140, I think, if I remember right. In it, John, it is on DVD. And in it, John is going to actually show you about how Bollinger Bands are actually constructed and use some practical applications. And so If I could just get to 800, we will tell you who the winner is. I'll, of course, get in touch with you and kind of help you get that prize. And you can tell we've got a lot of registrations because this has taken a minute. The winner is, though, it is Rick and Rizzo E. Okay, Rizzo E. Greg is going to be very, very proud of me because I didn't say the last name. Rizzo E in, let's see if I have a state for him. Sometimes we just have a country. I don't have a state, just a country. He's in the US though. So Rizzo, I'm going to give you get in touch with you as the dust settles. It'll probably be early next week. We'll get some information for you and get that DVD over to you. So congratulations on winning that. Let's get over to Hima Reddy, our next presenter. And because I know you're asking about it, if you're watching us on YouTube, thanks for coming. If you just go to metastock.com/conference and then click on the registration link, you can register and you'll be eligible to win the prize after Hima. So there you go. Hopefully we are running just a second or two late. Hima, how are you doing today?
I'm doing well, Jeff. Can you hear me?
I can hear you. You always sound so upbeat and happy to me.
Well, I'm always happy to be teaching traders, and especially it's like 70-something degrees in Milwaukee today. I'm not complaining in November. So
I know.
Pretty good way to start the weekend.
Like it's been crazy warm around the country.
Yeah.
Hima, let me see if I can introduce you in a really good way. Hima likes to come in. She does a really good presentation. She usually talks a lot about the RSI. I really like listening to you, Hima. You do a good job. And that's my introduction. Did I miss anything important?
Oh, no, I think you got it. And thank you. And I appreciate that. So I'll go ahead and share the screen when I get the little permissions here. Okay, perfect. And I want to make sure I show this. Okay. So can you see my title slide here?
I don't see it coming through yet.
Okay. Let me try one more time. Okay, I just tried again.
Hey, Greg, can you see it? My view doesn't seem to be showing up.
No, I don't see her yet.
Okay, I'll try one more time. I'll just try without the clean. How about this?
Still no.
I'm going to take it out here. I know how to fix this. Give me a second. Okay. Okay. Yes. All right, now try it.
Okay, I just hit the stop button. I always say what I'm doing when it comes to text, so I literally walk through every move. Okay, so I hit the stop button. Now I'm going to share screen one.
Perfect.
Yes, all right, awesome. Okay, and
you want to know what I did differently? Absolutely nothing. You want to know what I did differently? I didn't do anything.
Just turn it off and turn it back on, basically, right?
Right, exactly. All right,
okay, awesome.
I'll get out of your way. Thanks, Hima.
Oh, thanks. And before we go, Jeff, if I've got questions coming through that I want to be able to reference at the end, are those in the Q&A box or the chat box?
The questions box is where you'll see them. Yeah.
Okay. Awesome. All right. Well, good morning, good afternoon to wherever all of you might be. My name is Hima, and I'm here for Not Your Mama's Momentum, how to profit in any market on any time frame. So first, I got to know where you're all dialing in from. It's a Saturday morning. You're here in your, third day of learning. Hopefully you've been getting a lot of good information. So type for me in the chat first that you can hear me with the yes and see my screen. And, of course, where you're dialing in from, because I always love to know where we can trade, right? Around the country, around the world. It's awesome. All right. I just want to also make sure the chat's working by having you guys communicate with me here. Okay, I think I have to scroll down. Okay, awesome. Yes, thank you, Amal, Amanda.
Jeff, your camera's still on.
What?
We're here, Hima, but we see you, which is
and I won't have my own camera on, but
no, but Jeff needs to turn his. There we go.
There we go. Okay. Thank you. Okay, great. I see all your answers coming in. Oh, they're going so fast. Okay, we've got Chapin from Bangalore, Lowell from Arizona, Raj from New Jersey, East Coast represent. I grew up in New York. Darren from Dallas, Christian from Boston, Paul from Ottawa, William from Long Neck, Delaware. I don't think I've ever heard of that place in Delaware. That's different. And we got Sarah from the UK. We've got John from Texas, Jason from London, Truly around the world. Ooh, Ali from Scotland. This may be my first Scotland guest. Welcome. Awesome. Well, now that I know all the tech's working, let's get to the learning. And yes, I will be taking your questions about my approach and about the markets towards the end. We've got plenty of time for me to do that and still be ready for your next presenter. So hold your questions as I present here, and I'll let you know when it's time for Q&A. Okay? Awesome. So you're here for how to trade momentum. You're going to get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? Now, how many of you want to get as much as possible out of our time together? Okay, I want that for you. For most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. In a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, awesome. I promise that by the end of our time today, you'll know everything you need to know to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. As you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you well know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you. I don't know your trading plan, your account size, or your markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? If you haven't been following me for a while, here's a mercifully short introduction. I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. And I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stock right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray before going it on my own to help traders directly. Over the past 21 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders, and I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of the trading methodologies of W.D. Gann. So how did I get here? Oh, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go about like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great, right? I was in the center of the action as an analyst with Piper Jaffray and making them a ton of money, starting work at 5 a.m., working late, and burning out quickly. Is anyone else here a corporate cog making someone else rich? I know, right? I thought there must be more to life. You know, the money was good, but I never got to see my family. You know what I mean, right? I mean, I started becoming a ghost in my own life. I'll never forget the moment the bottom dropped out of my world, when my beloved dad and mentor died suddenly. And at first, it felt like my whole world was crashing in. I had to leave my job and tend to financial and legal family matters. Then I realized that this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets when I was a teenager, I had started a futures report that I called my Skinny on the Mini. It started out as just another exercise, but soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But that all stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years that I was on Wall Street, those traders were hounding me to get the report back. So when I left my job and took over my dad's accounts to trade for my mom's future, I realized it was time to bring back the Skinny on the Mini and reclaim my life. I sent out the call to my former subscribers, and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of WT-GAN and became the leading expert on GAN. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I discovered is that trading equals freedom. Trading equals what? Right, freedom. I mean, there's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Freedom. Wouldn't that be awesome? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? They made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading future stocks and options. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive in. Trading momentum can be easy, but first you need to understand how it works. And a Formula One car racing track will have you understanding momentum in no time. All right, guys, let's put ourselves in the driver's seat. Okay, you're at the starting line of the track in that awesome little red car. You rev up your engine and you go. You pick up speed really quickly or accelerate on the straight runs. You see a turn coming up and you prepare accordingly. You ease off the gas to slow down or decelerate, even if it's just a little bit, so you can have more control as the car whips to the other side of the turn. Then, after you make the turn and the road straightens out again, you hit the accelerator once more. Are you getting the idea of how you'd accelerate and decelerate on this track? Type a Y for me in the chat if you see that. Okay, then awesome, because now you know exactly how price momentum works. And I'll show you here in a moment. See that helicopter looking down on the track?
Hey, Hima?
Yes.
I'm not getting any updates on your screen. So, there we go. Now we're seeing what's different about the 4 zones of RSI coverage system.
Oh, well, then there must be some sort of lag. So I'm not sure what is going on tech-wise, but I'm on a beautiful car racing scene now.
All right, let me do this again. All right, we'll go back to here. I'm going to go back to you. And this should usually push it through. Maybe there's a little bit of a latency delay or something.
Okay, let's give that a whirl. Oops. Okay, so sharing panel. Show my screen. All right. Do you see it now?
Not yet. Not yet.
So in the chat, those of you in the question box here, can you just type a Y if you have been seeing things on time? Because I'm seeing some mixed feedback here. So I don't know if particular areas are getting a lag and others aren't.
Hima, this is Greg in the control room. It was going fine until the image of you holding the book. And that just stopped after that.
Yeah, that's where we exactly lost, yeah.
Oh, that's where you're talking last? Okay. Well, you know what? That's the beauty of me being here, an actual person. I'll just rewind us. So I'm going to go back and teach from where I was with my book. No problem, because this is a really important concept. I want to make sure you guys get it.
Okay. And you should have a little bit of a note to share your screen again, because I'm just not getting it back.
Okay. So now I've shared it again. So I think the issue might be in the GoToWebinar. Have you had this happen with any other presenters? Because I just want to know if it's something to check in my system.
No, not so far. So, but we haven't had any technical issues, so we are a little bit overdue for one.
Well, lucky me.
Yeah. Sometime maybe you could click on the little.
I'm gonna stop sharing again, and then I'm gonna just redo it.
Yep. If all else fails, try it again.
Okay, here it is, guys. Do you see a pathway of gentlemen standing there, and it says, "What's different about Power Zones RSI coverage system?"
I don't see any of that yet.
And it was working so well before.
I do see that Hima is the presenter, but I'm not. I'm just seeing a blank entry screen.
Okay.
Jeff, are you?
Let me do this real quick. I'm gonna. Here we go. Greg, let me know when you can see the handsome gentleman with the glasses on.
I will.
I see it.
I can see I can see the handsome gentleman with the glasses. Yes. And I see Rob
there's another
Hoffman.
handsome gentleman. Let's go ahead and try this again. I'm sorry, Hima. Yeah, we haven't really had any technical issues so far.
Okay, so let me try.
When they do. Yep.
Okay, so now I'm on a screen with a bunch of arrows and.
I see what's different about the 4 zones RSI coverage system slide. Hima, I see now the 4 zones RSI coverage system slide. And today's topics now. Okay.
Sorry, Hima. We were talking in the control room. We see 3/4 of your picture.
Good. That's what you're supposed to see. Okay.
Oh, okay, good. I'm like downloading half of this PowerPoint for us. Yeah, we see up in the bottom corner.
Unmuted.
You should see the full picture coming up, because after you make the turn, the road straightens out again and you hit the accelerator once more. So with that visual and my now twice audio description, are you guys here in the room getting the idea of how you accelerate and decelerate on the track? Because that's the key here. If you can understand that, visualizing it, or better yet, seeing it on my slide, then you know how price momentum works. Awesome. So now I'm going to take you should see a gray race car track from a bird's eye view, from the helicopter view. All right, and now you're looking down on the racetrack. So the first thing to know is that price becomes or racetrack becomes priced as you see it on your charts, and momentum, whatever indicator it is generally plotted on the bottom as a subchart. Okay, great. Now, look at the first part of the racetrack, which is price and momentum. When price is trending higher, so higher highs and higher lows, you've generally got upward momentum that's improving, okay? That upward momentum, it usually begins to slow down and peak before price does. That big red vertical line. What this does is make momentum a leading indicator, which is hugely valuable, guys. It's actually telling you what price is likely to do before it even happens. Okay. Now, during falling prices, okay, downtrend in price, lower highs, lower lows, there's usually falling momentum, and it becomes a more powerful force as the downtrend persists. But when a price bottom is approaching, that green vertical line, you usually see momentum bottom first. So again, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Okay, are you guys with me? Did you see the walkthrough on the price racetrack? So now we're going to pick up pace because I'm going to show you my Jedi indicator twist. It's going to be awesome. So type a Y if you followed me with the visuals on the racetrack, please. Okay. Okay. So now we're going to dive into the indicator, but first let me share results with you from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading. It's the gym. Okay, so now we've made momentum easy, and now we're on to our second topic. And here's where I'm going to show you this Jedi indicator that I use, and it's called RSI Power Zones. Now, this can be used on any active market in any time frame. And I'm going to show you some examples of markets right here. So now you should see coming to your screen a list of markets on the left and time frames on the right. Now take a look. Do you see any types of markets you trade? They're listed as indices. So that's your S&P, your Dow, your NASDAQ, stocks, ETFs, bonds, currencies, commodities. And on the right, you have time frames. Monthly, weekly, daily, 60-minute, 15-minute, 5-minute. Okay, any combination of an active market that has enough participation that you can get into and out of an order quickly, and any time frame, as long as you're measuring by prices, that can be applied to RSI Power Zones. So type what market and time frame you use for me, and now I'm going to show you some examples of RSI Power Zones at work. Okay. All right. So we got options. We got E-mini. Okay, we have Lin trading, indices, Forex, stocks, excellent. Now, I am a futures gal. Okay, that's where my learning started. I do teach you how to apply these methods to stocks, options, Forex, and everything else. But my examples for you here today are based on recent reports I did with my skinny and the mini on futures markets. First, I'm going to do a quick walkthrough of the RSI Power Zones on a market we all know, whether we trade it or we just know it at the gas pump, and that's oil. So maybe we have some oil futures traders here. Let's see. So here we've got a monthly chart of oil, and I want to show you that this type of momentum analysis can work, give you the big picture, and we're going to look at intraday charts as well. So take a look at this long-term chart of oil and look at the indicator at the bottom. Here we have the RSI Power Zones, and looking at all of these zones, okay, we're going to look at the history of price action versus what happened in the power zones. So the first set of zones is the two lower red lines, and that creates the bear support power zone. That's the space between the two lower red lines. The two lower green lines is the bull support power zone. The two upper red lines is the bear resistance power zone. And the two upper green lines is the bull resistance power zone. All right, so we've got these four zones. Let's look at what has happened in oil over months and years looking at the power zones. You wouldn't have caught this with traditional RSI. So back like 20 years ago here, or 10 years ago, there was this run up in price that took us to these crazy new highs above $200 a barrel. You may remember that if you were trading. I was on Wall Street, okay? And when this strong advance happened, my RSI Power Zones helped me keep my clients long in their trades because look at how it came up to the bull resistance power zone, Okay, it went well beyond the traditional overbought areas. Then from there was a very sharp fall in price. And when that sharp fall came in, that lower low in price coincided with the RSI coming into the bear support power zone. And this is when I told folks, I don't think this is a one and done fall here. I think oil is going to be in trouble for some time. And a lot of them didn't believe me, but it did end up that way. Where instead of climbing back to $180 or $200 a barrel, we got stuck in this range under $150 a barrel for years and years and years. But every time I studied this range, I looked at the RSI power zones and I saw that the bear resistance power zone, those two upper red lines, it kept coinciding with highs in price. So my analysis pointed to another leg lower in oil. Again, very hard for folks to believe. But that's exactly what went down. There were lower lows in price, taking us down to under $60 a barrel, and the RSI power zones kept pushing lower into the bear support power zone. This made it easy to maintain a selling mentality instead of getting excited like every time some random level called oversold was reached. Right? So from there, was there a recovery? Absolutely. But even that recovery on its first attempt higher, it capped at the bear resistance power zone. So this is the RSI power zones as applied to a commodity that, again, we all watch because we're all in a world where oil matters. And this is on a monthly time frame because of the importance of its history. So can you see how looking at RSI power zones in oil might have helped you better navigate trades in oil during this period of time, 13 years, or markets related to it? Awesome. Now, let's look at another market that I know everyone pays attention to, where we can look at on a weekly chart. So here we're going to look at this in an APF form on a weekly time frame. And that's the SPY. Do we have any SPY traders in here? All right, so we've got the 4 zones again, and I've laid out the names again to remind you. Now, here we have every candlestick representing 1 week of price action, right? Not 1 month. So first notice that there was this sideways action on the SPY for about 2 years that then broke out above the dashed horizontal line. After it broke higher, it pulled back to where you see the yellow vertical line. And that pullback provided an opportunity to be ready for long if you were using RSI power zones, but not if you were just looking at the traditional approach. Okay, you would have completely missed this. Do you guys see the value in that? That looking at the whole RSI field from 0 to 100 instead of just one random boundary here and there can open up opportunities for you? All right, from there, we had a huge whole advance. It saw the RSI continue to improve, ultimately reaching and extending beyond the bull resistance power zone. So the movement from one green zone to the other helped you stay in that uptrend. All right. Now, there was some sideways action that happened really fast, a very sharp fall over a couple of weeks. But all the RSI power zones did was come back to the bull support power zone in that sharp correction lower. It was just overbought conditions unwinding themselves and creating a pause in the race higher. So when I was writing the Skinny and the Mini at this time, which focuses on the E-mini S&P 500 futures, which is very closely tied to SPY, everyone was kind of freaked out by this price decline. But I said, hey guys, I think this is just a sign we're going to go sideways for a few months before the uptrend resumes. And that's exactly what happened. Okay, so let me pause here because it looks like we might be having some slide issues again for many traders here. So Jeff, do you mind just taking a look and confirming for me if you see?
So what we're seeing right now is the RSI power zones can be used for analysis on commodities, that screen.
All right, we definitely have an issue here then. So I'm way past that. I'm going to stop and restart sharing. I'm just going to move along and hope that my soothing voice that you're all listening to is educating you as well. And we're going to get to some real examples. So
I'm sorry. I think the internet must not like us right now.
All right. So let me stop sharing. I'm stopping sharing. And now I'm looking at where do I share again. Okay. All right. So I shared again. Has it?
And now we can see the S&P 500 chart. So yeah,
Okay.
we can see the SPY chart now. Sorry about that. I'm trying to kind of pay attention to whether or not, because usually it does come in. It just is taking a little bit longer than usual, and I just think there's kind of like a bandwidth block between us. So I'm sorry. We'll do our best to kind of make sure you stay on.
We're gonna work around it. So, all right, guys, here we are. And before I show you the trade setups process with RSI Power Zones, again, let me share results from our trading tribe. So Susie said, my first month using RSI Power Zones was also my best trading month so far. And I had the pleasure of meeting Susie in person when we could all meet in person at one of these trading conferences. And it really was something that helped her trade a variety of markets and timeframes and help her make the most of momentum. So let's come back to today's topics and now look at identified trade setups, okay? I want you to know the exact 3 proprietary steps that I use to identify great setups in the RSI Power Zones. And I'm going to show you actual setups that I use and share with my trading family. So do you guys see here using RSI Power Zones to identify trade setups? All right. All right, I'm going to try something so that even though with this lag, we wouldn't want to be kind of giving it much attention, I'm going to see if I can teach you and see the lag at the same time so that I can try to speak according to it. I don't know if that's really going to work, but we're going to give it a shot. Okay. Okay, so now let me try sharing one more time. And as presenter, I don't think I have the ability to see what you guys are seeing. So
you do.
If
you click on the, if you go to the sharing panel and click on the down arrow on sharing, it'll give you a tiny little preview of what we can see. Or maybe, let's see, is it under? There's actually, when you're presenter, there's a preview window that you can look at. But I can tell you where we can see you using RSI Power Zones right now. And for everybody here, I'm sorry that we're having some issues. I think it's just mostly bandwidth related. So we're doing our best to work through them.
Okay. So I'm just going to populate the whole slide and then talk through it. That might help us with the lag. So that's what I just did, guys. Okay, normally I'd reveal these step by step. But here we are. Yeah. Step 1, review the chart and assess the price trend. Now, this whole time I've been talking about RSI Power Zones and focusing on momentum, saying very little about price. Price is the key. Price is the data from which momentum is derived. So you can see there's a bullet there that says uptrend, downtrend, and sideways. Those are your 3 choices for a trend. And when you identify a sideways trend, guys, don't ignore that market. You can keep an eye on the momentum action and be ready for the next explosive move. Now, step 2 is to evaluate the RSI Power Zones reading. And this is where you look at the RSI Power Zones, okay, relative to the 4 power zones. Okay. And then step 3 is to determine the presence of entry signal between price and momentum. So this is where you look at the relationship between the 2 and allow that to show you if there's an opportunity where price and momentum aren't really talking to each other properly, and you can take advantage of that disconnect, right? So now we're going to look at, I'm just going to skip ahead to the chart here. We're going to look at a recent Skin in the Mini I wrote where I talked about futures likely trading lower down to a particular level because of a particular momentum setup. And I'm going to get ahead to the chart here, or do my best with our situation to make sure you guys can see the example that I did put in front of traders that shows you exactly how this works. Okay. So step 1 here is to review the chart and assess the price trend. So you want to look at the highs and lows coming into the pre-market hour. So you're going to see these pink circles populate on the screen. And those are defining lower highs or higher lows and showing the relationship between the different areas of price to determine the trend. So this is a downtrend. Do you guys see that? I have another idea of how I can work around this tech, but let me look at this for 1 second. Yeah, no, that's not going to work. Okay. All right, guys, I'm doing my best here, but it's a little challenging when I have no idea what you're seeing and I'm just talking through. So in the chat, or Jeff, can you let me know if you see the chart with the...
We can see it.
Oh, I appreciate that. But it seems like we're at a point where you might even see something different because I'm seeing mixed. Okay, but I'm wondering if it's my PowerPoint that might be the issue because it slides. But if I go to live charts, and just kind of do something a little different than I planned, but still give folks the opportunity to learn from me at the end, maybe that would be a better option. I'm not sure, honestly. I am on a hard Ethernet line of 1 gig, so I highly doubt that's the issue, but let's see. Yep. Yeah, I'm not, but that's fine. I'm going to stop sharing the screen for a second because I think that charts might work better. Maybe the universe is telling me, Hima, just show the people the charts. Okay. I am on the hard line connected. So we're going to try something else here. It's fine. We're still going to teach. We're all going to learn. It's going to be awesome. But I'm going to just try it a different way. Okay. And I'm going to have my chart up here. Okay. So I just want to see if this might work better because maybe the issue is also just PowerPoint. Okay. So we're going to try again, guys. Okay. Do you see my charts? These are live charts. Do you see them with a couple moving averages and the RSI Power Zones on the bottom? Yes. Okay, so do you guys see the E-mini contract? Okay, so I'm going to do something here, and I'm just going to give you guys some market signals that I see here because that's the best I could probably do with another 17 minutes, but I still want you to learn, and I'm still going to give you an opportunity to learn more for yourself, okay? So just give me 1 moment here while I stop the screen and get this ready on my side because that's the beauty of my awesome team. We always have a backup plan. So I'm going to grab this here, and I want you guys in the meantime to type in tickers you want to see. This is your turn. I don't ever do this except with my members. So type in the chat question box a market you want to look at. Maybe a future, maybe a stock, and I will literally do a session that's a taste of my monthly group coaching live for you right now. Because I think the TradeStation chart that I happen to have up will move and show faster than the PowerPoint. So let's just go there. Okay. So don't just type the name or the word stock. Give me the ticker. Get specific. This is a gift, guys. This is the tech god saying, Hima, that people want you to show them the markets in this crazy week we have. So while you do that, I'm going to grab the other information I need from my team here, and we're going to be rocking. Okay. All right, let me do this. Okay, I see your questions coming in. Anybody else have a request here? I see stop. Okay, great. Awesome. Gotham wants to see how. We got Tesla. Yes, okay, that I can do. So let me just let my team member Anna know what I need her to update, and then we're gonna have an awesome 15 minutes.
Are you still in GoToWebinar?
No, I can go to webinar, but I'm about to show you my trade station charts. That's just what I happen to use. Jeff and I have been talking about all the awesome things MetaStock does, so I'm excited to give it a whirl into the new year here. But you know, all this crazy COVID stuff kind of derailed my learning new software plans, but I will bring them back. Okay, so now you see my trade station. Okay, so I'm taking live requests starting with HAL for our friend Gotham. Okay, so everybody here in a moment at least should see a daily chart of Halliburton.
That is what
and it's got, perfect, excellent. So it's got 3 moving averages on it, and these are a moving average filter that I use with the RSI Power Zones. So that's in my full 4 zones RSI coverage system, as I mentioned. But you know what? You guys need a little bit more help besides that to kind of solidify your foundation, because I wasn't able to teach you the way I wanted to with tech. So what we're going to do is I'm going to give you a chance to get a free ebook that completely details the RSI Power Zones, gives you the settings and everything. And then from there, you have an opportunity to dive in deeper with your study. So that's my gift to you guys, since, hey, tech happens and we're going to work around it. So in order for you to get that, I'm going to have the link up for you here in a second. But let's start with some market review and we'll continue on. So what I'm seeing right now with Halliburton is that we've got the RSI Power Zones backing away from the bear resistance power zone and beneath the 2 lower moving averages. So this is a sign to me that this is all consolidation and this stock is likely to break lower. Now, Halliburton being in large part a defense stock and things like that, may be very much waiting on official election results, whatever that's going to be, because the fact of one person being president versus another may affect their view of defense spending, for example. So that's where you can blend the fundamental and the technical. So all that Wall Street history I have isn't for nothing, right? It can help me better understand, because I was trained as a generalist there. I had to cover all kinds of stocks for all kinds of people. Did you guys see how my call is for Halliburton to continue to consolidate, but if we break below, if we get a daily closing break below the October 2nd low at 1060, watch out below, and the next downside target is about $8. And where I'm getting that from, that type of analysis and that discovery, support, and resistance, I teach in my full course for 4 zones, my full 4 zones course. Okay, so that was how, Gotham, did I help you out? Give you some guidance on what to look for with HAL. Again, this is a taste of what I do in my monthly group coaching live. And I do even more specifically when I'm working with individual coaching students. Okay, so where'd the list go? Okay, so now let me come back to some of the tickers that came up before it. And I'm going to go a little faster so we can get to more of your answers. And in a moment here, like I said, I will give you the link where you can get that free ebook and continue your education. Okay, CGC, Canopy Growth. By the name, I'm assuming this is a cannabis stock. Now, I use a multi-time frame approach. And so every time I look at markets, I look at least 3 time frames. So since I'm not too familiar with this market, I'm going to look at the weekly. So hopefully you guys see me flash over the weekly chart of CGC here in a second. You guys see that? Okay, so it has been building up. Accumulation of shares has been occurring for several months, most of this year actually, and it just started breaking higher. And I want you guys to see something. This is beautiful. Look at these September 25th and October 2nd weekly lows. Check it out. Where did the RSI hold? It held in the bull support power zone. It didn't go down to traditional oversold territory and tear up. Only using the power zones would have helped you see that. Okay, so Gerald, for your CGC, looking like we have the next upside target at $25.97. Is getting close. But if we break above that, then I think you're on a pretty good path to, over months, head up to $39.66, the old lows from last spring. Okay, there's my update for you. Okay, now my team member Anna has showed me that she's got the sign up page ready for you guys. So let me get that for you. And we're going to continue on my trade station here for a few minutes. This is pretty awesome. Thank you, Anna. Okay. So for that, I'm going to stop. I'm just pause my screen for a moment. I don't think that will break anything. I've been doing it constantly. Okay, there we go. Get this a little smaller. Get this going here. Okay, and in a moment, you guys are going to see all the awesomeness. Okay, do you see it, guys? himareddy.com/RSI. It's all set up for you, okay, for you to continue your education. And that page, yeah, absolutely. himareddy.com/RSI. You should see it now in the background of my trade station charts. But I think I'm just going to stop and restart my sharing again. I'm going to start again. I'm going to reshare again just to make sure. Okay, here we are. So you should see my stock charts, and then right above it, himareddy.com/RSI. Yeah, you should see CGC, but I just have the link right above it. Yeah. Okay, thanks. So awesome. And so let me continue on with some of the other markets you guys are asking. Let's mix it up. Okay, Lynn wants to know about gold. And so do a couple other folks. So let me just go to GC futures. That's my way of looking at gold. And when you look at the weekly chart to start with, we've got all of this consolidation that's starting to move higher. I want to jump back to the daily chart. So you're going to see the daily chart of GC here in a second. And check it out, guys, how it's breaking above these October highs. This is, to me, a good sign for gold, although it has a lot of levels to kind of make its way through. And there are various price bars here: September 16th, September 1st, August 18th, August 7th, which I specifically analyzed in a very unique way to drive the most important support and resistance. It's inspired by my work on GAN. And I'm the only one who does it this way. And I teach you how to extract those support and resistance in the full 4 zones RSI coverage system, which again, if you go ahead and grab your RSI ebook, you can get deeper into your study if you choose. Or you can just take my free ebook gift, Tech Happens gift, and take it from there. So yeah, good looking situation here for gold, but I still want to see a continued clearance above this October 12th high. And I think the next place we hang out is 1983. I think that's the next upside target. It's like $30 away. Pretty good. Okay, let me mix it up. Euro. Okay, sure. We've got some FX traders in here. So we've got Jeff looking at the Euro USD. So I'm going to stay on the daily chart, and I'm just going to squish it up. So what I mean by squish it up is when I get a lot of data onto the screen, so I can get it into a situation where I can really see the price moves unfolding. And what I'm seeing with the euro right now, oh, awesome. Here in the euro, guys, there is a setup. Remember those 3 steps I was getting ready to teach you? The 3 ways to find, 3 steps to identifying setups with the RSI Power Zones. It's happening right here. And I'll tell you that I teach the full signal and how to identify it and measure it in the system. It's in section 2. But right now, this is signifying a higher price for the euro. So my forecast is for the euro to go higher. And the first upside target that's major would be that September 1st high. But along the way, there would be other smaller levels. And the first key level would be, I'm using some of my Magic Jedi tools to calculate. 6, okay. And I'm going to show you that in a second. Okay, so very specific for you here. Jeff, who asked about the Euro USD, 1.1956. Watch that like a hawk. And if you want to learn why, so when I give you these quick looks, guys, this is because you don't know all my methods. So if I just do them in front of you, it won't make any sense. In monthly group coaching live, when you're a 4 Zones RSI coverage system member, I actually every month take your requests like this and I go through them and I show you the analysis, the full source of a level, why it's happening, what exactly to do. Okay. Now let's look at another type of time frame here. I've got 5 more minutes, and you guys can see himareddy.com/RSI to get your free ebook to learn more about the RSI Power Zones. Let's see. Okay. All right, so let me look. There's a lot of stock picks in here, but I want to try to give you some variety. So let's see. Okay, the Qs. Sure, let's look at that. So Qs for Ken. I like it. A little ration there. Okay. So some leftover analysis I have from past monthly group coaching. So here we've got today's bar being very close to yesterday's high. It is Saturday, obviously, so we're not expecting any movement within this bar, but we are very close to the highs from earlier in the month. And notice how the high that came in on October 12th beautifully capped in the bear resistance power zone. Do you guys see that? And do you see how both the September 21st and the October 30th lows, even though the price lows were at different levels, where did the RSI power zones hang out? Right in the bull support power zone. I can't make this up and put it on my slide and handpick it and show it to you guys. You are asking me the questions here live. So this is me just showing you the awesomeness of this indicator on your markets that you care about. Okay. And I'll do another 1 or 2 here. So again, trying to give you a little variety because that is the spice of life. Okay, let's look at a FANG stock, Apple, for Tammy. Tammy, yes, or Tummy, I'm not sure how you say your name. But here we go on Apple. Ready? Here's the daily chart. We've got all this churn that's gone on. But just like the Qs, not surprisingly, where did the October 13th high stop on the RSI power zones? Bear resistance power zone, which was a clue that we were entering a consolidated mode, or like a sideways indecision in the markets. And where did the September 21st and the November 2nd lows hold? Bull support power zone. This happens all the time. And I want to show you guys back here. Do you see this September or July 24th up to September 2nd run up? Beautifully work with the RSI power zones moving from the bull support power zone to the bull resistance power zone. You'll see that very often in strong markets, that the bull support, the 2 lower green lines, and the bull resistance, the 2 upper green lines, are sort of creating these boundaries, and RSI is just gently flowing back and forth between it. When you're in a strong moving stock, especially in its final phases before a big consolidation, that's the easiest way to stay long with a strong uptrend. And it works for the downside too. When there's a weak market or weakening market, okay, you tend to see this flow between the bear support and the bear resistance. Let's see if, let's try PFE here. If, oh, I guess that's my time coming up. Let's just finish this one out. All right. This is a little bit of a choppy market, so let's just finish it out with SPY, and then I will hand it back to Jeff. So on the SPY, those of you who are trading the SPY, looking at options, etc., we are hanging out in your vitally important level, the October 12th high, and the latest 2 bars of price action show, not surprisingly, the market indecision. So the return to the bear resistance power zone leaves room for us to roll over again, especially with election-related volatility. But that's why when you trade the SPY, I write research on the ES and the NQ futures, which relate to the SPY and the Qs multiple times a week, so that you can be ready for those really small short-term actions. Again, you'll learn more about that if you come join my tribe, himareddy.com/RSI. My gift to you is a free ebook detailing RSI power zones, and then you can take your education further from there. So, well, that was quite an hour. Thanks for those of you who stuck around through the tech issues. Thanks, Jeff, for trying to sort it out. Not sure what happened.
I'm sorry, Hima.
Did my best.
Yeah. Can you hear me okay?
Yeah, I can.
I apologize for that. I'm not sure what happened, but I do think we should have you on again soon. And I'm going to, what I'm going to do is, instead of including this with the recordings for everybody, I'm going to send one of the other recordings that we have. So my apologies. I really don't know. We've been running for 2-3 days, and I was saying earlier, we've had no problem. So I cursed you. My apologies.
Okay, well, I appreciate that. And again,
So,
those of you who stood here and stayed and gave me your tickers and learned something, I hope you got some value, and I'll see you on the inside. And Jeff, I'll talk to you soon.
Hima, I should
Yes.
mention that
Your
despite
questions? Go ahead.
despite all the issues, the viewage did not go down. People were hanging with you.
Yeah.
Oh, that is
Yeah.
true. I see that. Thank you.
They were with you the whole way. They were all rooting for you.
Also, Hima, you handled it way better than I would have. I would have been like so stressed. Well, I was over here so stressed out because, but yeah, the viewage has stayed here. And what I'm going to do is we'll make sure to include with like all the recap videos, your last webinar that you did where we didn't have issues in addition to this one. But go to himareddy.com/RSI. The RSI stuff that she's showing in TradeStation is available for MetaStock, and it's part of like the courses that Hima offers as well. So, yeah, Hima, I apologize. I don't know. We're going to run a little bit of testing right now, but thank you for the presentation. I'm sorry it didn't go well.
Okay. Well, I don't know talk about it as well or not well. It didn't go as planned. Such as life.
Yeah, okay.
Listen, hey, Jeff, think of it this way. Look at what's going on in states trying to count votes. I think you and I are pretty okay for having this kind of glitch, okay? Let's just leave
Absolutely.
it.
And
Okay.
Hima, I'll post right now a recording of your last event, if that's good for you.
Sure. Yeah, that's fine by me. I appreciate that.
Okay.
Okay. Thanks. Have a good rest of your session. Hope the next speakers have better luck tech-wise than I did.
Yeah, we do too. Thank you, Hima.
Thank you, Hima.
Hima.com/RSI. Sorry about that. Okay. Before we get too much further, let me go ahead and show my screen here, Greg, and then let's just kind of switch through some screens and let's just do a little bit of testing, and see how it's going, if you don't mind.
I don't mind.
Okay, hold on just a second here. Can you see my screen?
I can see a MetaStock Explorer screen, I believe.
Okay.
Screen. Yeah.
I'm going to go ahead and switch. So let's just check to see. Now, do you see Hima?
I do.
Now, do you see our conference premium for tomorrow?
Yep.
Okay. All right. Now, do you see Hima again?
I do. How your camera's not on?
I haven't turned it on yet. I just wanted to make sure that we had some fluidity when we were switching screens and stuff like that. I don't necessarily think it was Hima's connection. It was probably just a bandwidth issue somewhere, but that it's unfortunate. I need to.
There's always some ghosts in the machine.
Yeah.
Coincidentally, Jeff, I don't know if this makes a difference to you, but they announced Biden was the president-elect right in the middle of that. And maybe that just caused a global flurry of internet bugaboo that just brought this all down.
Yeah, probably. It's been a crazy little bit of a period of time. So, in any case, deep breaths. I think we're okay. Thanks for hanging out with us, everybody. We didn't. I will make sure we send a good recording of the Hima Reddy stuff. And I apologize that we had a little bit of a technical glitch. Hopefully it's behind us. Let's talk a little bit about the conference that we're doing tomorrow. We have a lot of subscribers. We're going to do Steve Bigalow, Dr. Alexander Elder, Oscar Carboni. It's going to be a conference special that basically normally $600. That's $450. You can sign up for that by giving us a call, 800-882-3040, or you can go to metastock.com/conference20prime. Gregory, give me another number.
27.
27. Okay, good. I'm closer than I was to to that. All right. So the next winner is Jeffrey Gibby. No, we're going to have to go with a different number. It's Edery. Mr. Edery. Mr. Edery, you are the winner. I'm going to give you a MetaStock subscription. This is going to be, you might have heard about MetaStock. MetaStock's been the highest rated software program in its price category for the last 25 years in a row. But that's not all I'm going to give you. I'm also going to give you a 3-month subscription to the Zenith News and Data Service. They spent about $1 billion creating a news service. It has institutional quality data from 2,000 different full-time reporters in about 200 different news bureaus. But that's not all I'm going to give you. I'm also going to give you a copy of Rob Hoffman's Pro Trader Pack Elite Indicators. Rob Hoffman is coming up. He's going to talk with us in just a minute. He's won many, probably more than any other person, real-time, in-person trading competitions. I love Rob. He is going to come in and talk to us. And let's go ahead and start to introduce him. So Rob works with Become a Better Trader. Here's a bit of a picture of him. We've worked with him for a number of years, and his reputation really speaks for itself. I don't know of anybody who's won more in-person trading competitions. We've been working with him for a number of years. He's a very nice man, and we've taken him. We've got him locked up in an Indian customs prison. We've taken him all over the place. Maybe he'll tell you that story. Maybe he'll let you guess about it. But Rob, how are you doing today?
Hey, Jeff, I'm doing great. Can you hear me okay?
Yeah, we can hear you.
Let me just go ahead and I'll just turn on the camera just for a moment so I can say hello to everybody if it shows up. Hey, everybody. Yep. Welcome all over the world. Great to see you guys here. And don't worry, I'm not going to make you look at me the whole time. We'll go ahead and we'll try to get
you look great.
Rob, charts, that global pandemic has treated you well. You are looking good. That's a whole lot of handsome.
Yeah. Well, my wife is like, hey, if you're not traveling to like MetaStock, normally we would do this event live with each other each year. My wife's like, hey, don't shave. I like it a little bit gruff. So
I agree. You're looking great. But the pandemic has not treated me so good. But
well, I'm not going to make you look at me the whole time. We're going to go ahead and keep on the the screens here. Are you able to see my screen okay, Jeff?
It is, yeah, and
okay.
And I'll let you go. We'll let you know if we run into the same issues with latency and stuff like that. I don't think we're going to hit them. So okay. I've got my fingers crossed.
All right, wonderful. Well, and I can see the little GoToWebinar screen, so I can see what's being seen by everybody else. So we'll go ahead and we'll remain conscious and try to keep you on schedule here. So yeah, thanks so much, gang. Good morning, good afternoon, good evening around the world. So I recognize a lot of faces there going and chatting this morning. And so as we push off here, what we'll do is I have nothing to go ahead and sell today. I'm going to go ahead and just be given pure content, pure information. I do have a link where you can go ahead and get a whole kit of information, like a workbook and a guide to like what the strategy I'm teaching here today. And also a trader preparedness checklist and a trade planning checklist. So you're going to go and, I've got nothing but free stuff for you today and a lot of value here because these strategies I'm teaching are the ones that I use in part with my trading competitions that Jeff had mentioned. So just a reminder, trading involves risk, not just reward. Always consult a registered financial representative before trading. If you guys ask me a hypothetical situation, how I'd handle a certain thing, that I'm not doing live on the screen in front of you. Hypotheticals obviously don't take into consideration fast market conditions and everything else. For options traders, here's a great little publication you guys can go to understand some more of the risks about options. Okay, so as we go ahead and we take a look here, this is going to focus primarily on stocks, options, futures, and forex today. And so if you trade any of those and you're a day trader or a swing trader, then these strategies are going to go ahead and apply to you. So I'm not going to cover much about this, but I've written a lot about like the article that I'm sharing with you today. So I did that, I don't know, 10, 12 years ago or more, and publicly in an international magazine. And people are like, aren't you worried that things won't work? And it's like, here they are still doing their thing. I'll show you examples from yesterday. The same things continue to work. It's human nature, it's psychology, and in this case, it's institutional buying and selling. So the same thing repeats itself over and over. So these are some of the trading competitions I do, where they're live in person, and pretty exciting and that, but we won't have time to talk about those. So needless to say, I've written a lot about these different strategies. So these are all the competitions I've won around the world. All of them were in person with the exception of the one Infinity Futures one. Everything else was in person there. So bottom line is I really trade, and that's the kind of the key thing here. And so with that being said, the strategy I'm going to share here with you is really, if I'd known it many years ago, my life would have been a lot better, a lot faster, with a lot less heartache. These are the things we're going to cover, and but I want to try to keep you guys on track. But this strategy is designed on the buy side to help avoid traders from making a lot of the buy side mistakes. And I could do a whole class and session just on these things here, and the sell side mistakes. And we'll try to cover some of these different things in here as we go along to keep us on track for time. Okay, so with that being said, let's talk about what we call Hoffman IRB, Hoffman Inventory or Institutional Retracement Bar, because it's actually institutional inventory is what we're talking about here. So what is it? It's a price action based trend continuation trade. When do I use it? Most effective in trending markets, but it can be amplified by strong fundamental analysis and that. Or another thing would be, like in the case of like NIO, it can also be the stock NIO. It can be unusual options activity there as well. So I kind of put that in that category as well. So when you see these great strategies, that I'm going to show you, and they're also tied in with some pretty recent unusual options activity, that's pretty exciting as well. So the way we really identify these bars, looking back over the last 20 periods, because if you're using a weekly chart, it's a weekly chart. If it's a daily, it's whatever trade time frame you're looking to enter on. Okay, whether it's a 1 or a 2 minute chart or it's a daily or weekly chart. It's real important you understand this is fractal. So whatever periods, that's why it says periods. You're looking for signal bars where the open and the close are approximately 45% or more off the high in an uptrend, or 45% or more off the low in a downtrend. So just think of the rule of 45 there, okay? And so as we go ahead and looking, I just want to make sure that I just flipped to another screen. It looks like it's coming through okay. Generally, I just went to accumulation and a downtrend. You guys are all seeing that, right? Looks like right. Yeah, I just want to make sure. It looks like we're keeping up just fine. So what we're looking for, thanks, Greg, and good morning to you. So as we go ahead and we look at the accumulation and downtrend, so what we're looking for is this. We have a trend to the downside. And, easy way to identify a trend is in, 18, 19, 20 period, simpler exponential moving average. That's that key range right in that target. And what we're looking for in that situation then is we are looking for bars that are 45% or more off their low in a downtrend. And by the way, these are 4 individual unique examples. These are not a 4-bar pattern. I just want to make sure you guys understand. I just want you to understand that, whether it's a kind of a red body, a small red body, a bigger green body, et cetera, that, this is what we're looking for, is 45% or more off the low. So if you take the low of the candle, the high of the candle, you want the body of the candle to all be in the top 55% in a downtrend. This is for what we call a classic IRB. So the thing is with this is that the key is I'm looking for where one or more institutions has not only stopped the market from going down temporarily, but actually driven it back up. Now, when we talk about buy-side mistakes, so how many times have you guys thought about buying a particular, selling a particular stock? Maybe you short. This is for all of our shorters out there, and the market was going down. And what ended up happening was, in the process of going down, all of a sudden it comes back off the lows and starts to kind of go back up a little bit. And you're like, whoa, good thing I didn't short that stock. Whew, boy, that would have been another one of those losers. Only to turn around and have it go down, back a few bars and then come back through that low and go much lower. You're like, oh, I knew it was going to go down. But because of that short-term move to the downside, or the off the lows, back up off the lows, you went ahead and decided, you got spooked out of the trade. You were afraid that, oh, geez, I better not take that trade. So type in a number 1 if that's you, because these are the kind of mistakes that happen all the time, and it'll be even more important for our uptrend. So let's look at that for a moment. So type in a number 1 if you've ever thought about taking a long side trade, and the market is going ahead and going up, but then all of a sudden it starts pulling back 45% or more off the high in an uptrend. And so what ends up happening is you decide, oh, boy, I'm not taking that trade. It's starting to come back down. Oh, good thing I didn't take that trade. That would have been another one of those losers, only to turn around, watch it go back up above where you thought you wanted to take the trade, and watch it go much higher. Yeah, Glenn, thanks for sharing, there, gang. So what we're looking to do with these is this is where one or more institutions temporarily stops the market from going down, but the overall predominant trend is up. So what I'm looking for is where that institutional inventory that was temporarily against the trend, in this case, sell side inventory against the uptrend, I'm looking for that inventory to go away, and then go ahead and push back through that area. And then the market's free to go back on board the original direction, and usually with a lot of power. So it's a short-term blip against the predominant trend. We're going to see that a lot. So go ahead and make sure that you stay with us. So what you want to understand here is the entry for this trade is going to go ahead and be down below the low here. But I think we're going to have some slides that will show that to you a little bit further. But so, well, actually, you know what? Let's do this just to be sure here. I shorten up some of my slides, not knowing if we need to shorten the presentation with the situation with the audio in the last one. So what we're looking to do is go short, 1 tick, 1 cent, 1 pip. Doesn't matter whether it's Forex, stocks. If it's an options trade, then you're looking for the underlying instrument to go, trade down below the low. All right. So 1 tick, 1 cent, 1 pip below the low of that bar. 1 tick, 1 cent, 1 pip below the low. 1 tick, 1 cent, 1 pip below the low in a downtrend. Typically the stop loss will be right back up above the high of that same signal, because what we expect to have happen is when it breaks down below, we kind of expect it to really accelerate to the downside, what I refer to as the whoosh. And in an uptrend, we're looking at basically the same thing. The market temporarily came back off those highs in an uptrend, and we're looking for it to break out 1 tick, 1 cent, 1 pip above the high of those bars. Okay, so and then the stop loss would be 1 tick, 1 cent, 1 pip behind the opposite side of that. So that's where the entry is. The typical stop loss there is back behind there. Okay, so with that being said, let's go and just start looking at MetaStock up here, and so here's an example of Apple is pushing down. You see we're 45% off the low in a downtrend, and look what happened. It actually went back up for a few bars. So anybody who was thinking about shorting, of course, would give up on that idea. Well, then it broke back down below the low of that bar, and it shot down there over $30 that week. This is a weekly chart, and that same period over here on this side is a daily chart. So you'll notice over here on the weeklies, you'll see another IRB, and you see that downtrend in the backdrop. You see another IRB here. Well, look what happened when it broke down below there. Then it actually created another IRB, and then it continued to whoosh to the downside. And here's a daily version of the same thing. So here's a bar, it's 45% or more off the low. And by the way, gang, you don't have to pull out a ruler, compass, protractor, or any other instrument of mass destruction. Just kind of eyeball. If it's approximately 50% off the low in a downtrend, then it qualifies. Okay, and MetaStock is simplified that process, which Jeff will perhaps have time to show you a little bit later. So, but right here we look to break down below, and then you kind of see how it accelerated, and then actually fired off another IRB, and then another IRB. So you're looking to take those trades 1 tick, 1 cent, 1 pip below the low of those bars, and then kind of trail down your trade. Okay, so again, think about it, from a buy side here. What happens is those bars that are 45% off the high in an uptrend, so let's say the body is down here and you got 45% or more off the high of here, what that's doing is it's distracting buyers from wanting to buy. It's also giving sellers false hope. If they'd shorted down below, maybe they shorted down here, and then all of a sudden, the trade starts going against them. But what ends up happening is it starts coming back off the high. They're like, yeah, go back down. It's giving them false hope, and then it's stopping out the late buyers who need big, fast bars. So what ends up we'll talk more about that perhaps in a little bit. So and then on the sell side, it's the same type of situation, because these are key mistakes that are made, and this strategy is trying to work around that. Okay, so here's some of the key initial rules I wanted you to see here. Now, where's the entry? Again, it's typically 1 tick, 1 pip, 1 cent above or below that signal bar. We look to trail or use a key target, like it could be a daily, weekly, monthly pivot point for a target. It could be a previous clearly identifiable high or low support resistance line. So everybody's got their favorite. Could be a Fibonacci extension. Everybody's got their favorite types of trades that they can go ahead and use for targets. Okay, I'll show you targeting in just a few minutes there. The stop loss is typically back behind the opposite side of the signal, like we talked about, to keep it tight. I use that rule for the average small lot retail trader because it's just more clearly definable, and because the vast majority of the time, if you identify the trend right and you get the signal, what should happen is it should just start whooshing your direction. Usually doesn't go ahead and turn around, come back down, and then turn around and whoosh, right? So the few times it does it, if it stops person out, no harm, no foul. Statistically, most of the time, it's just going to continue on in the trend. So it's a great way to keep the stops tight. One thing to note about stops, though, let's say you're dealing with some of those big wide range weekly bars. Some of these stocks can easily move 20, 30, 40, $50 or much more in a week. And if you're using a weekly bar with something like this, and it's got maybe a $50+ range, and you may not have a risk appetite for a $50 range, so you're looking to buy up here, but then $50 range on that week, the stop would be right back here. Then you can either do one of two things: A, not take the trade in the first place because your risk appetite is not there. 2, B, go ahead and reduce your size on the trade. Maybe instead of using 100 shares or so, maybe use 50, or instead of 1,000 shares, you use 500 or so. Or C, use a predetermined stop loss somewhere in the middle as your target. Because remember, what should happen is it should start to whoosh through there, as part of that. Okay, so a couple things to think about. So generally speaking, like the way I look at it, I'll identify a target out into space. Okay, then you have the initial entry, and usually as we're getting about 50% of the way to the target, and again, I named off a number of different types of targets that you can use, we'll start trailing by about 50% of the profit earned on the way up to the target. So 50% of the way to the target, start trailing by 50% of profit earned. In other words, if it turned right around and took me out of the trade, I'd at least lock in 25% of the overall potential move. Then what we do is it gets about 80% of the way to the target. Now I start trailing it up to about 80% of the profit moved, not 50% anymore. Why? Because as we get closer to the target, I don't want to go ahead and have it come all the way back down here. Trades aren't free. There's expense and everything else to be involved with trading, and you want to go ahead and take some of that off the table. Give it a chance to run, but if it gets closer to that resistance, start tightening things up. So 50, 80, and then as it gets up to the target, start trailing up about 90% of the profit earned. Okay, and then what happens is if it doesn't then immediately start to break through that target, then we trail it up to price. Because what's more likely to statistically happen after it's been running, you get a break of an IRB, look what happened there. There was your IRB. In fact, there was an IRB within the IRB. And what did it do? Boom, 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 boom. Well, so now you're getting a big green bar to the upside after a huge move, a big green bar into resistance. Statistically, what's more likely to happen at that point, gang? Is it more likely just to keep going, or is it more likely to at least temporarily stop and reverse? It's far more likely to stop and reverse, right, gang? IRB, yeah, inventory retracement bar or institutional retracement bar. Yeah. Okay. So does that make sense, everybody? So 50, 80, 90, and then if it doesn't go ahead and break through right away, just move it right up to price, and then expect to be filled. If it does go and break through that resistance, then it's pretty much a 1-for-1 trail, especially on an intraday basis. You're just because you're expecting a quick move through. That's going to capture all the breakout traders. Ooh, breakout, go long. And then what ends up happening is it turns right around and goes down. So it's just capturing the breakout traders, trapping them in the position. So just trail it up 1-for-1 until it stops and then starts to reverse. Okay, that way you can take some more out of it if it's there, but if not, then you're right there, ready to be taken out. Okay, so that's kind of a summary of the inventory retracement bar. Now, let's go ahead and with that, let's take a look here. A couple things I want you to remember. If it's moved a large range fast, then you may not want to take that trade. Let's see if we have, I want to go back for a moment and show that here. So typically what I'm looking for is I'm looking for movement, normal movement. And if a bar, though, that makes the IRB has moved like 3 times the size of the normal range of the bars preceding it, the last several bars before it. So if this is the normal size, geez, this is nearly 3 times that size. Well, the problem with that is multiple fold. You start worrying about a potential blow off at that point. And also remember the stop or the entry for this is way down here. That means now this thing has to go all the way back down here just to get into an entry. So statistically what's going to happen there at a minimum, it's going to at least bounce there for a little bit before it breaks through, giving you kind of some heartache. So the thing is, these entries that are 2 or 3 times the normal range of the last several bars preceding it, typically pass on those bars from my perspective. And again, that doesn't, this all applies. Every one of those rules is whether you're a day trader or a swing trader. Very important to understand. Okay. So let's go back over here. To those other rules. Has very diverse applications, whether it's stocks, futures, options, ETFs. Trail your entry to reduce the risk of RTM. That's the reversion to the mean. And then it says trade in direction of the TRP. Disregard that right now. Just trade in the direction of like a 18-20 period exponential moving average. Okay, so as far as targets, yeah. So we went ahead and Christian, I did talk about that. Perhaps you just joined, and so what happens is you can use a whole bunch of different things. You can use daily, weekly, monthly pivot points. You can use a previous high or low on the day or the week or the month, depending what time frame you're trading. You can go ahead and use Fibonacci extensions. There's all sorts of different types. Everybody's got their own favorites. I showed some pivot point examples there just a little bit ago is what I was showing. So everybody has their personal preferences there. Okay. Let me just go back and show you what I was looking at. So here, was pivot point. So at target 2, there's the primary pivot, support and resistance 1, and support and resistance 2. So 2 is usually the normal maximum statistical daily range. So that's example of the target there. Okay. All right, so let's go ahead and take a look at some examples here. And as we take a look here, what we're looking for is the first prerequisite is an uptrend. Okay, for a long, that is. We want an uptrend for a long, downtrend for a short. If the market is sideways, I don't recommend using the strategy. And there's a great story that if we had more time today, I would share it with you. But suffice it to say, the short answer is you want that 18 to 20 period trending up or 18 to 20 period trending down. Now, as we go ahead and we take a look here, you'll see here this was off its high, 45-50% off its high. This was 45-50% off its high, 45-50% off its high. So the entry on these is 1 tick, 1 cent, 1 pip above the high of that bar. Typically, you're looking to take the signal. I mean, the sooner that it comes, the entry comes to the IRB, the better. But usually within 20 bars, on whatever time you're trading. So keep that in mind as well. So, but the sooner, the better. If it happens, then within a bar or two, it's immediately breaking through that. That's even better. Okay, so 1 tick, 1 cent, 1 pip above the high of the bar. Now, if you're an options trader, okay, so if you're an options trader, what I mentioned was you look at the underlying instrument. Okay, so now the underlying instrument at all 4 or 3 of these points has given a buy side entry. So what are some of your favorite long side options trades that you can go ahead and be using here if you decide you have a long side options opportunity? Absolutely, you can go ahead and you can sell a put, you can buy a call. There's all sorts of different strategies, right, that you can go and put on if you're an options trader around this. Okay, and so as far as the what you're looking at here, so it doesn't matter whether you're looking at Forex, stocks, ETFs, futures. Okay, and so you'll see here, then there's all these different ones that are 45% or more off their high in an uptrend. Okay, that's real important. And then each one of those becomes a fresh entry. And then, as I mentioned, you can go ahead and put your stop loss 1 tick, 1 cent, 1 pip behind the high of that, or the opposite side of it. So, like in this case right here, it's in an uptrend, and you take an entry here on this bar. If it turns around and goes back behind the low of this bar, then from my perspective, it's a simple stop loss. Okay, so it's just a tool to go ahead. Same thing, it's right here. You enter over on this bar. If it went below the low of that bar over here, so if this came back down, then it'd be a stop loss. Okay, it's a simple trailing stop process. To go ahead and keep it real simple for the purpose of today's discussions. There are obviously ways to make more advanced stops, but to keep everything condensed here, we won't have a chance to talk about it here. Normally, these events, we do the physical events, and so I have more time to talk with you guys, hour and a half or longer. So trying to condense things a little bit to at least give you this. And don't worry, like I said, I've got a workbook and a guide for this strategy and a couple other different things and training videos that you guys will be able to get access to, and that to kind of keep up on what I'm doing and what I'm thinking at the end of this session here. Like I said, I've got nothing to sell you. It's just all free content here today, so enjoy it. Okay, so on the short side, same concept. What you're looking for is the market to come down, and you see that we are starting to come down here. We're looking then for bars that are 45% or more off the low in a downtrend, 45% or more off the low in a downtrend. And you'll notice that you'll often get entries and re-entries. So here was one right here. And by the way, technically this was as well, but it was just, and I know the scaling's a little bit off here if we were to bend this was just kind of bending down. By this time here, it had really been bending down. If I were to scale this up a little bit, you'd see what I'm talking about. And so the reason why I have some of these on here is because these were some trades that I was doing in trading competitions. And so, for many years, I've been showing, doing MetaStock events up to and inclusive of getting locked up in foreign countries under armed guard for MetaStock. So I don't tend to do a lot of public events. Mostly you'll see me at like Wealth 365, Wealth Charts, Become a Better Trader. But the people at MetaStock are really, really good people, and so they're one of the people I kind of come out of my shell with because I have my beautiful 4-year-old son and my incredibly talented and gorgeous 6-year-old daughter, and so they're my focus with my lovely wife. So, so I'm here today with you guys, but I'm showing the examples even from MetaStock when I was using them in trading competitions over the years, so you can see some actual trades that I was using this strategy with in competition actually helped me win competition. So it's important. Jeffrey says, we promise Rob did not do anything illegal. No, I did not. There's a thing called Visa on Demand in India, and so everybody on the team thought that, well, great, when Rob arrives, we can get him a visa. Unfortunately, Visa on Demand actually had to file for like 30 days earlier, and so when I arrived in India, they said, congratulations, you go to jail, do not pass go, collect $100. So fortunately, I was going to speak in India and then Hong Kong for MetaStock, and so basically they held me under armed guard until they could get me a flight out later that night to Hong Kong. So I sat in Hong Kong, did the broadcast to India from Hong Kong. So yeah, good times. That's right, Rob Unchained. It's right. So, but all kidding aside, gang, what I do want to say is, like I said, putting my money where my mouth is here. This is an actual trade I used to help me win a trading competition. You'll notice what happened. So it fired off a IRB sell. So, and then it turned around and fired off another one. And what it did was just boom, 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 boom to the downside, and whoosh down. And that helped me win that particular round of that competition. And so so then over here's an example as well. Now, this was a really interesting story with the judges. So gold was going down. All right. So gold was going down, and I found this bar, and here we were 45% or more off the low in a downtrend. So I had these judges standing over my screen shoulder, and if you had seen the pictures from earlier, you probably noticed there was judges standing back there. So I have to come up, let them know if I'm in a trade or what I'm doing, so they can monitor everything, validate it's real. So it's not like these online gaming ones that people say, hey, I won this trading competition against a bunch of people in their underwear all over the world. This is like real hardcore stuff, people representing their countries around the world, and it's very highly regulated in that. And so what happened was I let the guy know, like, hey, look, I've got an order to go short if it breaks down below there. And so I basically waited about 20 minutes for that to go ahead and come back over here. And then when it did, it was entered, but I was able to tell him way in advance what I was doing, then raise my hand, then he wrote down the price on the thing, and then, whoosh, down the hatch it went. But I had that planned in advance. Okay. So that was another live trade that I'd taken there during the trading competition. Okay. And actually, by the way, just technically, I should have taken the trade right up here, over here, but I got distracted at that time because during this 12-hour 4-segment event, you're also doing they're asking you questions like, what are you looking at? Why are you trading? What markets are you trading? Why are you trading them? So you're like having to answer all these questions. So I was a little distracted at that time. So I actually missed the first sell right up here in the interest of full disclosure, but it was there. 45% or more off the low in the downtrend was actually officially up here. But I did, at the time, I already had the one preset, so I didn't mind being distracted. And so it took me in, and then it went down. Then you'll notice another IRB right here. Okay, so I just wanted you guys to see that there, and then there was more of them, and it kept going down there. So the point is that these are real things, from real competitions, private trading. Here was another one. This was crude oil at that time. Obviously, doing each these rounds only last hour and a half, 2 hours, depending on each round of the event, and then you go on and they eliminate people who didn't do well. It goes from like 16 traders down to 8 traders, down to 4 traders, down to 2. So now lately I've been doing these competitions in Europe, like in France, where they actually have you trade stocks, ETFs, and stocks, futures, and forex. So like they're like a triathlon, if you will. But at the time this was futures. So the market was coming down. So I put my order in there to go short, 1 tick, 1 cent, 1 pip below the low of that. We had that ITP there, and whoosh, down the hatch it went. And at that time of the morning when the futures were slow, 20-point moves on 20 tick moves on $10 per tick adds up real fast per contract. So just want to see, the goal is to try to get us away from these problems that a lot of us make as traders, and that's why I keep coming back to this. And so now we kind of come back to that original chart that I showed you at the start. Okay, and so I like to bring it full circle. And so now you can see there's that, it's coming down. There's that 45% or more off the low. You can see on that weekly chart how then it whooshed down $30 in the week. Okay, and then you can see now the other the other IRB signals. So I kind of wanted to bring us back to that one because, at first you're like, whoa, what's all that? Well, now that you've gotten to see more and more examples, now coming back to that one, now you can start to spot them a little bit quicker here. Okay, so let's go ahead and take a look at another example here. This was Apple after one of its original splits. And I walked through this whole process for weeks in my nightly videos and that. And for everybody that gets access to this IRB guide that I'll give you, and the workbook, the fill in the blank workbook, and all that other stuff, you guys can get access to my videos as well. Then, okay. So you have, first of all, you got the trend. Now what you're looking for is these bars that are 45% or more off the low. Off the high in the uptrend. Now, the question there, is there a better time frame for the Forex? Yeah, so first of all, again, it's fractal, but I know a lot of my Forex traders use hourly 120 and 240 charts. So that might be something helpful. Lynn, good. I'm really glad that this is helpful for you. So Marzina, so what I'm doing here is I'm keeping it focused just on this 20-period exponential moving average to keep it real simple, okay? So we're talking price appearance, so price action, and a 20-period exponential moving average. Obviously, I have a lot of tools and a lot of strategies, but what I wanted to do in this time today together is try to share something that people can take away from here, no matter who they are, and just provide value on behalf of the MetaStock family here. I'm sure there's lots of different things you can buy from lots of different people here over the last few days at the event. But I'm perfectly content just providing value today. And like I said, gave you the stuff at the end here. And also MetaStock has some great plugins that helps identify these things that I'm going ahead and showing you. Okay. So so hopefully that helps. Is that fair, gang? I'm just trying to give you guys pure value today. So I don't want to stack a whole bunch of other tools on there. MetaStock's got all the great tools that you can stack on here. And perhaps Jeff will be able to show those tools. They're one of only 2 platforms in the world that's licensed to have that work. So hopefully that will help you at the end there if you're interested in that. Okay. And so going back to this then, yep, you're very welcome. So yeah, again, Mimi, the 20-period exponential or simple moving average, it doesn't matter, 18, 19, 20 period. You can use the 19.26915 moving average as well. That's the super secret one. But you can use a 20-period simple or exponential. And by the way, I'm just kidding about the 19 super secret one. But the point is that anything in that general proximity. Okay. And so what we're looking at is 45% or more off the high, looking for the long, 45% or more off the high, looking for the long, 45% or more off the high, looking for the long. Does that make sense, everybody? So the key is at these places now, I want you to think about this differently. I want you to think now like the hunter versus the hunted. Okay. I want you, so the next time when you're sitting there looking at a potential trade opportunity and all of a sudden you start to see the market pull back, rather than sitting there saying, whoa, good thing I didn't go ahead and, take another, long side trade. Oh, this would have been another one of those losers. It's going to go down on me now. Same thing up here. Whoa, good thing I didn't take that trade. It's a down bar. See, it's going to roll over. Instead of you being a victim, and instead of you going and saying, oh gosh, I can't take that trade, right? Being faked out of it, spooked away from it, you can say, okay, all right, well, look, I'm going to wait and I'm going to see if it does go back up above, then I will look for an entry there. Okay, and so that's something I want you to go ahead and keep in mind. It's a mindset shift that now you're looking to see if it does get back and continue, rather than going ahead and being faked away from it. Okay, so same kind of thing. I was teaching this over in Barcelona. And you can use other tools with this. So, was it Marzina? So Marzina, you can combine this with other tools, like for instance, so you take that 20 period moving average, and then you have the market push down, pulls back up, and then it locks in one of those IRBs right there. And so this was actually a live trade. I had just gotten done teaching the strategy, and then the market went ahead and pulled back. And it came up, made the IRB, so I went ahead and went short there. This is live trading, and with just a contract, made a couple $100 there. Using that strategy. Now you can combine it with things like stochastics, for instance, and that and other tools. Perhaps some that you've been introduced to over the last several days. But basically, a short-term overbought scenario in a downtrend can be a great re-entry opportunity for a short. And so if you've got an IRB, now what happens is, notice that what it did after it broke down below that low, what did it do? It whooshed to the downside. You started getting some very aggressive red bars, right? So, but look at this. So first of all, remember what I said about the big red bars initially, right? To the downside. Big red bars, big green bars are usually where a lot of traders get finally sucked in. So here's what happens. Think about this. To so many of you today, type in a number 2 if this is you. The market's slowly coming down. So looking like, man, geez, I should take that trade. Wow, I feel like this is going to go down. This is going to go down. And then all of a sudden, you're like, no, I'm afraid it's going to reverse. I'm afraid it's going to reverse. I'm afraid it's going to reverse. And then all of a sudden, it goes boom, 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 boom. And you're like, oh, no, I knew it was going to do this. I should have taken it there. I should have taken it there. Well, that's it. The market's not going to take any more from me. I'm getting into this trade. I'm going to get my due. So you get into the trade, and then it turns right around, goes up against you, stops you out, only to, even worse, to add insult to injury, goes right back down your way. So so a lot of 2s coming in there. So what I'm trying to do is get you to think like the hunter, not the hunted. Instead of shorting into the big red bar that's already gone down, looking for the resumption after a short-term move against the predominant trend, and then get back into that trade for the resumption. And then once again, not being short once it has the big red bars, okay, and then potentially goes against you, but be in there before it. Okay, so I hope that makes sense. Here's actually some trading I did. I just thought I'd show this because it was funny. It was before I was leaving for a live MetaStock event previously in years past. I was literally hopping the plane to go to a speaking event for MetaStock, and same thing. So the market was coming down. You see the IRBs here. I went short. It just kind of whooshed to the downside. So that gave me some trading, and then all of a sudden, what ended up happening was there was another IRB, so I ended up going short again, and the thing just whooshed down. In fact, it whooshed so fast off the screen, I just ended up closing out the position there. And like I said, it just went and gave quick profit there, going ahead and using that IRB strategy. It's just kind of funny because I was heading to a MetaStock event. That's why the only reason I showed it. So and by the way, Jeff, you'll just have to let me know what time I'm able to go through. I want to keep you on track, but so just give me a little shout there and let me know.
I'm next, so you can go as long as you want.
Okay, well, no, I want to keep you on track, but I want to make sure I'll share a couple more. Great.
Your slot's 11.
Okay.
Or 1 Eastern.
Understood. All right, thanks, sir. So as we go ahead and we look, there's other ways to use it. I wanted to start training you, get your visuals, getting your mind trained to different examples, right? So market turning around, pushing. It was already an uptrend, and looking at these IRBs, looking at the IRBs, right? So I want you to get trained. Now I want you to see over here, this right here, you'll see that it worked. Okay, it worked, but this is what I want to just say to you. I get that it worked. Okay, but if you would have pulled the same stunt over here for a short, it wouldn't have worked. Okay, so the point being is, please consider sticking with the trend on this, gang. The reality is there is opportunities for non-trending markets to use this, but from a probability perspective, it's going to be far more beneficial to you if you actually work with the trends. Okay. So same thing here. It works a lot better if you have the trend, and then you get that 45% or more off the low, 45% or more off the low, 45% more off the low. If we'd had an extended period today, I'd also teach you about the reverse inventory retracement bar. But so here is an example I want to show you again. You see 45% off the lower. Look at how wonderfully that thing shot up to the upside. But officially, it was basically a sideways market. Okay, so I'm doing this intentionally because I really want to emphasize that what will happen is, and there's a long story. I don't have time to share all of it, but I met a person years ago, and what they ended up doing is I was out at an event in California, and they ended up went from a nice 45-degree angle down to a more shallow angle, and then over time they kept seeing that they get a lot more trades the more they shallowed out the angle of that 18-20 period moving average. But then the probabilities went down significantly, and that's what so try to get them to go back and think about the better quality trends. So you will find these that they'll work really well when it breaks out of those areas, but I'm just putting a lot of emphasis on that for you today, because in my opinion, it just works better when you got the trend. The trend is your friend till the bend in the end, so I really like those ideas. Okay, so let me do this. Let's another thing you can do with these. Remember now, these were an area where one or more institutions not only stopped the market from going down in this case, but actually brought it back up. So it's important to understand that these are great areas then if you are like in a trade for some reason, expect resistance to your trade. So in this case, if I'm short, expect that I might want to consider covering in this area, because those are clearly defined areas until broken and proven, that now they can actually continue on. They are key areas of support or resistance. In fact, and then what you can do is you can sometimes find this on multiple time frames. So here was a situation with the S&P. You can see the 2-minute, the 5-minute, the 15-minute, and the hourly were all having resistance at the same time. What do you think happened to that market? It ended up going down from there. So and then you can see here was an IRB. See, it was a big, beautiful uptrend, gang. But look what happened. The market got right up there, got right into that area. But then that area of distribution, see, it, unlike what I've been looking for and showing you, where I want to break above this, so then I know the market's free to continue on. See, they had more inventory in that area, and then that drove the market back down. So that's why I said wait till it breaks that area. Okay, show me that one or more institutions' inventory is gone. Okay. And then this was like a real world example from a trading competition I did in Las Vegas that helped me win the competition. So what ended up happening was market pulled back there. I found a long side trading opportunity. But what happened was there was that big fat double distribution. If you look in there, you can kind of see multiple layers of distribution. And so what ended up happening here was, you notice that it got that distribution, it came back up, made another distribution bar, came back up, died from there. There was so much inventory. So what happened was I was long, got up into this zone. And so I told the whole audience there in Vegas, I said, hey, look, I'm long, and that's great, but I'm going to go ahead and trail up my trade here because we're right back into this distribution over here off to the left. So I trailed up my trade, got taken out of the trade, and then sure enough, the market turned around. But that helped me win that trading competition in Las Vegas because I trailed up my trade as we got back into that distribution. So does everybody understand that this also offers you an opportunity to go ahead and help you understand where you should have a reasonable expectancy that moves could fail if we don't break through those levels. So the key, what I would have been looking for, that's why I said it has to break through that distribution in order for me to take a trade, because until it's broken through that area, that's an area where one or more institutions has proven that there's resistance. Does that make sense, everybody? Type in number 4 if that makes sense to everybody, because that's really important, that it's guilty until proven innocent. In other words, it's resistance, it's key resistance until it breaks through that area. So that's how I use that in like that trading competition. I was long and I said, hey, look, I'm trailing up my trade here because we pushed right back up into that resistance. And that can be very hazardous to my financial health. And look what happened. It basically the rest of the day stayed below that distribution. Does that make sense, everybody? Good. I'm seeing a lot of 4s. Wonderful. Okay. So these are all of those must-knows, those key things you want to think about there. And then, MetaStock has gone ahead and made it where, the IRBs, so you got IRBs here, and you can see just IRB after IRB after IRB, and it triggers off signals. Jeff can talk a little bit more about that with you in MetaStock there. But so you can just see them, examples of those, right there. And now let's look at the last couple of days. So as we take a look at yesterday, for instance, yesterday morning, the S&P futures were trending up. Okay. Well, let's see. How many IRBs can you see? And this doesn't even count reverse IRBs, which unfortunately I won't have the time to share with you today. But reverse IRBs, open up numerous additional opportunities. But can you guys all see, the IRBs here? Look at all those IRBs. So you're looking for longs, 1 tick, 1 cent, 1 pip above the high of those bars, right? You're in an uptrend. You're looking to go long, 1 tick, 1 cent, 1 pip above the high of those bars. This was yesterday morning in the S&P, okay? And then on the downside, then you're looking to go short, 1 tick, 1 cent, 1 pip below the low of those bars, okay? So, and then there's a whole bunch of trades I wish I could show you today. There's the reverse inventory retracement bars, which basically effectively doubles the number of trading opportunities that you can get. Super powerful. Those ones I circled are reverse inventory retracement bars. Both of those are reverse. So hopefully I'll be able to come back with MetaStock and show those to you again. But this was yesterday in the S&Ps. Then here was yesterday afternoon in the S&Ps. So you can see the downtrend here. So in a downtrend, what are we looking for? We're looking for 45% or more off the low in the downtrend. So we have that, like right here. Okay. Here's one that's 45% off the low, 45% off the low. And notice what happened when it broke. 1, 2, 3, 4 IRBs. And look what happened when it broke through there. Whoosh, right? Okay. So then we also had, which would have had time to be able to share also reverse IRBs, because then you had a reverse IRB here and a reverse IRB here. Lots of these reverse IRBs too. So, but the classic IRBs, like some of the ones that we're showing you here. So really powerful. So this was yesterday afternoon, going into the afternoon when the selling hit. And then NIO. Now NIO is one that we talked about, in our options program back in June. And for all of you that were at the Wealth 365 program here. It just a handful of weeks ago, about 3 weeks ago, we talked about NIO at that time too, because NIO had unusual options activity back over here. So we were talking about this then at the Wealth 365 Summit, but just take a look, and then it took off here again. Just take a look at all the IRBs, right? Let alone reverse IRBs. Now, maybe what I'll do is I'll try to use arrows on some, and sorry, there's so much data here. It's a little bit squishy, but you can see there's a lot of IRBs, and I'm just going and eyeballing a couple of them. I didn't want to pre-make it for you. I wanted you to kind of see if you can spot some as I'm going ahead and spotting them. So then remember, all of these bars, 1 tick, 1 cent, 1 pip above the high of those bars, all become fresh entry and re-entry opportunities. And now this one here this was the other day's bar, so it hasn't broken above there yet, but that was the other day's or Friday's close here. So that look at all those IRBs, and then you go ahead and you take a look at reverse IRBs as well. It just opens up your opportunities, so much. Look at all those reverse IRBs, and some of these I see that there was even some IRBs I missed. So I'm just quickly drawing them live on the screen in front of you, all of the reverse IRBs. So the bottom line is, gang, what this is, this strategy, and so what happened was we first mentioned this back in July in our options June, at the end of June there, this area for the options program. And then at the summit, we went ahead and we talked about how there had been unusual options activity heavily over here. And then magically off to the races it went. And you had multiple reentry signals with this IRB strategy from there. So during the summit, we re-alerted people about this, and look at how it's taken off since then. So if you came to see us at the Wealth 365 Summit, that was a huge learning opportunity as well. So there you have it, gang. I want to go ahead and I'll leave it with that. We don't have time to talk about but these, what I want to do is, when I do these trading competitions, it's just important to understand that these are some of those key competition things I'm using here, is those judges back there I was telling you about and all that. Last year, I went up against an algorithmic program that was trading this well, and I still managed to go ahead and beat the algorithms with my live trading. So it's really important to understand. And so here's an opportunity, and maybe the gang can put it in. If you go to becomeabettertrader.com/tools, you're welcome to go ahead and get access to a guide and a workbook on the strategies that I shared with you today. So that will go ahead and help you. It's got several things. It's got a trade planning guide, strategy workbook, trader preparedness checklist, the IRB guide, and strategy workbook. And then you'll get access to some trading strategy videos from me that you can, when I send those out, you'll get access to. So a whole bunch of goodies there, gang. So I tried to just provide you nothing but pure value today. Just go ahead and, keep that in mind. And, hopefully this will give you something to play with, practice, test this weekend. Go back and look at some of your favorite instruments, how you could have used this strategy, and now how it might fit into your strategies as you go forward. Okay, so with that being said, Jeff, thank you very much for having me. Tried to just give the group nothing but value, and you guys are welcome to those wonderful tools that I just gave you there. Okay, so thank you very much for having me today.
Oh, Rob, thanks for coming. Let's get a real quick thanks for Rob. What a great job today. And I'm getting tons of good feedback. Long says, thanks for the great presentation. I want to read this out because I think it's important. Thank you, Rob, for this great presentation. Rob is one of the best mentors in the field. I personally learned a lot from this man. So thanks, Waleed. Anyway, thanks for coming, Rob. What a great...
Thanks.
I appreciate it. So in any case, I am going to talk a little bit about your tool. Before we let you go, I want you to pick a number between 1 and 12,000. Oh, I think he's already gone. Okay. Hey, Greg.
Yeah.
Hey, let's have you pick a number between 1 and 12,000.
642.
642. I found an easy way to actually get to the number, so we won't kind of deal with that as much. And in any case, can you see my screen, Greg? Can you guys see my
Yes,
screen?
I'm sorry. Yes, I can.
Okay. All right. Sounds good. I just want to kind of show you how the tools that we created for Rob Hoffman kind of look on a chart. It is, again, something that we worked on quite some time with Rob. I remember me and William and Rob being in a room for quite some time, actually kind of looking at his signals and making sure they were right. And Rob was very, very thorough, and it was very easy to work with him, but we would kind of just sit down and kind of make sure everything was right to kind of design this. You'll notice it does have all of the moving averages and the stochastics and the fast trigger and the core trigger, all of the oscillators and indicators that he uses for signals. Those are applied to the chart. Those are automatically put on the chart. Not moving averages, the speed zones that he uses, and the fast trigger, the slow trigger, and the oscillators. So in addition to that, all the signals are actually also automatically applied and put on the chart for you. So, and it is a very, very well-defined user integration. It does have expert commentary that's associated with it. I can come in here and I can get a bar-by-bar replay of anything that's going on the particular day. We haven't had anything too recently on Apple, but I want you to kind of look at all of the buy signals that we had during this uptrend in Apple. If I kind of click on one of those, you can see that we kind of give kind of like a bit of a, let's say, a dashboard view. It says that the Hoffman trend is bullish, your core trigger is bullish with increasing, and your fast trigger is bullish with decreasing. Also tells you exactly what that bullish inventory retracement bar is. It gives you a good opportunity to kind of tell you exactly where you should enter the trade. It gives you a lot of really good advice. So it does a pretty good, it does a pretty good job. It does a really good job of actually kind of identifying that for you. It is also, and I'm going to go ahead and mute Greg out a little bit because I can hear him.
Muted.
But it also does have scanning. So you do have the ability to go in and do scans for the kind of the signals, find the inventory retracement bars and that kind of stuff. And Rob did a really, really good job of kind of making sure everything was right and exactly perfect. And it's been a very, very popular product. So let me kind of go back into the PowerPoint here. On this particular Rob Hoffman's Pro Trader Pack Elite, normally it's $129 as our normal pricing. Here at the conference, we're going to give you a lifetime access for $99 per month. You can, and in addition to that, we're going to give you a buy one, get 2 months for free to evaluate it. So for about $33 a month, you can evaluate it. To do that, you can give us a call at 800-882-3040. You can visit us online at that website at metastock.com/conf-promo. You can chat with either David or Robert. They're here to answer any questions that you might have. I'm doing my best to keep up with the chats. Oh, lots of thanks for Rob. So if you chat in, you can talk to either David and Robert, and they'll do a great job of answering your questions. They do a very good job. So in any case, that's the Pro Trader Pack Elite. I'd recommend that you try it. And for $99 for 3 months, it's about $33 a month. So it'll give you a good opportunity to kind of go through and learn everything. So I do want to spend just a second to just say a few things about how I think it's going today. I think it's going fantastic. I just think I hope you agree with me. I think the last 2.5 days have been awesome. It's really been great. Steve was certainly a highlight. I wish we would have had a little bit better of a reception from Hima, but that's unfortunate. I'll send you her archive. I think Rob was excellent. It's so good. I love putting these together. We have the ability to kind of put together really, really solid classes. So, and I'd say that I hope you've learned a lot. So, let me know how we're doing. I hope we get a 10 out of 10 at least. So, in any case, we were going to talk a lot about MetaStock right now, and so maybe I won't spend a lot of time on this. I do want to talk
Unmuted
into it. Yeah. Go ahead. I'm not ready for you to introduce me yet. Not yet. Not ready for you to introduce me yet. So just give me a second. I want to talk about our Conference 20 Prime. So if you go to metastock.com/conference 20 Prime, okay, and I'll just load this up real quick. You can sign up for the classes that we're doing tomorrow. We do have Steve Bigalow doing a 90-minute class on his top-ranked candlestick signals. In addition to that, we're going to have Dr. Alexander Elder on, a very, very good technician that talks. Like if you haven't read his book, Come Into My Trading Room, you should. It's very, very good. And then we're going to have Oscar on a little bit later today. He loves to, he's very, very good at annotating charts, putting trend lines on charts, and he's going to talk a lot about how he spots how he draws trend lines and how he does technical formations. So it's basically 4.5 hours tomorrow, 90 minutes per speaker. And normally it's about $600, but we're doing $450 for the conference. So the web address for that is metastock.com/conference20prime. So, and I'll put that back on the slide right here. And not yet either, Greg.
Okay.
I'll let you know when I'm ready. It's time to give out the prize. So I've had a really much easier way to do this, so I don't have to sit here and go, turns out I can just type in this right here, and we can go to 642. So I figured out a trick for Excel to get me there. The winner of this prize is from Taiwan, Gary C. Okay, Gary, I'm going to give you 2 years of Hughes Optioneering Services. It includes a weekly newsletter, a stock and ebook, 3 strategy guides, and you'll also get by email stock and options picks from Chuck Hughes. So hopefully you saw Chuck Hughes's presentation yesterday. He did a really, really good job. But watch your email as we get into next week, and I kind of have a chance to catch my breath a little bit, and I will send you an email on, and we'll kind of help you get set up with that. So let me just write that down. Greg, this is a great time for you.
Oh, now that you've successfully built the suspense as to what I might have to say about you.
Thank you for not scaring me out of my desk this time.
I tried. I don't ever intentionally do that.
No, you didn't. Yeah,
I don't imagine there are many people watching right now that haven't heard of our Jeff Gibby. You'd had to have heard of him or from him. If you've been watching this for the last 2.5 days, he's been our host. Jeff hosts a lot of our presentations, and for a good reason. He's a really good host. He's also very knowledgeable, and he's also very engaging. Jeff has been with MetaStock for 23 years. I always get that wrong, Jeff. Does that sound right?
Let's see. It was, I think it's 25 in March. Okay. I have to look at my LinkedIn profile to find out. It's been a while.
Well, he's risen in the ranks over the years. I think he started in sales, as I recall, and now he's heading up the sales here at MetaStock, and he does a fantastic job. And I've said this before, I'm certain, have we ever actually figured out the top salesperson ever in the history of the company? You've got to be in the top 5.
Oh, I mean, if you spend enough time in a place,
That's true. That's true.
I've probably just outworked everybody at this point, right?
All right. Well, without any further ado, Jeff, I'll let you get going. Thank you so much, and for joining us, folks, today. And Jeff, have at it.
All right. Okay. Yeah, I'm Jeff Gibby. Thank you for that introduction, Greg. I'm getting a little loopy after about 2 or 3 days of this, so but I'm enjoying it. I hope you're enjoying it too. I did start in inside sales about 10 years ago, and then I worked in business development for another 10 years, and now I am in charge of like our US-based partnerships and our inside sales team. So it keeps me busy. I enjoy it. It's a good company to work for, and it's a good product to represent. So I've absolutely enjoyed working here. I've particularly enjoyed the ability that I've had to meet people like Rob and Steve Bigalow and all of the speakers that we've had here, because I've learned a lot. I came in 20 years ago from basically, I guess, the Army Reserves. I'd learned to count pills for a living, being a pharmacy. technician, and then I just started working here because a friend recommended it. I didn't know anything about the market, so I've gone from there to learning what stocks are to having people like Steve Bigalow and Rob Hoffman teach me about the market. It's been a great place to be. So there you go. Probably shouldn't spend that much time talking about me. We have just a little bit about the company. We've been in business since the 80s. I started in 97. So there's the math for you. I've done way too much math today, and but there you go. When I started, we were owned by Reuters. Reuters became Thomson Reuters. Thomson Reuters became Refinitiv. Back in 2013, we purchased ourselves back from Refinitiv, or what was Thomson Reuters at the time. If you're not familiar with Thomson Reuters, they're like $1 billion company. You know, they have thousands of reporters. They have hundreds of news bureaus, and it was a good opportunity for us to work with them because they are literally the go-to place for news and information and stock pricing and fundamentals. If you're a broker or a hedge fund or an institution, it's been a long time since I've looked at their fundamentals, but to give you an idea, back when I did, they were making $19 billion a year, and 90% of that was selling the same data, real-time news, real-time information that we package up and we make available to institutions and hedge funds. It's been a good separation as well. If you've been with MetaStock for a while, you've probably realized there's been a much increased pace of updates and upgrades and things coming out in MetaStock, and it's just because we've been able to really focus in on what we do in MetaStock. So we still have a great relationship with Refinitiv. I think we're lucky because we can actually take all of their fantastic news information. And in any case, that's enough of an overview of the company. I think you get the idea. The one thing I do like to talk about is, the fact that it's been rated #1 for more than 25 years in a row right now. And, I'm proud to represent MetaStock. Not only do I think it helps all of our customers make better trading decisions, I think it also helps me make better trading decisions. And there you go. That's me in a nutshell. So today, what we are going to talk about is some of the things, we've talked a lot about MetaStock. I had Scott come in and do a forecaster demo a couple days ago. Yesterday, we had Kelly come in and talk about how you can use MetaStock to test trading ideas, and scan for stocks, and all that kind of stuff. Today, I'm going to show you three of my favorite tools in MetaStock. And there's a very, very specific reason I like to show you these to you. I do like to show the power tools in MetaStock, but Kelly did that yesterday. The forecaster is awesome, and Scott already showed that. But this one is very, very a methodology that's built into MetaStock. The first thing I'm going to show you is actually going to be the RMO model, which stands for the Rahul Mohinder Oscillator Model. It's a methodology that's built into MetaStock that I really, really like. So I'm going to start there. I'm going to say it's a trend-based following system. So like the trend is your friend, or befriend the trend, or a rising tide lifts all boats. There's a bunch of cliches that go around it. But what I'm going to show you is a system that's built by built to follow and keep you on the right side of the trend of the market. Okay, so it's put together by a gentleman by the name of Rahul Mohinder. Rahul Mohinder, is actually our Indian partner. He basically helps us sell MetaStock in India. Excuse me, just getting a little. I'm not getting verklempt or anything. I'm getting a little. Okay. He's been a reseller of MetaStock for as long as I've been an employee of MetaStock. That's how long he goes back with us. And I've had, just like everybody else that we're kind of talking with and meeting with today, I've had the great privilege of actually sitting down with him, and he comes into the office, and he's a great trader. His main thing that he does, aside from trading, is he does do a lot of CNN and CNBC India appearances, but the main thing that he does is he teaches people in India how to trade. So if you're in India, I know we have a lot of people that are from India, because I've gotten a lot of questions of, does this work with Indian stocks? And the answer to that is yes. But if you're in India, you might want to look up veritechsoftware.com. Rahul does a great job. And the method that I'm going to show you is the very first method that I started to trade with. Okay, he was in one year. We asked him to show us one of the methods that he was teaching to his students. He agreed to do that, and that's how we kind of basically said we want to have this in MetaStock. We made some agreements with him, and we've been putting it in MetaStock since every version since 10. Okay, so a couple questions. Are the recordings available to us, and will they sent, or will they be sent, or is there a charge? I think I actually have the recordings for the YouTube channel right here. Yep. So all 3 of the sessions are available up on our YouTube channel. You can go watch them. They're available. They're totally free. If you're on YouTube, just stay where you're at. That's where they're at. So one thing I would ask you to do is, if you go up to our YouTube channel, like, comment, and subscribe. It helps us a lot, quite a bit. So there you go. Where was I? Okay, yeah. So Rahul Mohindar, our India. The reason I like to show RMO, there's a couple of reasons. Number one, it's objective. Okay. So at no point am I going to say, well, based on how the counting goes today, which we know the counting's done today, here's what we're going to be looking at. Likewise, we're not going to say, well, based on the fact that there's more infections today, this is what we should be looking at. Based on kind of whether or not there's going to be a new stimulus package, or QE4 or QE55 or whatever it happens to be, we're just not looking at that. We're going to be looking at an objective set of rules to help us determine whether or not we should be buying any specific instrument. In fact, I'm going to ask you to give me some instruments, and we'll look at the stocks you're interested in. I don't like to actually go in and select instruments to look at, because I kind of feel like I'm picking the best. We'll just look at a couple using what you want to look at. Okay. The other reasons I like to show it's easy. You know, MetaStock's a huge tool. We've been working on it for 30 years. We've been adding features for 30 years. And one of the things I love about MetaStock particularly is it isn't a tool that you're never going to outgrow by any stretch of the imagination. We've just put too much into it. As you grow as a trader, MetaStock will grow with you. But it is a big toolbox. And, you know, the better you understand how to use it, the more it'll work for you, which is why when you set up MetaStock, we have somebody give you a call and kind of walk you through like how to run scans and how to do tests and, you know, how to do whatever you want to do with it, because we understand that if you understand how to use your tools, you're going to use them and they're going to be useful for you. And it's also helps us keep the MetaStock platform out there. So, it's worked very, very well. Stephanie, our support manager, came up with that as an idea just a couple of years ago, and people absolutely love our white glove installation service. But I'm getting off the point. The other reasons I like this is it uses solid money management. It works on a lot of different time frames, works on a lot of different instruments, which is why I can come in here, not all, but a lot. And the reason I can come in here and actually say, give me what stocks do you want to look at, is because it does work fairly well on a broad instrument of stocks. And it's fairly simple. So let's go ahead and kind of look at some stocks, and I'm going to kind of walk through how this works. Let me go ahead and close this out. I hope you guys are providing me some stocks so that when I look over at the chat and I'm ready for them, I have a few stocks that we can look at. So, but let's go ahead and come into the Power Console for MetaStock. I'm going to come to the Charting tab. We're going to key in a couple of symbols here. Okay. You guys are disappointing me, man. Where's the symbols? So how do you guys want to look at? Let's look at a couple stocks here. Or I can pick some randomly. Really? Okay, bring me some symbols. You guys have been saying symbols all day long. We're going to look at RCL. We're going to look at Apple. Okay. RCL, AAPL.O. Thank you, Kathy. We broke the ice there. MRNA.O. Okay. TSLA. I have to say that I actually have a position in Tesla and Apple right now, if we're going to look at it, and GE. I don't know if I have to say that. Okay, that's plenty. Thank you, guys. Let's go ahead and kind of take a look at these. So we've got, I'm going to take RCL out there. Sorry, Greg. We'll look at Apple, Myrna, Tesla, GE. Okay. What I'm going to do here is I'm going to go ahead and go into the RMO trade model. Okay. And this will just apply all of the indicators that we're going to look at. Okay. RMO trade model. Okay. We'll go ahead and click on open charts. So I've got about 4 of them here, 5 of them. We'll go ahead and open up the charts, and I'll just we'll take a look real quick at them. I'm going to show you how you can use this with the Rahul Mohinder Expert Advisor. So we're getting a lot of alerts. Give me just a sec. Well, that should be okay. I'm just going to come in here. MetaStock does have the ability to pop up alerts. I'm going to turn them off real quick so that they're not popping up alerts for buy-sell signals. And what I'm going to do here is just going to kind of take a look at these charts and kind of take a look at which ones we want to look at. And all of them look pretty good from a high level. Let's go ahead, and I guess we'll start with Apple just because it's right here. And I'm just going to kind of walk you through how to use the Rahul Mohinder oscillator. Again, this is the first system I ever started to trade with. I still use it quite a bit. And it's a trend following system. So the first thing that we want to do when we want to trade with the trend is we need a good way to identify it. And I promised you that we would find an objective way to identify it. So what we want to do first of all, and when I start to talk about trends with the Rahul Mohinder oscillator, the RMO system, is I'm going to be talking about different lengths of trends. The first one I'm going to talk about is primary, or what Rahul calls the primary trend. That's also known as the long-term trend or the major trend. We'll also talk about intermediate, medium-term, and short-term trend. Okay, so but first we're going to start with the long-term trend. And the first thing that we're going to look at is this RMO Rahul Mohinder oscillator right here at the very top of the screen. Okay, and I'm going to go ahead and make it full screen so we can talk a little bit about it. And Frontier says, thank you. I learned a lot today. You're welcome. Thank you for coming. I do appreciate it. What I'm going to do is basically, we're going to talk a little bit about how we use this to identify the trend and how we can kind of make decisions with it. So one thing that you're going to notice is this indicator is fairly bright green. It also is either below 0 down here as a histogram or up above 0. And that's really all you need to be able to look at in terms of analyzing the primary trend. Rahul, when he teaches, he likes to keep things very, very simple and very straightforward. And he says very specifically that size and shape don't matter. Typically, what we're going to be looking at is just whether or not we're above 0 or below 0. So I'm going to go ahead and draw 0 on the chart, or an approximate version of 0. And I'm going to make an assessment that I think you all are going to agree with me right now, that the RMO right now is above 0 and has been above 0 since about March. Okay, so ever since right here, we went from being under 0 to being above 0. And as long as we're above 0, then we're going to say that the stock is bullish. If it's down below 0, we're going to say that the stock is bearish. Okay, so right now, on a long-term basis, we all can see that based on the RMO, at least, that this is long-term bullish. Okay. Now, what that means for RMO is it means that we want to trade in the direction of the trend. So we're not, I'm going to be very specific about this. We're not going to buy just because it goes up above 0, and we're not going to sell just because it goes down below 0. It is a simple system, but it's not that simple. What we want to do is kind of check the temperature. Okay, we're going to look out at the window and maybe see if we need to wear a jacket, or we might turn on the phone. We just want to see kind of like what the atmosphere looks like or what it feels like. And right now, we're going to say it's bullish, and that means we're allowed to go long on a trade, and we're not allowed to go short, and that's all it means. Okay, so as long as we're up above 0, which we've been up above 0 since just about March, we're only allowed to take long positions. We're not allowed to go shorts. And we didn't buy it here where it went from below 0 to above 0. It's that simple. Okay. It's even more simple. If I zoom in a little bit, you'll notice that when this goes up above 0, it gives you a bit of an RMO bullish ribbon here on the chart that just tells you that the RMO is bullish. So since this is fairly simple to read, you can look at the indicator if you want, or you can look at the bullish ribbon down here. It doesn't matter. The assessment's the same. Right now we're bullish, and since it's gone up from 65 to about 110, I think 118, 116. I'm blind in this eye. I can't see out of this eye, so I'm doing my best here. But we've only been able to take long positions during this last uptrend, ever since it went in April from bearish to bullish. Okay, is that clear? Okay, I think it is. Okay. Rahinder says, why is there no commentary for RMO? I'm glad you asked that question. Actually, we asked the same question, I think, between version 15 and 16. Why is there no commentary? And we actually put it in there. So now if you come in here and you go to the view expert commentary, there's commentary. So that's something that we actually recently added. We worked with Rahul Mohindar to give you commentary. So Lynn asks, and Lynn, thank you for coming again today. It's good to have you here. Lynn asks, is there a description for each indicator and its use? There is. There's a couple different places. Like if you're just applying an indicator, you can go to the help file. Since I'm using an expert advisor, you'll notice that we have a full description. So the RMO is a powerful and very popular strategy built in meta. It tells you about the buy setup, it tells you about the state of RMO. So there is a very good description. One of the things that I like to show people that are maybe new to the market is I'll go in and show some of the different experts and how they work and how they explain different things to people, because I think that's really, really helpful for people to learn about technical analysis in general. Okay, all right. Thanks for the questions. Keep them coming if you have them. We'll kind of move a little bit quickly because there are two other things I want to show you about this. But right here, okay, so we're bullish long-term. This is where we left off. The next thing we want to do is we want to make an assessment on whether or not we're bullish short-term. And so if I come in here, and I'm gonna make a couple quick changes to this chart. This is the way it looks, but I do like this to look just a little bit different. And with MetaStock, anytime you want to change something, if you double click on what you want to change, it makes it fairly easy to change. So I just want to change that right now to a line. It makes it easier for me to see the histogram here, and it makes it easier for me to see the crosses, which will be important in a second. The second thing, so I've identified that on a long-term basis, at least, we're bullish. So we're only going to look for long trends. On a short-term basis, we're going to use this little pink histogram, or this, I don't know what color that is, this pinkish histogram to identify whether short-term we're long-term as well, or short-term we're bullish or bearish, okay? And we read it the same way. So if I'm looking at just the current far hard right edge of the screen, yesterday we were bullish short-term, and today we were bullish. Yesterday we were bearish short-term, and today meaning Friday, on the current bar, we went from bearish to bullish, okay? So we want this to match up. If they don't match, if we were looking at this on Thursday, we'd say, well, okay, we're bullish long-term, we're bearish short-term, we're getting mixed signals. Let's go ahead and wait, right? If we're bullish long-term and we're bullish short-term, we can then go ahead and go to the next step, which is to kind of look to structure a trade. So right here, during this whole section here, we'd be looking for trades. During this section here, we'd be looking for trades. If our trends don't match long-term and short-term, we're not going to be looking for trades. We're just going to be waiting. We want to wait because we want to put as many of the odds of having a successful trade into our favor as we can. Okay. How about adding later features to existing RMO? Mahendra, if you have things that you'd like us to add, drop me an email. And we love suggestions. We absolutely do. Okay. All right. Where does the stock symbol show up? Right here. We actually have it right here, AAPLO. Okay. All right. The other thing that I want to point out as we're talking about it is you can look at whether this pink line is above 0 or below 0. We also highlight the bars. So you'll notice we went from bullish to bearish yesterday. Yesterday we had a red bar, or the day before yesterday, Thursday we had a red bar. Friday we have a blue bar. You can that's just indicating what our short-term trend is. Okay, so I can look at the indicators if I want to. I can also just look at the color of the ribbon and the color of the bar. Okay, so every time this is blue, it just means that short-term we're bullish. Every time it's red, it means short-term we're bearish. Okay, and that'll come into play in just a second. We're going to recap the rules real quick. We identify the primary trend. If it's bullish, we're allowed to buy. If it's not, we're not allowed to short in the bullish zone. It's not a trigger. Okay, then we identify the short-term trend, and we want those to match, basically. If they don't match, if one's bullish and the other's bullish, we can still take a trade as long as they match. If they don't match, we want to wait until they do match, okay? Because again, it's about trading with the trend, okay? Raj says, can I install these indicators on my computer? If you have MetaStock, they're included in the computer as well. Mark says, what is the accuracy with the RMO? I don't have an exact number to give you, Mark. I've shown this everywhere. I show it all the time. It works very, very well, but it doesn't work on all of the stocks. We don't have like an actual tester because I'm going to show you a couple of different ways to put in stops, which is important. But it just doesn't have a system tester as part of it because there are a couple of different ways that Rahul does his stops. Okay. All right. Cool. All right, so just to recap, today we had a bullish signal. Today we have a bullish long-term trend and a bullish short-term trend, just starting today. We also have this arrow that appears in the chart, and you can see it if you look right at it. If you look really, really closely right here, there's an arrow right here. Let me explain why that happens and what you do with it. So we did talk about this purple line as being the short-term trend. You might have guessed it already, but this blue line here is the medium-term trend, okay? And generally with the medium-term trend, we don't really pay attention to whether it's above or below zero. What we're looking at in regards to the medium-term trend is we're looking at momentum, or Rahul calls it a shift in momentum or a shift in direction or a shift of force, okay? And all that means if you, I hope that didn't make too much of a noise right there, but all that means is if our stock is going down, our short-term trend is gonna start to go down, right? As well as our medium-term is gonna start to go down, right? If it starts to go back up, your short-term trend will start to go up, but not as quickly as your medium-term trend. So right here, you had a bit of the short-term trend kind of bottomed out right here, started to go up, and it actually crossed above our medium-term trend. And this is a shift of momentum right here. This is what you're seeing. It's a change of momentum or a change of force. When this crosses up above when the short-term trend crosses above the medium-term trend, you get a buy signal on the chart. And you'll see that's exactly what happened right here. Okay, and this is a valid buy signal. There's some stipulations that we want to use with it. But it's a totally valid signal. This is an active signal that we could kind of look to go into the market. And I'm going to go back in time and we're going to talk exactly about how you structure trades out and how you move your stops and stuff like that. But if we're looking at Apple right now, our decision process would be we're bullish long term, we're bullish short term, and we have that shift of momentum or that shift of force. So we go into the next step of establishing a trade. To kind of walk through the whole trade, what I'm going to do is I'm going to go back here a little bit to the beginning of this long trend that we've had. Okay, so in Apple, if we go back to about April, we went from bearish to bullish the very first time. Okay, so here you've got the momentum and the long-term trend being below zero or bearish. We went from where we're looking to take short positions during this small dip to where everything goes bearish long-term. Okay, so let's zero in on this area and we can kind of talk about what goes on and how we use this for trades. So let's talk about this shift of momentum. We wouldn't be that interested in that because even though we were bullish one day, long-term, we were bearish short term, so we would ignore that. We might look to structure a short trade here because we're bearish long term, we're bearish short term, and we have that shift of momentum. We wouldn't probably get into a trade for the reason I'm going to just about to show you. But just a few days later here on April 6, 2020, we get that shift of momentum from the bearish side to the bullish side. We're still not looking at trades yet because again, we're short term, we're below zero, so I want to ignore that. But we do, on the very same day, we get a bullish indication by going from bearish to bullish long term, and we get that shift of momentum on the same day. Okay, so that's happening. We're starting to get a little bit more bullish on Apple right here. Okay, the next day we're still bearish long term, so we're not allowed to trade. Okay, the very next day, what happens is we go from being a red bar to being a blue bar. We're bullish short term now. We're also bullish long term, and we also have that shift of momentum. So when everything lines up like that, what we're going to do is we're going to structure a trade. Okay, to structure a trade, well, that makes it sound more complicated than it is. This, just to be real specific about what we're talking about, this is the day we're structuring a trade right here. Okay, I'm going to go ahead and delete that just so I don't have a lot of lines on the chart. What I'm going to do for that day is I'm going to grab my horizontal line tool right here. I'm going to look at the high. I'm going to look at the high for the day before, and I'm going to say, okay, well, this high is higher than the day before. I'm going to draw a little bit of a line, and I want to see just a little bit of white space there. Okay, this is basically what we're going to use as a trigger to get into a long position. If this goes up above our trigger line, I'm going to go ahead and buy. Okay, so what I'm saying right here is right now Apple's at about, the high was 66. If it goes up enough to break this recent high, I'm going to say that that's the confirmation I need to go long, and I'm going to go long as close to 68.34 as I can. Okay, the other thing that I want to do, and this is where we start to talk about stops, is I want to figure out where my line in the sand is. Okay, so if I'm not right, because you're not going to be right all the time unless you have special powers, if I'm not right, where do I want to call this? Okay, so I'm going to basically take this horizontal line tool as well. Again, remember, this is the day we're looking to go short. There's a couple of different ways that Rahul teaches to play stops. I'm going to show you both, and I'm going to tell you which one I prefer as well. Okay, so the first one is he'd look at the low for the bar, and he'd look at the low for the bar before, and he'd put a stop right about there. Okay, and that's a good way to do it. For me, I like to kind of give it a little bit more room to play. And so what he teaches is to look for a recent support area. And so what I'm going to do, the way I'm going to place my stop is I'm going to take my horizontal line tool right here. Okay, this is where I'm going to buy at. Okay, this is the day I'm making a decision. And I'm going to look for the most recent pivot low. Pivot low is a very, very easy term to understand. It's just a low that's surrounded by two higher lows. Okay, so the most recent pivot low is the support area that I'm going to put my stop under. Okay, so right here, support, this is lower than these two lows. This is a low surrounded by two higher lows. Okay, this is the pivot low I'm going to go with. I'm going to go ahead and just put a little bit of white space under that, and that's my line in the sand. So what I'm going to say is, if I buy this stock and I'm not right about Apple going up, let's say it goes down for whatever reason, what I'm going to do is I'm going to get out at 58.79. Okay, and I like this 58.79 for a couple of reasons. The biggest thing that I've seen in my experience where traders fail is they go in without a stop loss. Have you made a trade where you're like, well, it went down today, but you know, it's okay, it's going to go up, I bought it. So they must have seen that I bought it somewhere, and everybody's going to agree I made the right decision here, and it's going to eventually go up, but it doesn't, right? And then the next day it doesn't go up, and you kind of come in here, and before you know it, maybe you've lost half of your value. Has that ever happened to anybody? It's happened to me, right? The thing is if I know where I'm going to put in my entry, which I think we made the decision that it was going to be at 68.34, okay, and I know that my stop loss is going to be at 58.79, I have a very, very clear idea of what my risk is going to be, okay? It's the difference between 68 and 58, okay? And I'm not making that level up, right? That's the other thing that I think is so nice about this. I'm not deciding based on like how much I can afford to lose or, you know, that kind of stuff. I'm looking at a very specific support area that's been established on the chart and saying, hey, this is my line in the sand. If it breaks this support, I'm going to go ahead and save my capital and trade on a different day. But I can't tell you, we've had sales guys that have realized, well, actually, let's not get into that story because it'll take forever. But like, what we want to do is we want to stay disciplined about our trading. The best way to stay disciplined is to know an exit strategy before you're in the middle of a battle, right? Okay, so we go ahead and buy right here at 68.35 when it happens, and it's a couple days. Okay, we put in our stop loss at 58.79, and we just kind of trade it on from there. So you'll notice we haven't hit, we did go up a little bit, came back down. We haven't hit our stop loss. This isn't a very exciting strategy. I'm going to start to scroll out a little bit. Here's my entry line. Here's my stop loss. And trading shouldn't be that exciting. I think if you're excited about trading, you're probably not doing it right. This isn't really that. I mean, I get happy when I'm trading, especially if I buy something at 68 and it's sitting up around 90. But at this particular point, we do know that we have our stop loss. Okay, and Apple did, in all fairness, had a really good run up from about 68. These are adjusted because we just had a recent split on Apple, but let's just say it went from 68 to 90. That's really, really good. Here, we had a bit of a sell signal. Okay, so when this happens on a chart, I'm looking at the time. I might not have time to show you all three of mine, but if I just show you this, and you start to use, I think you'll like it. So here we had a signal that where we had that shift of momentum, and that happened right here. Okay, it happened because we pulled back in a little bit, and so when this happens, when you have that shift of momentum, you're going to take a look, and you're going to start to pay a little bit closer attention. We stay bullish long term, and we stay bullish short term, and as long as those hold, we're going to stay in this trade. If we get this shift of momentum and things start to fall apart, where you go bearish long-term and bearish short-term, you'll get out of the trade because now your expectations around this stock are changing. But you're going to have stair-step effects. You know, it's going to go up and then it's going to come down. Then it's going to maybe hopefully go up again, right? And that's exactly kind of what happened. Here it went up to here, pulled back a little bit, and started to ride back on. Okay, the whole time we were bullish. The whole time we were bullish. We had confidence that we could stay in this trade. We thought it was going to continue to go in our favor, and it did. Okay. In fact, a few days later, right here, we get that shift of momentum or shift of direction or shift of force into the right direction. Okay. And if this happens to you on a chart and you're looking at it, you can buy more. Rahul says you're totally welcome to buy more if you get the shift of momentum in the same direction. I don't personally do that. I buy them all back here at 58. Okay. But the one thing that isn't optional is you want to look at moving up that stop. Okay. And it's a perfect time to do it because we went up a stair step and then we came back down. We established a new support area. So what we want to do is start protecting the difference between where we bought way down here at 68 and where we're at, which is around 90. So I'm going to go ahead and grab the horizontal line. I'm going to look at where this arrow is. I'm going to look back for my most recent pivot low. Again, a pivot low is just a low surrounded by two higher lows. I'm going to put in a stop loss there. And now it's not a stop loss, it's a profit protection stop. And 87.19 or whatever that happens to be, right? Goes up a little bit, pulls back. Here you have a shift of momentum, you move your stop. Goes up, pulls back a little bit, you have that shift of momentum, you move your stop. And it's very, very repeatable from this point. Goes up, comes back down, hits our stop, we're out of that trade. Okay. Now, let's kind of look at this a little bit quicker. We got in at, where were we down here? 68. We got out at 108. Okay. Is it going back up? Maybe. We just had a signal. We could go ahead and place a thing in there. We'd want to put a stop right about here as well. And maybe it'll continue to go up. But it's a great little system. It allows you to put in stops. It allows you to take good chunks out of the trend all the way. Okay. And I've had a lot of people talk about this, like, oh, you didn't get in at the bottom. How come you didn't get a buy signal at 57? You got a buy signal at whatever, 58, right? Or 68. You didn't get out at the top. You got out at your stop loss way back here at 108. And when people say stuff like that to me, it reminds me of Robert Deal. Robert Deal is a great technician. He's retired. He doesn't do any teaching anymore. But I remember we used to travel around with him and he'd say, you know, bulls will make money and bears will make money, but pigs get slaughtered. What I'm looking for with RMO is I'm looking to find these stocks that are trending really, really well and take good chunks out of the trend while protecting my profits all the way up. And I would make an argument that if we were only looking to go long here between 66 and 130, that would be putting the odds in our favor. Okay, and here, another big bullish run. Not as good as this bullish run we just had, but I'd make an argument that if we were looking to go long from 41 to where it went bearish here at 70, taking just trades and moving stops up and only looking at long positions, that would have been a method that's very simple, that's very understandable, that helps us put the odds in our favor. Okay. Joshua, we are talking about the RMO trade model built into MetaStock. So Ken asks, Raj says, great presentation, good job by MetaStock. Thanks, Raj, I appreciate that. We worked hard getting all of these speakers together. I wanted to say Greg did a fantastic job of putting together all the web content, running the slides with me all day. It's been by about 4 times the biggest event we've ever put together. We've been working our butt to get it together. I'm very happy with how it's going. So, I appreciate the feedback. So, how much is the MetaStock for subscription? So there was a couple more things that I wanted to show you. We're not going to have time today, but that if I just had one thing to show you, that would be it. And just out of the interest of time, we probably won't go trade by trade on a lot of these, but just look at kind of like what we were talking about before, right? Which is this one? I think this is Tesla by the look of it. It's been bullish. It's been bullish since about 47. We're trading up in the 400s during that huge upward 10x increase. We're only looking to kind of take advantage of as much of the stair-step action as we can. So it doesn't work on everything. The nice thing about trading, look at this move right here. Look at this huge bullish zone followed by a huge bullish move. I'd say this one looks a little bit more choppy. Not that you couldn't make money because there was a huge, nice downward trend. It's been a little bit sideways, but I don't know. Probably the other 3 charts are better than GE on this one. So, and that's okay. It doesn't have to work on everything. The nice thing about trading is you can kind of like pick and choose. You can't buy everything anyway. So it does. And it has for probably decades worked on Apple. I remember showing Apple back in California. So it does work on stocks that go into huge trends and just stay in them. So in any case, let's talk a little bit. I was going to talk a little bit about Haguro and the dynamic support and resistance. If you guys want to see that at the end of the day when we have a little bit more time, I'll be happy to show them to you. How much does MetaStock cost? So we have, and thank you for that question. We have 2 versions of MetaStock. We have a real-time and an end-of-day version. Our real-time version includes the real-time data package I was talking about from Refinitiv earlier. It includes like their news and information and alerts. It's a package that they've literally spent well over $1 billion designing, and they support it with thousands of reporters and hundreds of news bureaus. And it basically has information, anything that you want technically, fundamentally, it's going to be in there. So if you're a big news, we have a lot of people that just sign up for the news feed just because it is really, really good. So it includes that. It includes our MetaStock real time, and it's only $250 a month. And the application that we include with it is an institutional quality news feed, and I guarantee that the institutions that are trading with the software are spending quite a bit more. I'm not going to say exactly how much, but $250 a month is how much you pay for that premium quality news service, as well as the real-time version of MetaStock. We also have an end-of-day, what we call the MetaStock DC version. It's only $69 per month. Everything I've showed you today can be done on end-of-day, as well as real-time. So the difference between end-of-day and real-time is one has real-time and one has end-of-day. In terms of scanning, testing, our patented forecaster, everything that we've shown you over the last several days, both versions can do both of it. So our end-of-day version of MetaStock here in the US is $69. If you're over in Europe or India, it's $59, just because we have a full option suite service that comes with the DC. So $69 a month for most of you. And if you're overseas, $10 cheaper. What we're going to do for you is we're going to let you try 3 months for the price of one. So if you sign up for MetaStock today, what day is it? They all blurred together. It's Blur's Day. So Saturday, the 7th of November. So December, January, February 7th. You can, if you buy 1 month, if you pay $69 for less than $30 a month, you can use what's been rated the best software program in its price category for 25 years in a row. If it's helpful for you, you'll be happy to pay for it at the end of that trial. So you can get an extended at MetaStock, you can get that extended trial at metastock.com/conf promo. You can also give us a call. We'd be happy to mail you videos or stuff like that, get you some more information, answer questions. Metastock.com/sales chat. Just checking the time. I don't want to, okay, we do have a little bit of time. So let's take a little bit of some questions here. I would encourage you to do this. I don't think you're going to regret it. It's all the time. It's just such a great software program. There's a reason it's been rated #1. It's a reason the readers of Stocks and Commodities magazine rate it so highly year after year after year. Try it out. You can afford $69. The risk reward is not that high. So in any case, metastock.com/conf promo, 800-882-3040, or visit us online at metastock.com/sales chat. And let's take a couple questions because we have time for them, which is amazing. Wally says, the speakers you guys have invited is phenomenal. Absolutely. Ken says, has the staff gone home for the day? Well, Greg and I are here in the office. Our sales reps are actually working from their home offices. So it's a little bit of a different environment these days. Right now, COVID cases are spiking like crazy in Utah. So they're working from their Corona homes, their Corona offices. So, but they're all here. We have people online. They're available to help you. Please feel free to reach us. And they're going to be here as long as you have questions for them. So they are here. They're at home, but they are here to help. So what do you do with an iPhone? Not too much, Mark. We do support Mac, but it is a fairly intense program, and it does require a PC. That could be a Mac if you have that question, but it does have to have Windows on it, so it does require like some parallels or something like that. Jeff, just a comment. You don't need to answer or comment. James, I'm going to talk about this. MetaStock's data plan is more expensive than some other software such as Vantage Point or TrendSpider. Yeah, I will talk a little bit about that. For end of day, I don't think that's the case. I've seen the pricing for Vantage Point. It's way less expensive. With real time, though, you are getting an institutional quality data feed. You're getting all the news. You're getting a product that they spent about $1 billion on it. And just to kind of give you a reference point on that, James, it's about, I think it's about, and don't quote me on this, but I think it's at least half of what you pay as an institutional or a hedge fund or a mutual fund getting the same level of information. And they're great. You know, a lot of times when you talk about an analysis, garbage in, garbage out, there's tons of like Refinitiv just does such a good job with data. And that's why huge funds and hedge funds and mutual funds are willing to do it. So yeah, it is a little bit more pricey. It's a bit of a more premium product. Give it a try. I think you'll like it. Okay, let's see. How's it different from TradingView? Okay, so I think really where we do well is, and I appreciate you saying you don't have to comment on that. I'm happy to talk about that, James. Thank you for your question. I'd say with TradingView is a great platform for an online platform. They do a good job. There's a couple things that I think MetaStock does right. Number one, you do get our patented forecaster, which Scott showed a couple days ago, and it does a very, very good job of kind of helping you identify those trades, and kind of you just can't get it anywhere. It's patented. The other thing I'd say that we do fairly well is real-time data. So we're not we've looked at HTML5 as a way to kind of deliver real-time data, and we decided that it doesn't work that well if you want to look at a bunch of charts at the same time. And so that's why we haven't adopted an HTML5 model. So I'm going to say that you're going to have smoother experience with MetaStock just because you're not using HTML5. The other thing is is in terms of the built-in systems, there's about 54 systems that are built into MetaStock. Everything's customizable. You know, I might be biased, but I think that I am definitely biased, but I think TradingView is a great platform, and I think MetaStock is the best platform. So, but I think if we wanted to boil it down to a few things, the forecaster is one, the customizability and the fact that it's easy to customize is the second thing I'd say that is our competitive advantage. So thank you for asking that question. I'm not one to go and dog. I think it's a good platform. Try out MetaStock and see if you like it better, because I think you will. Okay. Ken says, do you have the Jake Bernstein methods available on MetaStock? Yes. We talked a little bit about those yesterday. We have them on when Jake was here. They are available. We spent a bunch of time creating them. We just spent a bunch of time updating them towards the end of last year, and they are available. It is an additional cost. It's like $399, but that's a one-time cost, and it has a 30-day money-back guarantee on it as well. So if I was to choose 3 and only 3 features in MetaStock, well, don't make me choose features. It's definitely it's easy scanning. For me, the ability to go in and say, here's 4,300 optionable stocks, which one of these can I ignore and just focus on the ones that I want? That's just like, that saves me so much coffee, and it allows me to find things that I wouldn't normally find. So scanning is definitely number one, the thing that I use the most in MetaStock. I love also the charting and the ability to kind of attach an expert advisor and that kind of stuff. That's very, very useful for me as well. I also like our system tester. We have one of the best system testers. Again, I'm biased. I've worked for this company. I love this company. I've worked here 25 years and 27 years, actually, something like that. I have to look at LinkedIn, like I said to Greg. I'd have no intention of going anywhere. We're all friends, and we love our customers. We do a good job of supporting them. So there you go. Let's see, how are we doing on time? We're on. I use Sterling. One more question. I use Sterling Pro as my platform with my data feed from my broker. Should I run MetaStock and Zenith on a separate PC? That probably won't be required. Usually, it depends on how many charts you want to load. The biggest thing, if you're looking at a PC, the biggest thing you can do, and it doesn't matter if you're using MetaStock or not, get a solid state disk. It'll make a huge difference. That's what we have for questions. Salvador, I see your question here. I am going to answer it, but I'll chat the answer. Again, if you have more questions, thank you for all of the questions too. But if you have more questions that I will get to all the questions. If you want to chat with us, just chat with us at metastock.com/sales chat. Give us a call, 800-882-3040. Just going to do a real quick check here for Steve Primo. Just want to make sure he's here as well, because normally I'm on top of that, but not when I'm talking to. So I do want to reiterate, thank you for the comment earlier. I forgot who it was from, about how good the speakers are today. I appreciate that. I think it's been an excellent session. I think it's one of my favorite, and I've done them for 7 years. So tomorrow, we are going to have Steve Bigalow back. He's going to teach us 90 minutes on candlestick patterns, and he'll do a really, really good job. We're going to have Dr. Alexander Elder. Dr. Elder is one of my favorite technicians. He does such a good job as well. And we're going to have Oscar Carboni on in just a minute, and he's going to talk about kind of how he sees the market today. But he's also here comes one of those alerts for me. He's also coming in tomorrow for the how to draw trend lines and how to spot technical formations. So $600 is what we made up a retail value. We're going to sell it for $450 tomorrow. It's basically 4.5 hours of really good 90-minute sessions. If you'd like to do that, 800-882-3040, or visit us online at metastock.com/sales chat, and we can help you get set up for that. So, and Very quickly, we'll say thank you to Stocks and Commodities for sponsoring the event today. We appreciate that. I very, very much appreciate what they're doing. And I'm going to give away an Altos Trading membership. The Altos Trading membership includes 2 years of their stock signal service. It includes 2 ebooks and 2 courses. And I'm going to just randomly pick someone here just so that we can kind of move on. We are going to give it to Charles B. in the USA. Let's see if I have a state for him. Missouri. So if your name's Charles B. and you're in Missouri, you're probably going to get an email from me unless there's 2 of you. And I'll give you some instructions on kind of redeeming that 2-year prize. Okay. All right. Our next presenter is not going to disappoint either. We've had great presenters all day long. Steve Primo has done a lot of presentations with us. I love kind of his style. He's very methodical. He takes his time. He just does a very, very good job. And so that's going to be my introduction to you, Steve. Let's go ahead and bring you on here. How are you doing?
Here I am. I'm doing great, Jeff.
Okay, good.
Is everything all right?
Yeah, everything's going pretty good today. We had a little bit of everything's been running with only one hitch today. So,
great.
Welcome.
Okay, thank you. Great to be here.
I'm just going to get straight out of your way. Thanks for coming.
Okay, I'll start. Thanks, everyone, for taking time out of your Saturday, and welcome to this educational presentation. Now, today, I want to teach you a really great technique, very simple but powerful, and it's simply, devoted to catching tops and bottoms in all markets. The reason why we're focusing on this today in this educational class is because most of us, myself included, when I first started trading some 4 decades ago, we're all taught to try and pick the bottom and get out at the top and then go short at the top, right? In fact, the old adage goes, buy low, sell high. So we're always trying to buy at these very low areas and sell at the top because we really, want to be able to squeeze every last drop of every big move. And that's all right, but unfortunately, it doesn't always work out that way, right? Let's look at this example right here. Here's a chart, fairly current, in Costco. This is a daily graph. Now, if you're trying to pick tops and bottoms, usually what you want to see is some type of sideways or rangy market. This is the perfect scenario because what usually happens is when you get up to that top of the range, using some type of indicator or tool, you want to sell here, then buy back lower here, then sell again, and then buy it back. Hopefully you can do that. So let's say we have some overbought, oversold tool, okay, that we feel really confident in. Maybe we bought it for $5,000. Maybe we designed it ourselves, but we're going to trade this style. And it gives us a sell signal right here, okay, on this bar. So let's say we go short, maybe you buy the puts, whatever your style is of trading. And as the tool goes into the so-called oversold area, now it generates a buy signal. So you cover your short, right? You make some good money and you decide to go long. Well, it takes a little while, for a little bit, you're actually losing a little money, but then it starts to kick in your favor. And now you've got a nice profit. And now it generates a sell signal. So you're feeling really confident about this method and you feel like, boy, this is just too easy. So you sell your long and now you decide to go short. Maybe you buy the puts, maybe you actually short the stock, whatever you're trading. This could be futures, it could be currency pairs, Bitcoin, it makes no difference. So you're feeling really good about your trading and then all of a sudden this happens, okay? Look familiar? This is what usually happens when we're trading overbought and oversold or top and bottom type methods because they work until they don't work. Now, the good news is I'm going to teach you a technique today. In fact, you'll learn all the rules to this technique so that you can start applying it as early as Monday if you like. Now, this technique using the same chart would not have taken or generated signals anywhere. In fact, you would have not have sold here or bought here or sold again. The very last scenario, instead of selling, you would have actually generated a buy signal and potentially you could have captured 25 points. So I'm going to teach you this technique, which is, in my opinion, the right way to catch tops and bottoms. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading for roughly 43 years now. In a couple of months, it'll be 44 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're wondering what a specialist is, because there aren't a lot of them around anymore, if you ever look at those old pictures of people on the trading floor making these weird hand signals and they're standing around with lots of paper on the floor, well, these were specialists because they made markets, and I made markets roughly in about 50 or 60 stocks. So it didn't mean that they were any more special than anyone else. It just meant that if you wanted to buy or sell a particular issue or equity, like Waste Management, IBM, US Air, these were all stocks that I specialized in. You had to go up to the trader who specialized in making a market in those stocks. So I did this for roughly 9 years on the floor. I traded and made markets through the crash of 1987 and the bull market that followed. I've traded straight up markets, straight down markets, sideways markets. Any system or any method, any technique or strategy you can think of, trust me, I've traded it before. That's probably been around for a long time, just been renamed or rebranded. So in my 4+ decades of trading, I know what works in terms of consistency and I know what doesn't. So there's one other thing I also have learned in my 4 decades plus of trading, is that the only way you can become a consistent trader, in my opinion, the only way you'll get there is by making your own trading decisions. I know we're all taught to follow some guy in a chat room or to follow what they say on TV or some master indicator. But trust me, when you do that, what you're really saying to the markets is, I really don't know what to do. I don't have enough confidence. I don't have enough skill. I don't have enough experience. So I'll take myself out of the game and you tell me what to do. I mean, that's really, in my opinion, a recipe for disaster. Can you think of anyone in any other endeavor or career saying that? Can you imagine an airline pilot saying to the passengers, listen, I really don't know how to land this thing or to fly it. Why don't you tell me how to do it? Or how about a brain surgeon saying, listen, I don't know how to operate here or how to do it correctly. Why don't you tell me how to operate and I'll just take your advice? It would seem silly, right? But this is the way traders trade on a daily basis. We're always looking for some so-called guru or some technique or some news announcement to tell us what to do. All right, that's where we get our signals from. But unfortunately, it really doesn't work that way, because if that works so well, then why has it been estimated that upwards of 80 to 85% of all traders fail? I think it's because of this main reason. We're taking ourselves out of the game. The good news is, what I have done with specialist training is that we provide all our techniques, all of our methods that I've accumulated in over 4 decades to our students. So we teach them this so that they no longer have to rely on anyone or anything else to tell them what to do. They can rely on this education that's taken me decades to accumulate, but in a matter of weeks, even months, you can learn all these and apply them to yourself, your own trading. So for the very first time, you can say, I am in charge of my own trading destiny. That's what we're trying to instill in all of our students. And we have students around the world in over 115 countries and in virtually every state in the United States. So hopefully I can help you today as well. Now, I'm going to teach you a really simple but powerful technique. Now, I say technique because this is not a full-fledged strategy. A strategy comes with entry signals, exit signals, stop placement, money management. This is just a technique for pinpointing high probability setups. But you're going to see how powerful this is, and you'll learn all the rules to this in just a few moments. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, I invite each and every one of you to follow us on Twitter. There's our handle right there. I would recommend copying that down. Every day I post different trading education information, anywhere from signals. Some of our techniques or methods have generated to little bits of financial wisdom I've accumulated along the way. So lots of great free education. Feel free to follow us on Twitter. Now, just to reiterate, as I stated in the opening statements, we are first and foremost an educational company. That makes us a little bit different from other webinars you may have attended. This means that we are not going to ever tell our students what we think of the market. We're never going to tell them what to buy or sell. We're never going to tell them what we think the best time frame is, or the best market to trade, or the best stock to buy or sell. Because once again, that would be doing our students a disservice by taking them out of the game. You see, a good mentor does not trade for you, but he teaches you how to trade. So that's our goal, to teach you how to trade with the specialist edge. Now, when I was first struggling some 4 decades ago, when I was first trading, these are the same things my mentors taught me, and they have sustained me, all of these different edges and tools and strategies have sustained me now for over 4 decades. So hopefully they'll be able to do the same for you. Now, I know we are probably going to get a lot of questions. I like to do things a little bit differently. I like to take the questions at the end. So if you do have a question, please, there's a little box I have to open up here. I won't even open it up till the very end. So kindly wait till the very end, probably the next 45 minutes. I promise I'll get to each and every one of your questions. And if you wait at the very end, most of your questions will be answered anyway, sometimes on the very next slide, okay? All right, with that stated, let's begin today's educational presentation. Now let's go back and talk about how most people trade tops and bottoms, and myself included. Remember, I did these same things myself when I first started trading. And so I'm not trying to be arrogant or condescending. I did the exact same things. So I know what probably a lot of you are either have gone through or are going through right now. All right, let's go back and look at that chart of Costco, okay? This is a daily chart, and we're using this for educational purposes. Once again, if you're trying to trade tops and bottoms, usually you want some type of sideways or range market. Now, this is what usually happens. You want to pick some type of overbought, oversold tool. This can either be an oscillator that generates these areas. It can be some tool that you've purchased. It could be something that even that you've come up with yourself. But it has to tell you when something is too high or too low. All right, that's usually the way we apply these things when we're starting off picking tops and bottoms. So looking at this, here's your standard overbought area. This is a standard stochastic indicator that I took from the platform, from MetaStock, and it's just, you know, I haven't altered it or edited anything. It's just the standard generic version of a stochastic tool. Now the red line is the stochastic, and when it crosses below its moving average, that most likely, once you've gotten into the overbought area, is a sell signal, very generic sell signal, very generic way in which to trade this. So let's say you're just using that, and it generates a sell signal. So you sell on the close there. And in the next week or so, after you're following the oscillator, it goes into the so-called oversold area now. And now you wait for the oscillator once again to cross above its moving average, as it does right here. And you buy back what you were short. And now you want to go long. If you're a more aggressive trader, you want to switch back and forth. So you have a nice trade there. In fact, I think you probably made about a good 10 points in about a week. Not a bad little trade. So you decide to go long, right? Now, for the first week or so, not much happening. In fact, you're experiencing a loss for a couple of days. But remember, we're tracking the oscillator, and the oscillator is not making lower lows. So we're doing all right. And ultimately, it starts to go back into the so-called overbought area. So we're feeling good about ourselves. We've got a nice little trade going on here. We wait for the oscillator to cross below its moving average, and it does it again. So now we sell what we bought back here a couple of weeks ago, and we've got another 10-point gain. Not a bad little trade. So we're making like 20 points in 1 month. We're feeling good about ourselves. In fact, we think if we keep doing this, we're going to retire in about 6 months, right? So now you decide to sell. In fact, you're doing so well, you feel so confident, you may even sell a little bit more because you feel good about yourself. And then this happens, all right? Look familiar, all right? Now, all of a sudden, that profit you had of about 20 or so points is totally gone. You've given it all back. And you say to yourself, wow, what happened? This was working so well. I had a couple of good trades here, made 20 points, and I've given it all back in one trade. But you say to yourself, you know what? I'm still in the so-called overbought area. And look at the oscillator has gone back up, and now we're crossing over again. So I'm going to do what we call doubling up. I'm going to sell twice as much. After all, I don't need for it to come down that much. If it just comes down around here, I'll break even, and I'll be back in the positive column, the plus column, okay? So you sell some more, and then this happens, all right? Now, you not only lost everything you made, now you're in the loss column. Now you're losing money. Now you're probably hiding your account statements from your significant other, and you're saying, boy, how am I going to get out of this? Do I triple up, or do I just get out with a major loss here? What do I do? This is the way most people trade, myself included. When I was first trading on the floor, I was taught you always sell if something is overbought. You always buy when something is oversold. But I continued to go through this process. Sure, I would have a couple of really good trades, regardless of what stock I was trading in, and then I would give it all back, usually on the very next one, okay? And then I would go back in the loss column, take me a while, I'd get back on track, and I'd start to feel good about myself, then I'd give it all back, okay? This was extremely frustrating. I was lucky enough to have some mentors on the floor. They were specialists themselves who had been trading roughly about 40 or 50 years each. and they saw how much I was struggling. And I remember the first thing they told me after seeing me trade and asking me what was my style and what was I usually doing. They said, Steve, the first thing you have to learn is that there is no such thing as oversold or overbought. And I had a real difficult time grasping this concept. There was no way I could fully understand this concept because I thought, wait a minute, I've always been taught if something is too high, you've got to get out. And if something is too low, you've got to buy it. But after I, listened to them, I said, okay, well, I guess you guys are right. You know what you're talking about. And then I went back to my old style of trading. And guess what? For the next couple of weeks or month, I couldn't make any more gains, and I kept losing more and more. So finally, I said, okay, I'll accept this concept. There is no such thing as oversold or overbought because things will go up as high as they want and they'll go down as low as they want. There's no ceiling. We can see the markets just keep going as higher and higher, and we can see markets go down to zero. We've seen that before, Enron, other stocks. So there is no such thing as oversold or overbought. So as soon as I grasped that concept, I said, all right, if there's no such thing as oversold or overbought, then how do you trade and how do you pick tops and bottoms? And they said, Steve, it's really easy. The right way to trade oversold, overbought markets is simply to go with them. And I said, to go with them? What the heck does that mean? What do you mean go with them? Well, this is the technique they taught me, and this is the technique I'm going to share with you today. Remember, you're going to be able to start applying this as early as Monday if you like. My only suggestion is to please paper trade this first, because most students who start trading this too soon will most likely lose money because they jump in too quickly. They don't understand the rules. They don't really understand how to protect themselves. So please practice with this first to see if this is really meant or suits your trading style, okay? All right, so here's the technique. Let's go through it step by step, all right? Once again, let's look at our old chart of Costco right here, coming into October. All right, the first thing they said, the first step is regardless of whatever market you're trading, it can be a daily bar of stocks, can be a weekly bar of currency pairs, can be a 5-minute chart of the E-mini. It makes no difference. But the first thing you have to do is to apply the 50-period simple moving average, okay? And we call that the buy-sell line at specialist trading. And someone says, well, why would you call that the buy-sell line? Because the minute you apply it, you have to ask yourself a question. And that question is this: where is price in relation to the 50-period simple moving average? Okay, I'm going to say that again because it's so important. Always ask yourself, regardless of what time frame, regardless of what market, where is price in relationship to the 50-period simple moving average? Now, in fact, I would suggest writing that down on a Post-it and posting it onto your computer screen, asking that before each and every trade, before you pull the trigger. Because if price is below, then you're in an overall downtrend and you're only going to be a seller. You will not buy anything and try to pick a bottom. If price is above the way it is right now, well, then the overall trend is up and you will only be a buyer. You will only be in sync with the overall trend. You will not try to sell anything. Okay, now we go on to the next stage. What we want to do is apply some type of so-called overbought, oversold tool, as we see down here. Here's our old friend, the standard stochastic oscillator. Remember? Now, I don't want you to think that, well, so Steve says this has to be a standard stochastic oscillator. What are the settings? It makes absolutely no difference, okay? It can be an RSI. It can be something you've come up with. It could be something that you purchased from another educator. It could be based off the full moon. It makes no difference because what we're going to be doing is exploiting the so-called overbought, oversold areas. Because remember, there is no such thing as overbought, oversold. So all we want is something that tells us we're in a so-called overbought, oversold area. Okay, so since we are above the 50-period moving average, we want to identify the so-called or traditional overbought areas because we're going to exploit them. All right, so this is where we are in this threshold here, I believe is 80. Once the oscillator goes above here, we're in so-called traditional overbought areas. All right, now the next step we want to do is we want to identify pivot highs that were generated in the so-called overbought areas, like right here, okay? So what exactly is a pivot high if you're not familiar with that term? Here's a pivot high. It's a 3-bar pattern, okay? Bar 1, 2, and 3. But what distinguishes this pattern is that bar 1 makes a high, bar 2 makes a higher high, and bar 3 makes a lower high. So you have this type of an arrowhead connecting the highs, okay? So we want to identify these pivot highs that were only in the so-called overbought area. All right, so we have the so-called overbought area right here, and here we have the pivot high, 1, 2, 3. So we're going to buy when price trades above that pivot high. You notice I did not say when price closes. It just has to trade there, intrabar. That's all, okay? And remember, this is a technique. And a lot of you are saying, well, Steve, where exactly do I buy? 1 tick above, 1 pip above, a point above, and where do I place my stop? Where do I place my exit? Remember, this is a technique. A technique just puts a spotlight on a high probability entry area. We're not giving you a full-fledged strategy here, but we want to show you how powerful this is. So here's where you would enter. Once price trades above here, provided we're still above the 50, this is where you want to enter. So it took a couple of days until we finally did enter, and you notice we didn't close above here. This is a down day. We entered, and look at, potentially could have captured 25 points. Now, some of our students trade this, and they take a couple of points, they say, thank you very much, and they move on to the next one. Others try to get as much bang for your buck and say, I'm staying in much longer. I'm trying to get more using one of your exit methods, trying to get closer to 50 points. It's entirely up to you. Why is it up to you? Because remember, as I stated in the opening statements, our philosophy is that you should make the decisions, not us. We're never telling you where to buy, where to sell. We're never telling you the exact price. We're giving you all these different variables and all these different opportunities to do it. But ultimately, it's you who have to make the choice. In other words, say you wanted to learn how to swim because you wanted to be in a swim meet and you wanted to learn some edges to make you faster. Well, if I were teaching you how to swim, I can give you some edges on how to swim faster and little techniques I've learned. But ultimately, you're going to have to swim in that race, right? It's not me. It's the same way with trading. I can give you different entry, different exit points, different stop placements, but ultimately, it's you who have to make the decisions. Trading is no different from any other endeavor. You have to be in charge of your own trading destiny. All right, let's look at another example here. This is a little bit more advanced, but you'll see this along the way, so I wanted to point this out. All right, once again, kind of going sideways, down, up, down. First thing we do, though, is apply the 50-period simple moving average. All right, now in this case, it's a little bit hard because we're above, we're below, we're back above, we're back below. So in this case, what we want to do is apply our overbought, oversold indicator, whatever we're using. And then we're going to ask ourselves, where is price in relation to that? But once we've applied the overbought, oversold. So here's our standard stochastic. And remember, it doesn't have to be the stochastic. I know this is probably going to be the most prominent question I'll get, because whenever I do this presentation, I always get that question. Well, what are the settings? Where did you find that? Where? You can use anything that tells you something's overbought, oversold. Makes no difference. It can be the RSI. It can be something you've come up with, okay? Once again, it could be the tides of the ocean. Makes no difference. All right, so as we see here, we're going above and below, but look at the oscillator. It hasn't given us a clue as to something being overbought or oversold. So there's no real need to know if we're above or below yet until we generate a so-called oversold area right here. So now that we see the oversold area, where is price? Price is below. So now they're in sync, because if price is below, we're only going to be selling. And if we're going to be selling, we're going to be exploiting oversold areas. Why? Because we know there's no such thing as oversold. So we're going to be exploiting that. Now, in this case, we want to turn things upside down. Instead of looking for a pivot high, we're going to look for a pivot low. So identify the pivot lows that were generated in this so-called oversold area. So pivot low is this 3-bar pattern, but now we have a low, bar number 1, bar number 2 creates a lower low, and bar number 3 creates a higher low. So we're not so much concerned about these highs. We're concerned just with the lows, that they create this type of a V pattern, okay? So we want to identify those that were generated in the so-called oversold areas, and we have one right here, a low, lower low, higher low. We're not concerned with where the highs are. So what does this tell us? Well, we go on to the final rule. We can sell when price trades below that pivot point low. So this is where we can go short. Now, if price went back up above before we went short, then we would negate this. All right, but price continued to stay below the 50. So 2 days later, we got short. And remember, once again, you see where we closed? We closed higher. This is where students usually, they say, hey, Steve, this doesn't work. I sold, and then it closed higher the next 2 days. That's okay. Remember, in the course, we teach you stop placement, exit points, but the entry point just has to be somewhere below that. It just has to trade intrabar. It does not have to close there. So even though you experience a couple of days loss, Look what ultimately kicked in. Potentially could have captured 17 points. Now, this is the thing that my mentors taught me and that I always teach my students, is that trading is extremely simple. It really is. It's the trader who makes it more complicated than it has to be. Now, do you notice I didn't look at a ton of indicators? Do you notice I didn't even involve or require any fundamental news? Didn't look at earnings? Didn't look at any news events? Didn't have to look at a higher time frame to determine what this time frame was doing? We love to overcomplicate our trading because for some reason we've been taught that the more complicated something is, the more requirements we can pile onto our trading plan, the more valid it will be. Myself included. I thought that too. You should have seen my screen when I was on the floor of the exchange. I had like 20 indicators plotted. I was looking at every news service. We didn't have the internet then, so I couldn't be in a chat room or a trading room, but we had newsletters. So I subscribed to every newsletter at the time. I waited with bated breath with all the earnings announcements, and I couldn't make a dime. It wasn't until I started to release those things and to simplify my trading that I started to become consistent. So this is our philosophy. We always tell our students it's the easiest thing in the world to overcomplicate your trading. Anyone could do that. It doesn't take a lot of character to pile on more and more things on your trading plan, but it takes a lot of character, and it's very difficult to simplify things, because when you simplify things, you have to have the courage to let go of so-called traditional wisdom that you've always been taught is supposed to work. Remember when my mentors taught me that there's no such thing as overbought, oversold? I had a very difficult time letting go of that concept. But once I did and I simplified my trading, that's when I started to get on that road to consistency. So this is our philosophy. This is the core of our philosophy, at the core of all of our concepts, is to keep things as simple as possible. All right, so now that you understand the technique, now you understand how to apply these rules and how you're going to practice this. I'm sure you're probably looking at setups right now on your charts. Let's look at some more examples so you can get a better feel, okay? All right, here's a chart in BBBYO, okay, Bed Bath & Beyond, all right? Now, first thing we ask ourselves, where is price in relation to the 50-period moving average? Well, going back to June, price has been above. So you knew well in advance that we were in an overall uptrend. There's no reason to look at any earnings, news, listen to any guy in a trading room. All you had to do is apply this back in June. You said, listen, I'm just going to buy. I'm not going to buy at the market. Obviously, I have to apply some structure, but I'm not going to look at this from a shorting point of view. Sure, you could have had some areas to short, and then you would have had to been quick, because look what happened. Weeks later, you're making new highs. Much easier if you just go with it. So we know the overall trend is up, right? Okay. Now, second thing, now that we know the overall trend is up, we're not going to sell. We're just going to buy. So we're going to exploit the so-called overbought areas right here, circled in green. This is where the oscillator told us we're in an overbought area. Now, we know there's no such thing as overbought. Look at this area right here where it was overbought. What happened when the stock was trading down here? What happened to the overbought? It's still overbought. All right, so we want to identify the pivot highs, which are right here, the only pivot highs that were created in the so-called overbought areas. And once we trade one tick above, you could have purchased and potentially captured 25 points if you purchased the very first one. And remember, we're not talking about stop placement. We're not talking about exits. We're just saying that potentially if you held on, you could have potentially grabbed 25 points in roughly about 5 months. Here's another example, all right? And CVX, Chevron. All right, where is price in relation to the 50-period moving average? Price has been below coming into November. Now, look at these so-called oversold areas right here. It was oversold right here in August. All right, but guess what? It was really oversold here in September. And if you thought it was oversold there, it's really oversold here in October. Do you see how there's no such thing as overbought or oversold? We're going to exploit those things. So every time we find an oversold area, we just identify a short-term pivot low, and we want to go short once we trade just below there. Had you taken this very first setup, which we suggest to our students, that's where you get the most bang for your buck on the very first one, if it works out okay, well, potentially you could have captured 18 points in about 2 or 3 months. Here's another example. Do you think you would have done well shorting Duncan all the way up? But that's the way most traders trade. Why? Because they see all these so-called overbought areas. You got to sell it, right? What happened to the overbought right here? Well, it went even higher. If it was overbought here, it's really overbought here, then really overbought up here. If you had simply used this technique and identified the pivot highs, you could have purchased right here in August Had you held on, potentially could have captured 32 points coming into November. Here's another example. This is in VLO, Valero Energy, okay? Now, we were originally above the 50-period moving average right here, but then in July, we crossed below, all right? So originally, we were looking for so-called overbought areas because we were going to exploit that. And here we had a pivot high, but we never traded above that. And once price crossed back below, now we are changing the way we look at the market. Now we have a more seller's bias. We're not going to think of buying anything because now we're below the 50. You see how beautiful this simple technique is? If price is above, you're a buyer. Once price goes below, you're looking at things with a seller's bias. We simply find the pivot lows. Look at all the pivot lows that were created in the so-called oversold areas. Taking the very first one and holding on till November, potentially could have captured 20 points. Okay, let's look at RUN, Sunrun, okay? How well do you think you would have done trying to short this? Okay, not very well, right? You would have had to been very quick shorting it right here, shorting it here, because the sell-offs only lasted 3 or 4 days and it went right back up. If you went with the flow, you could have potentially captured 45 points using this technique I taught you coming into October. All right, here's a great example of how the 50-period moving average tells you what it wants to do. How there's no reason to look at fundamental news, in my opinion. There's no reason to look at earnings. There's no reason to listen to some guy in a chat room. There's no reason for the pilot to try and listen to the passengers to tell them what to do. You're in charge of your own trading destiny. How do you find out what the market wants to do? The first thing you do is apply the 50-period moving average. Now, originally we were above, but right here we started to oscillate above and below, and now right here we are full-fledged below the 50. So we identify the so-called oversold areas. Here's an oversold area right here. There's the pivot. Now, as long as price didn't go back above the 50, we keep that entry point in mind until about 2 weeks later, we sell. And look what happened a week or two later, 50 points to the downside. Now, most of our students are amazed when these things happen. They say, well, how did you know that? Did you know that they were going to come out with some bad news or something? And we said, no, news is not required in any of our methods. I stopped looking at news 4 decades ago. And if I'm still here trading on a daily basis, I'm living proof that you don't really need to look at news if you don't want to. I'm still here. So why is it required? Remember, it's the easiest thing in the world to overcomplicate your trading by applying more rules and requirements to generate your signals. It's the most difficult thing in the world to simplify your trading. But once you do, you start to see setups like this. All right, let's look at this again, and let's take this step by step at this setup in Align Technology, okay, ALGM. Right here, this was in April, we were below the 50. In the first 2 weeks of May, we had consecutive closes above. So at this point, in May, you knew right then, not from the earnings, not from what somebody was saying about the economy, not from the presidential election and where you thought they were going to go, not from some ton of indicators that are all supposed to line up. Just from the 50-period moving average, you knew that you had to look at this from a buyer's perspective. That's all, okay? And once we know that we're going to be a buyer, we apply some type of overbought, oversold tool. So what we want to do is to first apply the stochastics. Remember, it can be anything that has a so-called overbought, oversold area. Now we simply identify these overbought areas. We look for the short-term pivots. And once we trade above, had you taken this very first signal here in May, potentially coming into November, you could have captured 240 points, okay? All by just being in charge of your own trading destiny, by you making the decisions. This is how simple it is if you learn how to listen to one thing, the market you're trading. All right, let's look at some other markets, some other time frames, because we know not everyone just trades stocks, not everyone just trades daily bars. Here's a weekly chart of NIO, N-I-O, okay? Same concept applies. We apply the 50-period moving average. Price is above, going all the way back to April, May. So we apply the oscillator. Here's our overbought area. There's our pivot right there. You could have purchased this in August and potentially captured 25 points. If you didn't feel comfortable about that setup, well, here was another one that was just last month. Could have potentially captured anywhere from 10 to 15 points coming into this month, okay? It's the weekly chart. Here is a 4-hour chart, an hourly chart of the Swiss franc, all right? Do you think you would have done well trying to pick a bottom in the Swiss franc here? I don't think so. If you had just simply applied a 50-period moving average to this hourly chart, you would have known to be a seller or look at things from a seller's point of view. But we're not going to just sell at the market. The 50-period moving average just doesn't give us license to sell at the market. We have to add some structure. So we exploit the so-called oversold areas right here, right here, right here. We identify these pivots, and once we trade below, you go short. Had you taken this very first setup here just about a couple of days ago, well, that was a nice 100 pips you could have potentially captured in just a couple of days. That's roughly $1,000 per unit if you had held on. Lastly, let's look at a 30-minute chart of the E-mini futures, okay? This is the market of my choice. This is going back to November 2nd. This was just the beginning of the week, all right? This is the way usually traders look at the markets and say, gosh, I missed this uptrend. How come I didn't know this was going to go up? Well, no one knows if something's going to go up or going to go down. But once it is established in an overall uptrend, you have a really nice edge here by adding the 50-period moving average, because you knew well in advance, way down here, by consecutive closes above, this was on the 2nd, that the market wanted to go higher. You didn't have to listen to anybody tell you what the market was going to do. You didn't have to wait for any news. All you had to do was look and see where price was in relation to the 50-period moving average. You have to ask yourself that question. And once you know whether you're going to have a buyer's bias or a seller's bias. Now, if you're going to use this technique, which is just a technique, now we want to identify the so-called overbought areas, because we're only going to be buyers above the 50. So here are the so-called overbought areas, because we know there's no such thing as overbought. Because trust me, if we were overbought here, we must be really overbought up here. It just doesn't work. There's no such thing. So you identify the pivot highs, since we're going to go long. And here we are right here. There's a pivot highs in the so-called overbought areas. And once we trade above, had you taken this very first one on the 2nd, potentially if you had held on, you could have potentially captured 230 points. That's over $11,000 per contract if you held on for about 2 or 3 days. Not a bad little profit, right? If you held on, just holding on to one contract, okay? All right, now I want to give you a homework assignment. I bet you didn't think you were going to get homework. I thought you're saying to yourself right now, hey, I'm just coming to a free webinar on a weekend. I didn't know I was going to have to do something, but it's simple. Don't worry. And here's the homework assignment. Based on the technique, remember, this is not a strategy, it's a technique. A technique simply highlights a high probability entry point, either an entry to go long or to go short. So based on this technique that I just taught you, I want you to take a look at Costco, okay? C-O-S-T, and tell me if you would have been a buyer or seller of this stock these past 4 months, okay? While you're busy opening up your charts, looking to click on Costco, guess what? I can take the hard work out of it for you. Here's a chart in Costco with that stochastic oscillator, all right? And what's the first thing you do? You ask yourself, where is price in relation to the 50-period simple moving average? That's your homework assignment. I bet you can almost answer that right now, right? This is how powerful the markets are. Remember, it's the easiest thing in the world to overcomplicate your trading. It is the most difficult thing in the world to simplify it. But once you do, you're in for the ride of your life, because you're going to see how it is to be in charge of your own trading destiny. All right, let's recap before we go into question and answers. As my mentors taught you, I'm teaching you today. Or as my mentors taught me, I'm teaching you today. Remember, you have to grasp this concept. I know it's difficult. It took me a good month to grasp it, but once I did, my trading turned around. And that concept is this. There is no such thing as overbought, oversold. Look at any chart. Look at any market. It makes no difference. Markets will go up as high as they want, regardless of time frame, regardless of what they're based on, or they go down as low as they want. They can be overbought for weeks, months, years. Same thing with being oversold. Once you finally grasp this concept and say, you're right, boy, there's enough evidence in the market as of late. I mean, we just keep going straight up and straight up. Then here's what I want you to apply. Never, ever try to pick tops and bottoms. Remember, trading tops and bottoms will generate winners every once in a while. And there'll be some really nice winners. You'll think you hit the jackpot and you're saying, what does this guy Steve Primo know? I mean, I've been doing great. But just like the slot machines in Vegas, they're designed to give you those winners every once in a while, but they're designed to have you stay there, because if you stay at the slot machine long enough, they know you're ultimately going to give it all back. That's just the way it is trying to pick tops and bottoms. I take it from my own experience. I used to trade this way, and I would have some phenomenal winners, and I would have this false sense of security thinking I'm back on track. And then a week or two later, I'd give it all back. I knew tons of traders who made relatively, really nice little gold mines here trading this way. And not one of those traders I knew on the floor is trading today because they gave it all back. Now ask yourself, before you ask me questions, do you think this technique could have helped your trading this past year? Now, we've only got less than 2 months left to go. Most of us make promises at the beginning of the year where we have all these goals and wishes and dreams of where we want to finish the year. And most likely, the majority of you are nowhere near where you had hoped you had been in January of 2020. Ask yourself, do you want to take your trading to the next level? Okay? Now remember, this is just a technique. Well, we have a great offer today with points to remember, though. Remember, this is not a complete strategy. The offer we're going to share with you today actually is a strategy. Why? Because with a strategy, you need to know about entry signals. You need to know about stop placement. You need to know about exits. Where are we going to exit on some of these? And lastly, you need to know about money management. So these are extremely important things to remember. So here's our Trading Conference 2020 attendee discount. We're going to offer you strategy number 4, all right? Now, we're going to give you instant course access, and you're going to get all the entries, exits, and stops, upwards of 7 of those, okay? The complete course rules. In fact, take a look at this example here. This is based entirely off different rules from the technique I taught you, because strategy number 4 is a pattern recognition strategy. It's designed to catch momentum. It's based on a few of the rules of that technique I just shared with you, but they're not exactly the same. There's a lot more detail here and a lot better consistency. For example, let's look at this older chart here in PDD. All right, the pattern was identified here, and look what happened. Strategy number 4 generated a really nice buy signal. So we're going to throw in strategy number 4 with this great offer, but we're not going to stop there. We're also going to throw in a completely different strategy. This is strategy 3A. Now, when I first started teaching this strategy years ago, we designed it just for the E-mini traders. But guess what? After years of our traders trading this, they started to use it on stocks, on currency pairs, on futures, as well as Bitcoin or commodities. And they say, Steve, this works just as well. It's a continuation method, different from a pattern. And it does this by identifying these signals using a unique Bollinger Band setting. You're going to get all the entry rules and all the exits and stop placements to this as well. Let me share with you how different this is. This is a strategy 3A example. Now you see, once the signals are generated in this older chart of CGC, they're different from what we generated in strategy number 4 or what we generated in the technique I shared with you, okay? So this looks for really strong trends to jump in while the trend is underway. So we're going to throw in that strategy as well, the complete course rules for entry, exits, and stops. But we're not going to stop there. We have some extra bonuses for all the attendees today. In fact, we're going to throw in 5 Trading Conference 2020 bonuses. Bonus number 1, you're going to get the strategy add-ons for MetaStock for both strategy 4 and 3A. These are the add-ons that automatically generate the buy and sell arrow, so you'll know exactly where the signals are that's generated. This is a $1,900 offer, okay? We're also going to throw in bonus number 2. This is our Secrets of a Stock Exchange Specialist course. This is a 3-hour video seminar valued at close to $1,000. Some years ago, I was asked to be the head speaker at a conference in Colorado. And I spoke there, and I gave a lot more different ways to trade, a lot different edges. And I spoke for 3 hours. This is a 3-hour recording of that video seminar. So lots of great preliminary edges and ways in which to trade here. Bonus number 3. This is a $50 value. This is the PDF version of my Secrets of a Stock Exchange Specialist book. Now, I wrote this book, and it highlights and goes into detail what it was like to trade during the crash of 1987 on the floor. In fact, I take you through a trade-by-trade account of how I actually went through that market. So this is a great rendition of the 1987 crash. This is a $50 value, roughly. We're throwing this in as well. And lastly, or I should say, second to last, bonus number 4, this is our Secrets 2.0 course. This is where we take it up a notch to an advanced level of giving you many more different edges, many more different techniques and methods in which to advance your trading. This is a nearly $1,000 value. And then lastly, scanner capability on MetaStock to identify these strategy setups. You can scan for strategy 3A and for strategy number 4. This is a nearly $500 value. We're throwing all this in along with strategy 4 and strategy 3A. So this is our Trading Conference discount. And remember, along with all of this, you'll get educational correspondence, all right? You'll get my personal email. You can contact me whenever you'd like. If you sign up today, you can send me an email in a couple of hours if you like, and I'll answer it for you, okay? This is how we really give a lot of attention to detail in terms of educating you. We are first and foremost an educational company. So you can send me questions and just different ways to verify your work by sending me snapshots, and I'll get back to you as soon as possible through our educational correspondence. All right, let's break this down. Normally, this would cost you over $4,400. All the bonuses, the 2 strategies, all this included. We're going to discount that for a limited time only down to $297, okay? Now, this is over $4,100 savings. Think of it, $300. We're less than $300. I would almost venture to say that most of you who are having trouble with your trading this past month lost way more than $300. So for less than $300, you could have nearly 4 decades of training, of methods, of techniques, of educational correspondence right there alongside of you, trading alongside, teaching you how to take your trading to the next level. As we always tell our students, a year from today, you will have wished you became a member of these courses. Trust me, you don't want to be where you are right now a year from today. If you're struggling, if you're having difficulty with your trading, I know what that is. I've gone through that. It's extremely discouraging and very depressing because you put in a lot of hard work, and on top of that, you spend a lot of your hard-earned money, and you're not seeing the results you really thought you would get. Take charge of your own trading from someone who's been trading for over 4 decades and for someone who will be there with you every step of the way. You want to finish 2020 strong, and you want to start out 2021 strong. For less than $300, you'll have over 4 decades of information right at your fingertips, along with your mentor through personal correspondence. Here's how to take advantage of this. Contact my sister site. That's Pro Trader Strategies. They help me develop my courses. They're in charge of all the discounts and the pricing. I would suggest calling them directly. They have trading consultants manning the phones right now. You can call them directly at area code 310-598-6677. They would be more than happy to answer any of your questions concerning pricing, concerning the platform, anything with our add-ons on MetaStock. They'd be more than happy to do that for you, and they would be more than happy to take your order over the phone if you decide to join up and be a student of mine, okay? So I'm going to leave all this information up here. Now, that link you see at the very bottom is the link that will take you to the sign-up page if you'd like to sign up online. It's not a live link, but I believe they're going to be posting a live link for you, and they'll have that for you readily available. But you can copy and paste that onto any browser and go to the live link, and you can
I put in a live link that they can click on in the chat, and we'll put one up in the YouTube channel as well for you.
Okay, great. Thank you, Jeff. So there you go. It's easily accessible right there. Or if you would like to speak to someone on the phone, once again, I suggest calling 310-598-6677. I think we have about 5 or so minutes left for questions. So as I promised, I'll get to them. Let's see. Are these daily timeframes? Yes, they are. The beginning of the presentation was based off daily, but if you remember later on, I believe I showed a weekly bar of NEO. I showed a hourly bar of the Swiss franc and a 5-minute chart of the E-mini future. So as I said earlier, it actually makes no difference what market or what time frame. You can apply all of our methods to any market and any time frame, okay? Let's see. Is there an add-on for MetaStock? Yes, there is. And so I would contact Pro Trader Strategies. They can help you with that, and they can set you up with that. Mark is saying this is simple. Yes, it is extremely simple. And remember, once again, that's our credo. We really want to make things simple. It doesn't matter. Now, I've been trading for 43 years now. We tell all of our new students, we say, listen, it doesn't matter if you've been trading for 40 years or for 40 minutes. Everyone gets the same basic rules or the same basic format with our strategies and techniques, and then we work out from there, okay? So if you've been trading a while and you want to trade more advanced, if you like a lot of risk, well, then we show you how to do that. Remember, you're going to be in charge of how you trade. If you're the type of trader that says, well, Steve, I like as least risk as possible, well, then we'll suggest some of our stop placement that has the least risk, or we'll tell you about different ways for entry that have smaller risk. You know, remember, we provide you with the variables, but it's up to you to decide what makes you feel the most comfortable, okay? Someone is asking, is this a one-time payment or is it a subscription? Great question. I probably didn't make that clear. This is a one-time payment of $297. That's it. There's no subscription to this. One-time payment, and you've got close to over 4 decades of information, things that I've accumulated in that amount of time, okay? Let's see, more questions here. I don't want to backtrack on anybody. Do I need to have MetaStock to use your system? Well, I mean, if you want, I mean, MetaStock is a good platform. It's really simple to do on that, and you can scan, but you can do this on anything. It's just a little bit harder if you don't. Remember, this is just a technique that you have to do yourself. This is not a system that you click on and it automatically generates buy and sell areas. This is just a technique I taught you that's really, really easy, okay? Some graphs have shown slight crossover over the 50-period moving average without moving further. How do you identify the trend will not break near that line? Well, remember, this is a good point. The 50-period moving average is just a tool not to tell you when to buy or when to sell. It's just to give you an idea of whether you should be looking at the market from a buyer's perspective or a seller's perspective. It's not, something written in stone that you say, oh, well, it's one tick close above, so that means I'm a buyer from now on. Usually a rule of thumb we tell our students is anywhere from 3 to 5 consecutive closes above the 50-period moving average, and the overall trend is up, okay? Anywhere from 3 to 5 closes below the 50-period moving average, and the overall trend is down. So I'm sure and I had some examples of this. I'm sure if you see that price is above, and then every once in a while you'll see one close below, and then it closes right back up above, right? Well, that's where you use this rule of thumb. You need at least 3 to 5 closes to make it distinguish that you're in a trend change. All right, so that's really what we're looking at. Okay, Steve or Jeff, what is the name of the add-on? I haven't been able to find it by your name. Well, I would probably contact Pro Trader Strategies or ask Jeff. But the add-on, remember, the add-ons are for the strategies. There's Strategy 4 and for Strategy 3A. We don't have an add-on for this. This was just a technique. We only have add-ons for strategies. Remember, I made the distinction that a strategy is something that has all the pieces of the puzzle. That has the entry points, exit points, stop placement, and all of that. A technique, which is what I taught you today, does not have an add-on. It's just something that you can learn from yourself and apply. Okay, that's the difference. Okay.
Hey, Steve, we do have a quick question coming from YouTube. So, for example, we have a person by the name of A-Rod. He's do you mentor people or do they watch videos? So I think he just wants kind of a little breakdown of what's included.
Yeah, sure, I can explain that. The way we teach, we do have mentoring classes where you get private mentoring if you want, but they're rather expensive. I wouldn't suggest that if you're just starting out. I mean, I'm not here to try and sell you a mentoring class. I really want to teach you. So the easiest way is I would think the easiest way is to take advantage of this great offer we have today. And the way we teach is through online courses. So everyone will get a link to our courses that come with all the information, show you how to identify these setups for the strategies, teach you all the exits, entries, and stop placements. And then you also get educational correspondence through yours truly. You get to contact me whenever you like and ask questions. And in fact, I was answering questions this morning by students I have around the world, just if they wanted me to check their work. So that's how we do it. Now, you can take it up a notch by having a mentoring course, but I personally, I wouldn't recommend that right now. It's so much easier, and this is a great offer. We're not trying to charge the world and sell you the world right here. We want to get acquainted with you by giving you a really nice discounted price and by throwing in some great strategies. I would venture to say that strategy number 4 is one of our most consistent methods. This was one of the first methods I was taught by my mentors, strategy. And strategy 3A is a tremendous continuation. It's one of our most premier continuation courses. So those are 2 great courses to have right there in your trading plan. You can decide which one feels the most comfortable, and you're going to get all the rules, and you're going to be able to ask me questions for less than $300. That's a one-time fee. So I would take advantage of that if you could. I think we're just about at the end. At the end. I think they put the link. The link is in the chat box. According to Jeff said, it's in the chat box. So if you happen to want to use that link and sign up or get more information on that link, you can do that by going to the chat box. Now, if you want to sign up over the phone, I would contact Pro Trader Strategies. Remember, they have trading consultants manning the phones. They can take your order, and they would be happy to answer any questions concerning price or tech support at 310-598-6677. Okay. I think we're just about at the end. I just want to thank Jeff and everyone at the Traders Conference. Thank you for giving me the opportunity to speak and to teach you. And I really look forward to all of you becoming students of mine. Thank you so much, Jeff. And thanks for everyone for attending.
Great job, Steve. There's actually one more question coming through.
Sure.
I need you to pick a number between 1 and 12,000.
1199.
Okay. All right. I will use that in a minute to give away a prize. Thank you very much, Steve. We're getting a lot of great feedback. Another great class. I appreciate you coming in and spending some time with us today.
Great.
All right. Let's go ahead. Here. Okay, let me get just a little bit situated here. And let me go ahead and make me presenter. And I'll show my screen. And we'll get to where I'm trying to be. Anyway, how's everybody doing? Let's figure out who got that prize. Let me just go ahead and go into, let me do this. Greg, you want to go ahead and turn on my lights. And that way it won't look like I'm in the dark. And let me go ahead and figure out who the next prize winner is. We're going to give away a prize. Okay. And let's see, this is a prize. It's going to go to somebody in the USA. They did not provide a name, so we'll just call it DI. DI, we're going to go ahead and get in touch with you. In the USA, we don't have a state or anything either. I'm going to go ahead and get in touch with you. You just won a free 3-month subscription to MetaStock Real-Time with the Zenith data feed. So you'll get MetaStock Zenith. You'll also get the award-winning MetaStock Real-Time program that's going to allow you to do charting, testing, scanning, find probable price movements with our forecaster. Literally the program we've been talking about all day long, the one that's been rated #1 in its price category for only 25 plus years in a row. So we'll go ahead, I'll get in touch with you. We'll help you get that set up. And for the rest of you, we are doing the free buy one, well, actually not free, but the buy one, get two free. If you go to metastock.com/conf promo, you can take advantage of that. You can also give us a call. If my little slide will get out of the way, the phone number for that is 800-882-3040. You can also visit metastock.com/sales-chat. If you go to the website, let me go ahead. You want to do the buy one, get two free. You'll see right here, there's a DC option. It starts at just $69 per month. There's also a real-time option. Just choose the one that you want. This starts at $199 per month. And go ahead and check out. It'll get you set up. If you do that, we'll get in touch with you so that we can set you up for our white glove installation treatment, where we're going to have somebody get in touch with you. They're going to help you with the installation of the program. They're going to answer any questions that you've got, et cetera, et cetera, et cetera. So we'll go ahead and do that. And otherwise, we can get that all set up and scheduled and ready to go. If you want to call us at MetaStock, or if you want to call us at 800-882-3040, or you can visit us and chat with us online at metastock.com/sales-chat. So Ahmed says, I'd like to have the link for the recording of Steve Primo. I'm going to put that in the chat box. Give me just a second to introduce the next speaker, and I'll send you the actual link that you can get to all of the recordings with. So Long says, thank you very much for your great program. I'm going to assume you're not talking about MetaStock because that's the only great program I know about. But also you could be talking about today. No matter what it is, thanks for coming today, Long, and I'm glad you're enjoying something. Okay, let's really quickly say thank you for Stocks and Commodities again for sponsoring today's event. I do forget to bring it up, but every time you do a subscription to MetaStock, we do throw in the 6 months subscription as part of that. And if you do like the training class, or if you spend tomorrow, or if you spend more than $300 with us, we'll actually give you 2 years, which is about $200 of value. If you go up to their website, I think it's about $100 a year to sign up. It might be a little bit more than that. So, but yeah, it's included as part of as part of your subscription for MetaStock 6 months. Or if you spend more than $300, which could be signing up for tomorrow's class, we'll do that as well. So we'll give you 2 years, is what I mean to say. And pardon me a little bit. I'm getting a little tired after watching math so much, and just 3 days. So our next presenter is awesome, though. Oscar Carboni is coming to us from Nevada today. Yes?
I was trying to startle you and wake you up. Didn't work. But Oscar is just the guy to wake you up.
Why don't you tell us a little bit about Oscar, since you wanted to come in?
Oh, okay. I've had the opportunity to meet Oscar several occasions. He's one of our favorite presenters, and I say our because he always gets great feedback. He's a lot of energy. He is, what do we say, Jeff?
Well, we say a force of nature.
Force of nature. Storm incarnate.
Oscar has a different word for that.
The man's man. Oscar is exceptionally knowledgeable, and other than that, a really nice guy. I've had the chance to meet him and his family and hang out at his compound. Oh, that's not the word we want to use, is it? His training facility in Las Vegas. And anyway, I know you guys are really going to enjoy Oscar.
All right. I'll reiterate that he is one of our best rated speakers. He's going to do awesome. We've had a great day full of speakers. Oscar, oh wow, we call him a force of nature.
She says, you know, I got a friend who works on this commodities exchange in the World Trade Centers, and I'm going to go up because they asked me if I wanted the job as a runner. And I said, well, great. Let me know how it goes. She comes back and says, I got a job as a runner, but you really need to see this place. It seems like it's your personality. It's just fantastic. Why don't you come up tomorrow and I'll show you the trading floor? Sure. So I go up to this trading floor, and I've never seen it before, and screaming, yelling 3 or 4 pits right in front of me, and 3 pits over here and 3 pits over there, and everyone's yelling and screaming, and it looks like chaos. So I get a little badge put on me, and I get walked over to the gold trading pit. And I'm standing behind a bunch of brokers, and literally for the visual, they're screaming and yelling like this and screaming, and I'm behind them. And one of them turns and looks at me. He says, hey, kid, how do you spell commodities? And he turns back around and he starts screaming and yelling. And I'm thinking, well, that's got to be a joke. We're in the commodities exchange. Yelling, screaming, he turns around. This time he's a little aggravated. You look like a smart kid, and I asked you a question. How do you spell commodities? And I go, COMMODITIES. I spit it out. He turns around. Thanks, kid. And he keeps yelling and screaming. So I edged the guy next to me, and I said, who's that? I won't mention his name. He says, that's blank blank. He's made over $10 million here on the exchange. I said, hold on a moment. What you're trying to tell me is the guy in front of me who actually couldn't spell the word commodities made $10 million in this building? He said, yes. I said, well, that's it for me. I went right back to Staten Island. I signed out of classes of taking computers. I went to Manhattan. I took a job on the floor and signed up with John Murphy at the New York Institute of Finance and started taking analysis classes, and that was it. I went from there. I said, you know, if that guy couldn't spell the name of the building he was in and he made $10 million, there's got to be a few dollars for me to make. I could spell the name of the building I'm in. So that is literally how I got started. And then from there, I just never looked back.
That was that was great, Oscar. And I think we got our YouTube bridge working again. I'd like to hear if we are getting heard in YouTube. It's working perfectly. So we're now all back online. Sorry about that. We did get a good story though out of the whole.
And Oscar, my apologies. This is Greg. Sounds like we came on the end of a really good story, and everybody on YouTube missed it. My apologies to YouTube.
So there is this. It's not your fault. The moment I put the camera on, my ugly face broke the internet, and here we are now.
You know what? I don't want to belabor this anymore, but something just went kapooey over on this side. I think it's this old Mac. I need to tell Scott to buy us a better computer.
All right. So shall I begin?
Yeah, let's do it.
All right. So let's get started. There's a chart in front of your eyes. For the YouTube fans, where I began just a moment ago was and I moved a few windows around, but let me just show you. What I was telling my traders is basically to come to livewithoscar.com and join my website. It's really simple. Just go to Live with Oscar. You can log in if you have a username, register if you don't, no credit cards, no nonsense at all. And then as soon as you're logged in, which hopefully I'm already logged in here, you will go to OmniChat. Just log in and go to OmniChat. You will find yourself in this chat room. I mean, you can get there like that. It's really simple. And in here, you will find me on camera, live microphone. There's usually 2 camera views. There's one over my head right here where you can see my desk. And there's usually another one facing me just like this one. And I basically spend my entire life going through these markets with my traders. That's my new pit. They closed the pits down in 2006, 7, 8. I created this room. This is my trading pit, and I live here, which is why we call it Live with Oscar. So if you want to find me, make sure you join the site, and it's free, and we'll get together, and I'll show you my technique. So what's going to happen today, as I've already mentioned a few moments ago, is that we are going to go over what happened last week in the markets, what we think should happen next week, maybe some techniques to help make money with. Stops have to be in, of course. We will talk about keeping it simple. And by keeping it simple, what you want to do is use the exact same techniques that Wall Street uses. And I kid you not, some of them are quite simple. They just seem complicated because they come out in the form of algorithms. But an algorithm is based on a chart, which is what's in front of your eyes. All the information comes off the chart. And when you look at a chart, you are looking at a visual look of all the information that's come out, government reports that have come out, the ones that are coming out, the reports from companies, third quarter, fourth quarter, you name it, all the news and traders' reaction to all of that is right here on this chart, I promise you. And if you can read this chart correctly, you have all the information that you need to call the next move. So I'll show you some simple techniques today. And what I plan on doing tomorrow, I've got some friends of mine that are coming in. Steve Bigalow with 45 years experience. We've got Dr. Alexander Elder, who's written books with decades of experience. And me personally, tomorrow, I will pull back the curtain on some of my tips, tricks, and techniques, which I've barely ever shown anyone, unless you've been in Las Vegas, in my personal office. These are techniques I've never shown to anybody. I kid you not. I've got thousands, without exaggerating, videos on YouTube. No one's ever seen what I'm going to show tomorrow. So if you decide to sign up for our premium course tomorrow, I promise you, the two gentlemen before me, Steve and Dr. Elder, will do fantastic, and I will show you some techniques that you can start to use the very next day on Monday to help you identify winning trades. That's tomorrow. For today, I want to show you what this crazy NASDAQ chart did last week and what we hope it'll do moving forward. This is a very risky game. Trading futures, trading options, trading anything these days has extreme volatility. I kid you not, you can lose more money than you have in your trading account. You can lose more than that. Your lifestyle can change if you get this wrong and you don't have stops in. So never trade unless it's a market you understand, and never trade without protective stops. And now let's take a look. Good stuff here, simple to do. I will show it to you and you can use it next week too. NASDAQ Daily Bar. I've got a technique that I like to call the head and shoulders formation, and I didn't invent it. It's been around forever, but I certainly have done a job perfecting it, and I'll show you what I mean by that. So what I've done was taken the head and shoulders formation. I've studied so many of them that I recognize something happens that most people have never recognized. It's never been in any books. I've read hundreds and hundreds, if not thousands of books. I've studied everything that you can study since the early 80s that I could get my hands on, and this I've never seen. When you have a head and shoulders, you get something, the Oscarism confirmation. It's called the failed head test confirmation. Market comes out of the right shoulder and stops cold before it hits the top of the head, illustrated by these black lines, and then you get your sell signal and the market begins to crack. So what happened 20 days ago, 25 days ago, the right shoulder was forming, and I started mentioning in my YouTube videos, hey guys, gals, traders out there, I don't know what this is forming for, but I see a formation that really disturbs me. And I think it's going to make the markets come off. Once I get confirmation, I will show this to you in my YouTube videos, which I post each night. Well, market went up, gave me confirmation, and I immediately started to post in my videos. Now we've got downside coming. Omni turns red, stays red literally for the entire down move. So Omni is a day trader, right? So it buys and sells throughout the week. What Omni did, which was really interesting, is it either stayed red, meaning sell the rallies, or went neutral, but wouldn't let me buy all the way down to here. When we got here, Omni flips to a buy signal and has been bullish the whole way up. Great stuff, easy to call. All I used was my head test, the Oscarism head test. Once it failed and the market gave me one red day, I knew we would start it to head down. And a simple technique is a moving average. We get down to the moving average. When we got down there, Omni hit me with a buy signal, and we started to get long again. So you would think this is Thursday night now. I'm giving you Thursday night's analysis. What should we do now? So I show this to everyone, and I said, look at how bullish this looks. But you know what? In my YouTube videos, Thursday night for Trading Friday, and in my live trading room, I said, we've been buying this all week or trying to get long if we didn't get filled, but we knew we had to be long. Many trades we did this week did really well. Thank you, Omni. But look at this. So I said, you know, let me take a look at this and see, is this right? Should we be getting long on Thursday night into Friday? So I decided that I would look support and resistance. And lo and behold, I see that this is the exact same chart, by the way. All I did was take off all the fancy head and shoulders work. Same chart, simple technique. Support at the bottom, resistance at the top. I looked at this, and on Thursday night, For Friday, I said in my video, forget it. Do not get long NASDAQ. If it fails at this level, this is the exact same level I got to sell in my Omni at, but better, easier than that. This is simple. It's a resistance line. And anyone that knows technical analysis understands resistance. When the market gets to resistance, it usually fails and breaks back down. So we're right here on Thursday night, and I said, no way, forget the head and shoulders, put that off to the side, put everything off to the side. This is what we need to be paying attention to. This is where we were on Thursday for Friday, and here's Friday's bar. I was absolutely correct. Not that I was correct. All I did was read the chart. The chart was absolutely correct. We were not supposed to be long Friday in the NASDAQ, and we staved off getting ourselves hurt. Simple technique. So then, of course, Thursday night for Friday, I thought, let me go look at the S&P. We don't just look at the NASDAQ ever. Well, let's go look at the S&P. S&P has got the exact same formations. You've got the head and shoulders. It's absolute. You've got the failed head test. That's absolute. The market, we made our market calls at that failed head test. The market dropped. That was correct. Omni flips into a buy signal when it hits the average. Well, actually under the average. Omni flips to a buy signal right down here and has been bullish ever since. And here we are. This is Thursday for Friday. We don't have Friday's bar in yet. My traders want to know, Oscar, what are we supposed to do Friday? And here's what I told them. Do not get long. And here's why. And we didn't get long. And we did very well. We ended up trading the Russell instead. This is why. S&P is in the exact same spot. Now, traders, this is really easy. 101 technical analysis, but believe it or not, algorithms are built on this. They are built on whether or not the market got past this line last time. And if it didn't, they are going to start selling when it gets there this time. And what did they do on Friday? Boom, red day. Oh, that line moved. I don't know why that line just moved, kids. Let's put it back where it was. That's pretty odd. All righty, let's get that back where it was. Another technical glitch. Jeff, you better fly out here. What is going on here? Let's try that again. Oh, it's back. It put itself back. All right, so what happened on Friday? It put itself back. Imagine that. So what happened on Friday was the exact same thing. S&P went no, no, no. And we went down a lot on Friday, I have to tell you. If you are a day trader, we went down a lot on Friday. And then finally, towards the end of the day, it went back up. So the resistance, this simple technique of a resistance line would have stopped you from getting long if you didn't have a sell signal to go short on it. So we didn't buy S&P or NASDAQ on Friday, and it was an absolute correct thing to do. And all I did was draw a simple resistance line. Support lines work exactly the same way. All right, so let's go look at what else happened last week. So what we're going to do next week is, of course, nothing for a day. I am doing nothing on Sunday night, not in the S&P. If I get a sell signal here, I'm going to be jumping for joy from Monday night to Tuesday because that means we can come all the way back down. If we get a sell signal, you could end up all the way back down here in just a few days. So I'm doing nothing up here with that's why those question marks are in, and we'll see what the market wants to do. So that's S&P and NASDAQ. Let's see what else there is to gander from last week. Russell 2000. Now this, I let my traders get long the Russell 2000 on Friday, as opposed to telling them no on NASDAQ and no on S&P. Do you know why? This is a completely different picture. This is the same sort of market, right? It's an indice market. It travels with S&P and NASDAQ at all times, almost. Sometimes they differ, but they're sisters, so to speak. But the Russell looks completely different. When we got our short signal in Russell, we were up here at the flat top. Omni gives us a short signal, Oscar's market navigational indicator, and the market starts to break. So the difference between S&P and NASDAQ and me saying no on Friday to buying and the Russell is we're above this flat top. Let me give you a line. We are actually above the flat top, which would be represented by this line right here. On Thursday for Friday. And I said, you know what? We can buy the dips there because this is proving itself. Let's stay away from NASDAQ and S&P. And then if we load Friday's day in, the market gave us a chance to get in on the opening. It dipped, it rallied up. I kid you not, Omni's exit was right here at 1639. We exited right at the high and sidestepped the market. So we were able to use very simple techniques to figure out not only which markets to stay away from on Friday, but which one you could actually possibly make money in, and we did. We had a good day trading the Russell on Friday. So Russell made a better play technically than S&P or NASDAQ, and we went with the Russell, and it gave us plenty of chance to get out of the trade. And looking at that Russell bar now, I'm expecting some kind of a sell signal to begin, which would make perfect sense. Do you know why? See this flat top? That's another Oscarism, by the way. I've never seen that anywhere else. I invent these things. I try them for 20 years, and then I show them to other people. This flat top, which works really well if you know when to call it, we got above it, ran the stops. Now we're back down below it, which would now make sense that the market got a little bit tired up here and maybe needs to come down a little bit. Now there's presidential elections, and we have a new president, and they're fighting over who actually won, and it's Biden. All of that comes out in the charts. I could care less about that stuff when I make trading calls. It's never about politics. It's never about the news. I don't care what's going on politically or what's happening with news flashes. If the chart tells me it's time to sell, it's time to sell. I hear nothing else. You ask any of the thousands of Omniacs that hang with me, because the charts know what's coming next. What I'm going to tell you to do for the indices for Sunday night into Monday is either stay away or take a sell signal if you get one. I'm going to stay away unless I get a solid sell signal because of the resistance I just showed you and the fact that we got above the flat top, took out the stops, and dropped back down in the indices that Wall Street watches all the time. So, and then of course tomorrow we're going to go over lots of techniques, flags, how to project those flags, all sorts of great stuff that I generally keep behind the curtain. So what else do we have from last week, and what can we look at for next week? So we just took a look at the Russ, and let's see. Oh yeah, here's another pretty chart. The transportation average. What I will tell you is that support and resistance, I kid you not, algorithms are using every single bit of this to come up with their digital buys and sells, but it would all come off of a chart because everything the market did is listed right here in front of your eyes on a daily chart, and everything an algorithm is going to calculate is based on what happened on the chart. So the algorithms, I kid you not, they sound difficult. They sound intriguing. They make you think, oh my God, Wall Street comes up with these with their geniuses. They're basically peeling apart a chart and coming up with strategies based on what that chart said, just like anyone with a good pair of eyes can do. Don't let them scare you. Don't let them trick you. So support and resistance. If you don't think algorithms are following this, the market, you can draw a trend line. Once you have one high and another high, you've got a resistance line, right? So if this resistance line goes from here to here, if I got a resistance line from here to here, that's all that exists. None of this stuff has happened yet, right? I've got two highs. Let's pretend everything past that circle hasn't happened on the chart. We will extend our line to the future. And lo and behold, how come when we get to it a bunch of days later, the market cracks when it gets there? Proof, I kid you not, this is how they build their trading systems. Simple stuff. You just have to know what to look for. So that resistance line is going to work every time you get to it. And if you get above, it will then become support. Same thing here. I snapped a parallel trend line off this one. That's all I did was ask for parallel. And I put it right down here. And I went, well, look at that. You got the same thing. It's a parallel support resistance channel. And I kid you not, if you hit the bottom, something is going to happen. That's the way this stuff works. If you get to the top, something will happen. You got underneath it, hard break. You got back to it one day, then it came underneath, tried it for a second time. Now we can start calling this support. If you get up here, that's resistance. You get above it and start putting some bars here, that will become support. Now, this is how any system is going to This will be part of any system where markets stopped going up and dropped, and where markets stopped going down and rallied back up. That's part of anyone's system. So if you're going to use support and resistance, I will tell you now, use it wisely, buy at the bottom, sell at the top, unless you break out. Tomorrow, I will show you a lot more about how to actually use these channels and what you should wait for, but support and resistance tells us this. Right now, you are above the major channel support line, and you got above this support resistance line right here. This one, it started out as resistance because, and let me just illustrate, when the market tried to get above, it couldn't, then it dumped, tried to get above one more time, it went down, finally gets above, now we call this support. So I went from red to green just to illustrate for you. So that will be your support. Now, what this does tell us is that the transportation average looks stronger than the Dow or the tranny, than the NASDAQ or the Russell or the S&P for that matter. But remember, this is only Thursday's trading. What happens on Friday? Let's put Friday's bar in. Oh, look at that. The resistance, the support is becoming resistance. Does everyone see that? I'm doing this slowly and simply to try to show you just how simple this stuff really is. Now, this blue line, which of course was green, becomes resistance and likely will stop the market from going up. So now this is starting to look just like the NASDAQ and the S&P. Now, who knows the results of the election? We can open up much higher on Sunday night and everything explodes. But this is how you would use these charts in their simplest forms. Now, I don't have anything intricate on here, no indicators, just an average. And I'm not showing you exactly where I would buy and sell. I'm giving you abstract views of how to use technical analysis in the simplest way to call proper trades. And you don't have to listen to anyone else but yourself. What else did we have last week, and what does it mean for next week? So what this means for next week, and again, if we're going to draw trend lines, you can start drawing these trend lines in now, right? This is going to be a trend right here. So we know that you can draw that in, and you're kind of stuck right there on Friday's bar. And if you open and drop, you will, if we open on Monday and we open lower, it's probably going to open and look like this. Let me make the bar red because we're expecting, if we open lower, that it would be a down day. And you would probably find that it used the resistance line to call its high for the day, and then it dumps. That is how support resistance works in its simplest form to help you figure out what you should do. What else happened last week? That was the transportation average, right? Dow Jones Industrial Average. Again, with this major support and resistance, I kid you not, Wall Street is following this stuff. Now, before I even mention whether or not Wall Street follows support and resistance, they also follow very simple averages. Watch. Look what happens when you get to the average here. Look what happens when you get to the average here. Excuse me, tickle my throat, kids. Look what happens when you get to the average almost here. Then it runs away. Comes all the way back to the average, but now it's at a support resistance line. Bounces out, runs into resistance, right back down, back to resistance. But look at what happens around the average. So Wall Street uses very simple techniques. You know what average this is? Excuse me. Excuse me. Check this out. It's the 100. You know why I used it? Because Wall Street's in love with the 50 bar moving average. And we started getting massive volatility like you see here. So once I seen massive volatility, I said, well, let's just double the average and see what happens. I doubled the average and it became a magic bullet. I went, well, I guess it's 2 times Wall Street. I just try to use their simple stuff. I kid you not, it almost seems too simple. But if you realize that you don't even need to know what they're using. If you just experiment with certain things, you'll see what the market's following and you'll know what Wall Street is using. Now, do they use simple resistance and support techniques? Absolutely, positively. Which brings us to the Dow Jones Industrial Average on Thursday. Here we are on Thursday. I drew up this whole chart and I say, look, traders, you're running into a lot of resistance here. Don't get long this thing. It's probably going to try to start to come back down. So let's put Friday's bar in and see what happened. Boom. Let me make that a little bigger for you. Friday's bar did exactly. Now, we left on Thursday booming. Thursday was a big booming day. Let's magnifying glass that a little bit if we can. So Thursday was a big booming up day. Friday stops cold at the resistance, stops cold and has a down day. Do you see how that works? It absolutely works that way every time. Now, when it doesn't work, you will get above it. So that you don't usually take a trade till you either get above or you have a confirmation day when it doesn't hold, like here, as you see me acting out. On Thursday night for Friday, I said, leave this alone. It gives a confirmation day. We get our confirmation day. We can go right to work on Sunday night if that's what this is. So sometimes the best trade is no trade at all, and we realize that as professional traders. But what I'm trying to illustrate to you here is these are the major markets that the major players in the world are in, and they follow really simple techniques if you know what to look for. So what else happened last week? Amazon, nice. I think that this can be our sell trigger or buy trigger for Amazon next week. I looked at it and went, well, look at that. There's something we can use next week. I thought I'd bring it to this weekend's webinar. So Amazon, for you Amazon traders, look at how well this resistance seems to be working, and absolutely the support and the average that I told you about. Look, the average stopping the market cold right here, as well as a support line. The average, once again, gets broken for just 2 quick days. On day 3, it starts to head back up, right above, back above the support, and boom, you put in major up days right away. But I'm looking at this and going, is this a sell spot? Or will it be a buy spot for Amazon? This is Thursday for Friday. Let's put Friday's analysis in. Friday's trade. So it came back down and filled the gap. I now will wait and see what the market's going to do right here. And here's what you're going to do next week. You get here. And if the market stops and doesn't get above and you get one down day the next day, then you've got your sell signal. If this day is red, you've got a sell signal. And you can use Amazon to either get long puts, get short the market, however you want to handle that. If we rally up, hit that red line, and then you get a 1 day down after that, that's your confirmation. Now, opposite that, you get above. Well, then we're above. You got above the resistance and it becomes your buy trigger, not your sell trigger. Okay, that's for next week, kids. See if you want to take that, do a little work on it and see what that does for you. Right now, these 2 lines do not exist. So we know that they're not there. I don't want to confuse anyone. But if you get up there, that will be your trigger. And I kid you not, Wall Street can see this. If you can see it, Wall Street can see it. So it's there. They'll be looking for it too. And turns out that charts and technical analysis is nothing more than a self-fulfilling prophecy anyway. So the reason why they work is because enough smart technicians know what to look for. They tell their fund managers, the fund managers put trades on, and hence the charts work. Without them, I don't know that they work. So you have to know how to read the charts and know what the fund managers are likely looking at. Simple support and resistance, they're absolutely going to be looking at. Triggers like this, whether you should buy or sell, absolutely. Hits the 100 or 50 bar moving average, or the 200 for that matter, they will absolutely do something there. Simple techniques. What else is out there? Oh, Tesla. We have a Tesla chart here. This should be fun. So Tesla, if it starts to break towards the upside, you might be able to look for 48.50. I am not making this call yet. Let's put it off to the side. This is Thursday night's analysis, not knowing what Friday is going to do. Once I see what Friday does, I'll know if I want to have this target out there or not. So you're looking at a pure chart on Thursday, but look at this average. Look at the way it holds. The market looks good overall. It's in an upward channel, right? This is absolutely an upward channel. And I don't like the green. I don't like it red. If it's upward, it should be green, right? Green. So you've got a channel here. If we want to extend this to the left just for the visual, we can do that as well. And now you got your channel. Looks good overall. But what I noticed is this average and this support are like magic bullets for Tesla. Now, what did it do Thursday? What did it do Friday? We only see up till Thursday. This is Thursday's bar. Friday, Tesla really did nothing. I don't see anything there. So we'll have to sit and wait. Now, here's what I am looking for. I am waiting for Tesla to test this for me. If Tesla comes and hits this spot and holds, I think we could be buyers. Next week, if Tesla gets under this average, watch out below because it doesn't get under this average, okay? You keep that in mind. I'm not even going to tell you what the average is. I'll tell you that in tomorrow's video. In tomorrow's class, I'll show you what that average is, why I use it, why Wall Street uses it, and how you should use it. And then we've got Zoom. Now, Zoom is working like it was just part of the wallet of Wall Street. And what I mean by that is it is just working off simple techniques. The 50-bar moving average, like the gentleman who presented just before me was using, he wise enough to see that himself. It's one. It's not a magic bullet, but it's one. The Wall Street loves the 50-bar moving average. This is Wall Street's darling, and I'm telling you, it is the smart money. Simple yet easy. Look at the bounces off this 50-bar moving average. It is absolute. Now watch this. We're going to go back. It's every time. If you get near the average, it bounces. Is that not sick? Look here. Look, I'll just grab a circle just to show you. Here. Here. It never stops. Here. 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 And that's what starts building its support line. And as we move forward to what's happening today, it holds here. It holds here. It holds here. It holds here. Use the 50-bar moving average in Zoom to use as a trigger. When it hits, wait for one buy signal, whatever system you're using. If you don't have a system, you can always come to me and we could work the Omni system. I could show people where Omni wants to buy and sell Zoom. But this is a simple technique. Zoom is very technical. It loves support resistance lines. And it loves the 50-bar moving average. I am telling you, that is the smart money on the street right now. Those are the very techniques that they are using. Now, today was a very, very simple version of what we're going to do tomorrow. But I kid you not, simple is what this is all about. You've got to keep this simple if you want to get it right. I have studied, just to let you know, I have studied, and I wrote their names down because I've studied with so many people. I wrote down the top few that I thought were cool to mention. I've studied with Pete Stottlemyre, Market Profile. I've studied with Richard Dennis from Carroll and Dennis, C&D Commodities, the Turtles. I've studied with Paul Tudor Jones and personally trained one of his right-hand men, Sean Doyle. I studied with the master of all masters, John Murphy, who taught me for years and wrote the book, The Bible Today. They call it the Bible of Technical Analysis, Mr. Pattern Recognition Genius. I worked with Dominic Orsiello, considered the GOAT of all floor traders in New York. I've got so much great experience to share. What I'm showing you here, kindergarten compared to what we'll do tomorrow, kids. So I just wanted to show you a few things for today that happened from this week that should work going forward for next week. And of course, as I mentioned, you will always find me in my live trading room, where you'll find me on camera and microphone most times. If not, I'm always in there typing anyway. I am always there, always there. You can find me, and we can share these techniques together. Jeff, I'm going to now ask you if there are any questions.
Yeah, I don't know. You might have. We always, as soon as we have like a technical problem, we start running around like a chicken with our heads off. I don't know if you've looked at this, but if you haven't, we have quite a few people that are hoping that you'll show them gold.
And I was at the chicken remark.
Where would I be seeing these questions, sir?
Oh, under questions.
Feed them to me. It works for me. You want to look at gold? Let's go look at gold. So in gold, we've got This is an old chart that I was working on when none of everything past this technique existed. But let me show you what this has turned into. This has actually morphed into something even cooler, which we just broke out of. This went straight down to here. Just give me a moment to draw this up. I've got a really pretty chart drawn up for you, but let's just do this on the fly. I prefer it that way anyway. All right, so what happened here was, you can draw this a couple of different ways, but either way we broke out. You can either ride this straight down, and you can see that we had a couple of times out, but never broke out, and then finally had our breakout. Or you could drop it now at all the highs, and we had a nice breakout in gold. Now, what you had going in gold was a channel, which was more of a descending wedge than a channel, but it looked like this. And you had this pennant flag, which I literally telegraphed on my YouTube videos for traders. We fell out of the pennant flag and started to create this. Now, what really happened here was almost another pennant flag started to form, but instead I just expanded it out to this bigger one. We can now get rid of the pennant flag because it happened already. And here is what gold looks like now. It just broke out. It just broke out of a really nice formation. And you're out for 2 days already. And at the same time, you've got the, that's not it. You've got the dollar in a tailspin, which dollars and gold's priced in dollars. So this is the US dollar, and it's the dollar future, so it's DEES daily. But look what's happening to the US dollar, and failing miserably at averages and just falling apart. Now the dollar has its own formation almost opposite of the gold. So what I've noticed here is that dollars, the pressure in dollars, it's putting a lot of pressure on gold right now. It's putting a lot of push, propelling gold towards the upside. Now, dollars were in a trend for quite some time, and that trend has been this, the downside. It just breaks down. So if you look at it, you know, the whole thing for a year now practically has been dollar moving lower. That means gold has to move higher if the dollar is going to continue to do this. So if we go back to gold, it has to continue its move right now as long as the dollar is moving lower. Plus, we get to see if it makes its projection based on breaking out of this pennant flag, which we could look at. We could do a projection off this in tomorrow's premium class if you want to do that. So that's what I think of gold for now. I kind of like it. I think it's doing well. Let's see what kind of average we could drop on it. The 100, let's see. I don't think anyone's looking at that in gold right now. I think the 50 is probably even better. Let's look. That would be the 100 in gold. Let's see what the 50 looks like, because I think people are paying more attention to the 50. So and the 50 is a much, much better average in gold. Look at it. Look at how well it works. So we'll make this a little thicker. You can see it. This average in gold works really well. It's the 50. As you can see, whenever you get near it, there's some kind of a reaction, but it stays out of the market's way on most occasions. So you have to like an average that stays out of the market's way. And right here, the average comes together with the pennant. Well, it's really now, it's no longer a pennant flag, right? It's morphed into more of, you know, you can't call it a pennant flag anymore. So it's really a descending pennant. In my opinion, that's what I would absolutely call it. So you broke out of the descending pennant and above the average. Bravo, if you ask me. Nice showing for gold. So that would be my opinion in gold.
Good. A quick comment for you. Now I understand why Oscar has been added to tomorrow's premium session. This guy is great. I love that accent. Italians are the best. Happy about the premium tomorrow. So we will see you tomorrow at the premium class, Wally. Thank you.
Yeah. I promise tomorrow's class will make this look like Swiss cheese.
Joe wants to know, I trade the E-minis. Should I be playing, doing full NQ and ES, or is there a downside to doing micros?
Okay. I would say for the next few days, do micros. If you do micro NASDAQ, it's such a big mover right now. 2 lots on the micro NASDAQ will give you a piece if you're right, won't kill you if you're wrong. The election was just decided. We're running into all kinds of resistance levels. There's a big head and shoulders. How about you take it a little bit light for the next few days? Let's see what's going to happen. Let the markets digest this area I just showed everybody in the indices. So I would go with the micros for now. But here's what I will tell you about micro versus the larger contract. Okay, S&P, okay, NASDAQ, almost nowhere else. It's not thick enough almost anywhere else. And it doesn't pay as well. So if you're going to work this hard to come up with these trades, it's okay if you're going to use NASDAQ or S&P in the micro. Barring that, go to the regular size contracts. It's not worth the work to come to make $37 at the end of the day. And that's what does happen in the micros if you trade a 1 lot. In fact, my son the other day said, Dad, I was in the micros on 2 lots. How did I do? I said, hey, you did about $400. He said, well, if we were in the big one, what would you have done? I said, well, you would have been up almost $2,500. You know, it's a big difference. So just for the next few days, I would say be safe. Go with those micros.
Okay. Sorry about the technical issue. I love the story though, and I've got comments about how we love the story. So I knew you know how to entertain, Oscar, and you did a great job today.
Well, thank you. So, tomorrow, I literally plan on showing some things that are going to make people go like this. Is that really how you do this? You'll see. It's going to be fantastic.
Yeah. Now you guys know why I had him be one of our premium speakers tomorrow. So let me go ahead and, Oscar, I'm going to go ahead and kind of give him the link for that. I'll give him the link to sign up and the phone number and stuff like that. Appreciate you coming in. Sorry we had some technical issues.
No problem. Anytime.
With us.
Thanks,
and the
Oscar.
other thing I'm going to say about this audience is everybody stayed with us. We lost one person.
Nice. So we kept their attention. Fantastic. Traders, I hope to see all of you tomorrow. Please use these techniques next week going forward. And look for me at livewithoscar.com or futurestraders.com. They're both the same.
Thank you so much, Oscar.
Thank
all
you.
right, very cool. Let's go ahead. All right. It's working. It's just we're fine. Don't worry.
Okay. Okay.
Calm down.
While you're getting set, you might want to clarify. There's some conversation on YouTube about tomorrow. Some clarification. Some people are saying on YouTube it's free. You might want to address that.
Oh yeah. Let's talk a little bit about that. We won't be doing a class tomorrow on YouTube. We do have some premium classes that we're going to be doing in GoToWebinar. And can you see my screen now, Greg?
Yes.
Right here?
Yes.
Okay. So tomorrow we're going to have Steve Bigalow, which hopefully you were here for Steve's class. He started the day. Great feedback, great teacher. He's going to spend 90 minutes with us to talk about the top-ranked candlestick signals. It's going to be a detailed class. Again, we're going to spend 90 minutes on it. After we're done with that, we're going to have Dr. Alexander Elder come in, and he's going to talk about his triple screen trading system. And then after that, we're going to have Oscar come in, and he's going to show us how to drop 10 lines and how to look for technical formations like the flags he was showing and stuff like that. So the conference pricing and the conference special for tomorrow is $450. We retailed it at $600, but we're just charging $450 for the class. It's 4.5 hours worth of training. Oscar's going to be a big part of that tomorrow. These are 3 of just my favorite presenters. They do such a good job. And so $450. We won't be doing this in YouTube. We're going to be doing in GoToWebinar. So anybody that signs up today, look for an email from GoToWebinar with your login links. I'll put those in tonight, and we will see you tomorrow for just a more intimate GoToWebinar session. So to sign up for that, you can go to 800-882-3040. You can visit us at metastock.com/salesphat. If you go to metastock.com/conference20prime, you can also sign up there. but I hope you come. I think it's going to be great. These are 3 traders that have had just such a good impact on my trading personally, and it's going to be some great lessons. So, all right, very good. That's kind of we get a little bit nervous when stuff doesn't work, but I think for the most part it's worked pretty well. Sometimes we just blame the internet. We do want to thank Stocks and Commodities for sponsoring today's event. They did such a great job, and they help us. And I will say a bonus: if you sign up for that MetaStock conference tomorrow, you're going to get 2-year subscription to Stocks and Commodities as part of that. If you go to Stocks and Commodities website and subscribe, it's going to cost you $98 times 2. That'd be about $200. So you're going to get $200 worth of a subscription to Stocks and Commodities magazine as part of your purchase to go to the premium conferences tomorrow. So, but aside from that, Stocks and Commodities have been awesome. They've supported us. They've supported the Online Traders Summit and the Online Traders Conference since we started doing it. We started the summit 7-8 years ago now, and so we really do appreciate the work that they do. Let's go ahead and roll into the speaker, the last speaker for the day, Kevin Nelson. Kevin, I have a particular, I really like Kevin. Kevin actually believed in me enough about 25, 26 years ago, something along those lines, to hire me into Inside Sales. We could tell you stories, but I wouldn't want to because but I could tell stories one day about Kevin. He does a great job, though. He runs a site called learnmetastock.com. It has hundreds of videos up there. And let's go ahead and bring him on here. How are you doing today, Kevin?
Very good. Thanks, Jeff. Appreciate that.
Do you want me to tell a story?
No, I think we're good with that. I think we can go ahead and move on.
All right.
Go ahead.
Most of them are good, but I'm sure I could figure something out. I just turned over the presentation for you.
Great. Okay. Very good.
All right.
Can you see that okay?
I can see that, and I'm going to let you go. Go. Feel free to, I know that we're starting late. We had some pretty major technical issues just on the class before you. Feel free to take as much time as you need.
Great. Well, thank you, Jeff. Appreciate it. As Jeff said, my name is Kevin Nelson, and our company is learnmetastock.com. And I originally started with MetaStock back in the early 90s. And in 2008, I left the company and I started this training company where all we do is help you with your MetaStock program. And that is whatever it is that you need help with, that's exactly what we do. And we provide training anywhere from literally getting started all the way up to advanced formula writing. And we do it a number of different ways. First of all, we have a number of live classes. We do up to 3 live classes per week. We do them on Tuesday, Wednesday, and Thursday. And in addition to that, we also have what's called the video library, where we house all the different training videos and so forth that we have available for you as well. But I'll get more into this later on at the end of today's presentation. So I'm going to go ahead and just jump right into what I want to show you today anyway. So in today's presentation, what I'm going to show you today is I'm going to show you a system which is called the 4% System Revisited. Now, the reason why I call this 4% System Revisited is because this is a trading strategy that I looked at a number of years ago. And I was recently contacted by a customer who said that he looked at this trading strategy, downloaded the formulas and so forth. And it looked like the formulas that I presented weren't exactly what the author presented for the actual system. So I went back and took a look at them, and I'm really glad that I did. This trading strategy that I'm going to show you here was originally created by a gentleman by the name of Martin Zweig back in the 80s. And he put it in his book called Winning on Wall Street. And the idea behind this particular trading strategy is that it's a really simple trading strategy. And according to him in his book here, he said that if you would have invested $10,000 in 1966 using this particular strategy, you'd have made over $230,000 at the end of 22 years, or in 1988. So again, from 1966 to 1988, your $10,000 would have grown from $10,000 all the way up to $230,000. So it's a really simple strategy. And I started looking at it and I was like, oh, well, this is pretty good. This is something that we should definitely take a look at. And that is one thing that we do at Learn MetaStock is we take different trading strategies and we show you how to duplicate them so you can actually use it exactly how you want inside the MetaStock program. So this particular strategy here, according to his rules, says that it's a trend following model that gives a buy signal when the weekly value line index rallies 4% or more from any weekly close. It then gives a sell signal when the weekly close of the value line composite drops by 4% or more from any weekly peak. So in other words, really simple. All it's really looking for is a low spot in the value line index. And when it moves up at least 4%, you buy it, and vice versa. When it hits a peak and starts to move down, you sell it. That's it. So, but before we get into it, one thing I probably ought to explain a little bit is about what exactly is a value line index. I know a lot of people don't follow it or aren't familiar with it, but let me just explain real quick. The value line index is made up, as you can see, approximately 1,675 companies. But what's actually pretty interesting about this index is that the securities that make up the index don't come from one central location. In fact, they come from a number of different places, including the New York, the American, the NASDAQ, Toronto, and over the counter. So again, it's kind of a conglomeration there of a number of different types of securities. So with that being understood, let's go ahead and jump out now to the program. And the first thing I'm going to do here is I'm just going to open up a chart here of the value line index. Now the symbol I'm going to bring up for the value line is a period, then VALUG for the value line index. And I'll go ahead and just open up our chart, and we'll just open up a standard daily chart. But the key is with this particular one now, this one actually is looking for weekly data or looking for the signals to be off of weekly data. So the first thing I want to do is I want to compress this to a weekly time frame. So down here at the very bottom, I'm going to go ahead and change the periodicity down here to a weekly time frame. So now each bar inside of our chart now is going to represent 5 days of time. All right. So hang on for just 1 second. There we go. Okay. So each bar now, basically what we're looking at here is that the opening of the price bar represents Monday's opening price, and then the closing represents Friday's closing price. So again, each bar is now representing 1 week of time. Now for this particular strategy, if we're going to duplicate exactly how he did it, again, all he was looking for was, like, for example, like a low point, and then looking for the prices to move up from that point at least 4%, and then vice versa to hit a high point. And then once they trade off of that at least 4%, then he basically sells. So the other thing about this too is that he was constantly in the market buying either long and or short. Now to create this particular formula, what I did is I used an indicator that you have available inside your program here, which is called the zigzag indicator. And I don't know how many people are familiar with this, but let's go ahead and plot it on our chart. So I'm going to scroll down here to the bottom of our indicators, the MetaStock indicators up here at the very top. And you'll see at the bottom, there's the zigzag. And what I'm going to do is I'm going to drag it directly on top of the price bars. Now for this one, I want to base it off the closing price. I want to make sure that the method is using a percentage level change. And then for the reversal amount, I want to make sure that I have it listed at 4%. So underneath the style here, I'm going to go also make the line a little bit heavier here, just so we can make it a little clearer here. All right. So now what we're looking at here is this zigzag indicator. And the zigzag, what it's doing again, it's looking at the closing price of these securities here. And once it identifies, for example, a low point and then moves up like this, this line will then basically move up until it hits a high point and then traces down. Now the key is, though, is that this line here can only go up, for example, if the prices change at least 4%, because that's what we set the indicator at. So for example, let's kind of zoom in here for just a second. I'm going to zoom in down here at the very bottom here. Okay. And we'll see this quick little move right here. You can see that the closing price on this bar, the price moved up and then it actually went down from this point. Okay. So to check the calculation here, let's go ahead and open up, for example, a calculator here. And what I'm going to do is let's take a look at the price here at the very bottom here. So this price bar, for example, if you look at the closing price, it says that the closing price is $313.68. So let's go ahead and plug that in real quick. So $313.68. Now, to figure out what a 4% move is off of that, and I want the price to move upward, I'm going to basically add 4% to this number. Quick way to do that is I'm just going to multiply that times 1.04, click on equals, and you'll see that our number is now 326.22. So what that means is that this bar here has to close at least 326.22 for this line to move upward. Okay, and you'll see if you look at the closing price on this bar, you'll see that it actually closed at 351. So it clearly went above 4%, and that's why that line went up. And then, of course, then it goes down and so forth. Now, the thing about the zigzag indicator that's really important to understand is that this last line, or basically the last part of the indicator, is actually dynamic until you actually hit the percentage level that you set it up for, which in this case is 4%. So here's an example. Let's take a look at the line right here. And what I'll do is I'll go ahead and put a circle around this little area right there. And what I want you to note is I want you to note that our line during this stretch right here was moving down, right? Basically, it was moving down at this point right here. So if I look at this bar right here, this is September 20th. What I'm going to do is I'm going to back up our data to this point here, which is September 20th. Now to do that, down here, this is our x-axis. So I'm going to right click on it. I'm going to go into the x-axis properties, and I'm going to back up our chart here to September 20th. And do that one more time. There we go. We'll click on OK. And now we'll look at our indicator. Our indicator was actually going down, but now it actually moved up to basically identify the closing price on this bar. And this is what I mean about the last leg of this indicator. The problem with this indicator is that this last part of the indicator is not fixed until the prices move far enough in that particular direction there. So let me go ahead and go back here again. I'll go ahead and reset it back to November 7th. So we'll go back to November 7th. And I'll change that, and we'll click on OK. And now you'll see our line here go ahead and go moves down, and it found a bottom here at this point here, the week ending of September 27th there, and then from there it actually went up. Okay, so again, the key is, or the takeaway about the zigzag indicator is that this last leg of the indicator is actually dynamic and can change if the prices don't move that full 4% there. Okay, so with that being understood, this indicator is very, very helpful when looking for percentage changes here on our chart, because all of these moves here going backward, except for the very last part here, is actually locked in place and they will not change. So based off of that, what I did is I then created a number of different formulas here. And that is one of the things about the Learn MetaStock site is that whenever I go in and I'm showing you a trading strategy and so forth, I always give you the formulas so you can download them directly into your program. So what I did here in this particular case is in the Expert Advisor, when you download any of our formulas, the formulas will all begin with LMS for Learn MetaStock. And you'll see that I created two different formulas here for you. And the one that we're going to look at right here is called the 4% Expert from the previous high and low. So I'll go ahead and attach it and then click on Close. And what this is going to do for us now, it's going to identify the buying and selling points based off of these actually moves of this indicator. And the idea is that you're not going to get a sell signal until the indicator hits a high, and then the prices retrace at least 4% from that point. So for example, let's look at that sell signal right here, for example. And again, one more time, I'll go ahead and bring up our calculator here. And we'll look at the high and the close of this bar, which is 561.38. So again, one more time, I'll go ahead and type in 561.38. And then to figure out a 4% drop from that price, I'll multiply that times 0.96. And you'll see our price is now 538.92. So what that means is that the sell signal won't pop up unless the prices move down at least to 538.92 or lower. And if we look at the price of that bar, you'll see the price is 529.72. And that's, of course, why we got that sell signal. So what you can do is after plotting this, then of course, then you can verify these different signals and so forth here on our chart. Now, basically, once you understand how this works, then what I did is I then wanted to go back and I wanted to duplicate his trading strategy, going back over the time period that he tested. So to do that, we're going to open up our system tester here. And inside the system tester, we've created two different formulas here for you again. And the one that we're going to look at first is called this 4% system from the previous high and low. So again, all this is really going to do, it's going to buy off of a bottom and it's going to sell off of a top once the prices have moved at least 4%. So I'm going to go ahead and enter in the symbol. The one we want to test it on is the value line, which is .VALUG. And over here on the right-hand side, we want to go ahead and test going both long and short. Now, for the time period that we want to test, though, is we want to go back and we want to test the time period that he explained or basically demonstrated in his book, which in this case, for example, was January 1st of 1966 going through, let's see, January of 1988. So again, that's a 22-year period. And the key is we want to make sure that we trade it on a weekly time frame. So I'm going to click on the trade options here, and I'll show you how I set up my test here. So I'll click on the account button right here. And now you can run a system test in a lot of different ways, but typically what I do is I usually run a system test as a points only test. And what a points only test does is it just returns back a raw number of points that were gained or lost. So for example, if you had a system that bought at $50 and sold at 60, your system test results would show you a 10-point gain, for example. Okay, and by putting it in a points only test, that also takes out of the equation any type of interest that you might be getting on your account or trading on margin and so forth. Again, it just basically removes all that. And what I find about that is I find that to be really helpful when comparing system test results against each other. Because again, what we want to do is we want an easy way to make sure whether or not this system is any good and then compare it against something else. And then for our commissions, you'll see I've got it entered as 0. And for our trade execution, I've got everything to buy at the opening price with a 1-period delay. So if I get a buy signal at the end of the week, I'm going to get in at the opening of the next bar. And then vice versa, if I get a sell signal at the end of the week, I'm going to get in, or I'm going to exit out at the opening of the next bar, which would be the next week. Okay, so we'll click on OK. And then to run the test, we'll just go ahead and click on our Start System Test. And we'll see what we come up with here. So go ahead and click on my results. And now you can see here on our results here that testing 1,148 weekly bars, which in this case is about 22 years of data, the profit in this case generated 354 points, and the buy and hold was 67. So as you can see, it actually did perform really well during that period of time. In fact, it did about, I would say, around 420%. So let's take a quick look at the equity curve up here at the top. I'll click on that. And here you can see what the account looked like during that period of time, and actually a pretty decent looking equity curve, to say the least. All right. But again, this is going way back to 1988, right? So then the question is like, okay, it performed well there, but how's it doing now, right? So then what I did is I said, well, let's go ahead and test this again. We'll keep everything the same. I'll run it again on the value line index, which is .VALUG again. But this time I'm going to test it going back, for example, like 10 years in time. So what I'll do is I'll put a, let's make this, for example, like November 1st of, say, 2010. And we'll run it through the current exchange date and time by putting a check mark in that box. So then we'll click on our Start System Test. Go ahead and run this one. And we'll look at our results. And look at our results. Our results are showing now that our profit was a negative 136 points. The buy and hold during that period of time was 121. So you can see that for whatever reason, this system absolutely fell on its face over the last 10 years. Now, why that's the case, I honestly couldn't tell you. I mean, maybe it's volatility. I mean, number of companies being traded. I couldn't tell you. I have no idea. But all I do know is that it performed really well when he wrote the book. And in the last 10 years, it has not performed well, right? So then what I did to take this further is I went back to Stocks and Commodities magazine, and at the end of the presentation, Jeff was talking about that if you sign up for Stocks and Commodities, or sign up for the premium class there, you get a 2-year subscription to this. I would highly recommend that you subscribe to this magazine if you're interested in technical analysis, period. You know, whether you get it for free or whether you have to pay for it, it is a well worthwhile investment. It's an excellent magazine. So anyway, one of the nice things is that once you become a member, then you can go back in time and you can look at any of these articles that were published going back 10, 20 years ago. So that's what I did, is I went back and I looked at the different articles that were published on this 4% trading strategy. And there were 3 articles that I found that actually seemed pretty relevant. The first one called the 4% Indicator Revisited, then the Trends in 4% Solution, then of course an Autumn of Infamy. So based off of that information, the one that I really wanted to zero in on is that first one there. And that first one, of course, is this 4% Indicator Revisited, written by Michael Collins. And the reason why I wanted to kind of zero in on that one is because he did a really good job of explaining exactly what he did. And he showed all the signals. And so that's, again, really important whenever you try to go back and duplicate these things. You want to make sure that the signals are matching up with what the author was showing at that point as well. Now, what was interesting, though, is that on all 3 of these articles, they actually changed the rules. And the rules that all 3 of these articles use, or did use, is actually for a buying signal, is they're just looking for a 4% change of a weekly bar in relation to the previous week. So again, that's a really big difference than what the original formula was published by Mr. Zweig there. And again, all we're really looking for in this case is, again, a 4% change from one bar to the previous bar. So taking that information, then what I did, again, is let's go ahead and go back in here, and I'll open up the chart here again, and let's do that. Do .valug. And we'll go ahead and open that up. And again, I'm going to go ahead and change this back over to a weekly chart. And we're going to get rid of this zigzag indicator that we've got on here. And we're going to change the expert. And this time we're going to load this one, which is called the 4% expert from the previous week. And we're going to attach that to our chart. And we'll go ahead and plot that one. Now, the big difference here is, again, rather than looking for a peak or a trough, for example, now again, it's looking for just the difference between one bar versus another bar or the previous week. So again, let's kind of zero in here, for example, at this point right here, because again, this doesn't look like much of a change. So let's go ahead and check that real quick. So for this particular one, let me move this over here, right here. You'll see that the close, for example, on this bar was 483.46. So again, I'm going to go ahead and type that in, 483.46. And to figure out what 4% is above that, I'll multiply that times 1.04 to get an answer of 502.79. So in order to get a buy signal on this bar, this closing price has to be above 502.79, which in this case, as you can see, it's 504.33. So that's exactly why we got a buy signal there on that bar. And then vice versa for a sell signal. Scroll over here a little bit. We didn't get a sell signal until this bar. And again, if you look at the prices there, you'll see that the price difference between the close on this bar versus this one, again, is well over 4%. Now, this is a pretty interesting way to kind of look at this, to say that I'm going to buy a security based off the value line moving 4% versus the previous week. Here's one of the big question marks that I had when looking at this trading strategy, and that is, let's pretend for a second that the market was moving up, but it didn't change 4% from one week to the next week. And let's say it only moved 3% week after week after week. Based off of that, if that actually happened, you would never have gotten into the trade. And then vice versa, if it started to go down very slowly and you didn't get at least a 4% drop, you'd have never gotten a sell signal. Okay, so that's the weakness of it, which actually kind of makes it a little scary to kind of think about this particular trading strategy. But based off of that, again, what I wanted to do is I wanted to go back and duplicate exactly how he came up with these signals and how well it tested out. So to do that, let's go back into our system tester here. And the way that he tested that, this time, by the way, I'm going to go ahead and grab the second one here, which is called the 4% system test from the previous week. So this one, again, is only looking from the change of the current bar versus the previous bar. All right. So the way that he tested this one is rather than buying and selling the value line index when you get a signal, he actually based it off of buying and selling the different market ETFs. And the ETFs that he looked at, for example, was the Russell, which is symbol IWM, and then the SPY, which is SPY, which is the S&P 500, the Diamonds, which is DIA for the Dow Industrials, and then the Qs, which is QQQ.O, which is, of course, for the NASDAQ Composite. Now, taking this exact same strategy, and again, testing it going both long and short, and now this time, the way that he tested this when this article was written is he ran the system test from January of 2001 to November of 2009. Okay, so let's go ahead and run this one now. We'll go ahead and click on our Start System Test. And again, the reason why I do this is because I want to make sure that it matches up exactly with the signals that he's publishing to make sure that I'm doing this correctly. So let's go into take a look at our results. And what we've got here now, let's go ahead and see that we've got a result here, for example, on the Russell, the SPY, the Diamonds, and the Qs. You'll notice that the trades, all of them traded 26 times because, again, every single one, you are buying and selling these different ETFs based off of what the value line index is doing. Okay, so let's go ahead and open it up. I'll go ahead and open up, for example, like the Russell 2000. And you'll notice that the profit here for the Russell 2000 over that period of time, it generated a positive 77 points. And during that period of time, your buy and hold would have been 8 points, so almost 9 points, 8 3/4 points, right? So it well overperformed the buy and hold, which actually, it sounds pretty good, right? So let's go and take a look at the equity curve. And you can see the equity curve looks pretty good. And again, remember that you're always in the market with this particular strategy, either going long or short. And then same thing, if we kind of go down here, we take a look, for example, like at the SPY, for example. This is actually pretty interesting because this one generated a positive 89 points. The buy and hold was a negative 27 points. So in other words, the market from 2001 through 2009 was a really bad market if you were just buying that thing and holding on until November of 2009. You'd literally be upside down in probably most of the securities that you would have bought at that time. And you can also see, for example, that you know, the number of winning trades, for example, this had 13 winning trades, 13 losing trades. The average profit was 10 points and the average loss was 3.9. Now, this is something else that we talk a lot about in our classes, and that is when you're working on a trading strategy and trying to figure out a trading strategy that's worth pursuing or not. And one of the areas that I always talk about is the size of your average profit to the size of your average loser. And what you're shooting for, what I think you should be shooting for, is a ratio of around 3 to 1, meaning that you want your average profit to be at least 3 times the size of your average loser. And if it is, what that allows you to do is that gives you a lot of wiggle room, meaning that you could be wrong a lot more often than you're right, because if your average winner is substantially larger than your average loser, you can do very, very well. You can do very well with the strategy, and maybe you're only right 40% of the time. So if you think about that for a second, and that is, if your average winner is substantially larger than your average loser and you're wrong, 60% of the time, think how much pressure that would take off your trading, right? And the reason being is that you don't have to be right all the time, as long as the average winner holds up to be substantially larger than your average loser. So again, this is one area that we always talk a lot about when developing a trading strategy. And this is one area that we look at right here. So let's go back here again, and you'll see, for example, now on the diamonds, for example, during, again, that period of time, it generated a positive 66 points versus a negative 9 and so forth. So again, that period from 2001 through 2009 was not a great period for the market. So again, the point being with here is like, we're looking at old data. So how is it done, for example, again, maybe over the last 10 years? So to do the same thing, let's go ahead and make it November 1st of 2010 again, and we'll run it through the current exchange date and time, and we'll run it on those same ETFs, which in this case was IWM, the SPY, the diamonds, and also the Qs. Okay. We'll keep everything else the same, and then we'll just go ahead and click on our start test here again. All right. So, all right, this should run through pretty quick. Now when it's finished, we'll click on our results. And now you'll see, for example, let's take a look, for example, maybe at the Russell. So the Russell generated 53 points. The buy and hold on this case was at 84 points. So it had 25 trades, 13 winners, 12 losers. Your average profit was 11 points. Your average loser was 7.6. So that's not a great ratio there, to say the least. And we'll go back and we'll just take a quick look at, for example, like the SPY. The SPY had it did 58 points versus a buy and hold of 211, right? You had 11 profitable trades, 14 losing trades. Your average winner was over 18 points and your average loss was over 10 points. So again, that's probably another pretty good example of you had more losing trades than winning trades, but the system actually was profitable because, again, your average profit was larger, right? So after kind of going through that, you know, the one thing that I do understand is that when talking to different traders and so forth, and as a general rule, especially like equity traders, is that the vast majority of equity traders actually don't short stocks. You know, I know a lot of people, for example, might buy puts or, you know, take some type of bearish position, but a lot of people just don't short securities. So then the question is, well, how would this thing have done if, for example, if we only went long during this period of time? So if we went back during that period of time, and we'll go ahead and run it on that same group again, for example, like IWM, which is going to be the Russell, the SPY, the diamonds, and again, the Qs. And there we go. And this time what we'll do is we'll run it over that same time period, but we'll only test it going long, for example, and see how that did. So again, I'll go ahead and leave everything else the same. We'll go back over the last 10 years and we'll click on our start system test and we'll see what this comes up with. All right. And now we'll go ahead and click on our results. And again, let's say, for example, our Russell here, it looks like the profit actually went up a little bit, went up to 62. It was at 50 something before. And it had 13 total trades, 7 winners, 6 losers. The average profit looks like about a little over double than what the average loss was. And the other thing that actually I think is also really important to take a look at when going through this is that down here at the very bottom, this out of market timing, okay? Keep in mind with this particular strategy now, we're looking again at a 4% change in the value line index. And this out of market timing is saying that we are out of the market 205 bars. Now, keep in mind, we are testing weekly bars here, and we only tested 523 weekly bars, and we're out of the market over 200 of those. So again, over 200 bars, that's about 4 years of time. So out of the 10 years, we were, again, literally out of the market for those years. And again, in this particular example here, it generated 62 points versus 84. So that's a really important thing to keep in mind when taking a look at these different results. And so let's take a look, for example, at the Spider, for example, and you'll see that that generated 127 points. So it did substantially better. It had 8 winning trades versus 5 losing trades. The average winner was a little over 21 points, and the average loss was about 8.6 points there. And again, same thing. If you go down here at the bottom, you were out of the market 200 or basically 4 years of the time that was tested. So if you go back, you'll see that they all did actually pretty well. But then the question that might become is like, well, what if you don't trade, for example, like the ETFs, for example? How did it do, for example, like on some of the different individual securities? So that was the next thing that I did, is I took that system test here, and let's go ahead and do it right now as well. And what I'm going to do is I'm going to go down here at the bottom, and I'm going to grab the NASDAQ 100, and I'm going to go ahead and just start the system. I'm going to keep everything the same here, and I'll just go ahead and click on our start system. Now, this one's going to take a little bit longer here because, again, we're going to be testing over 100 securities in this particular example. Now, one of the questions that you might have here too is like, we're looking at the NASDAQ 100 and it has 103 securities in it. You know, why in the world does this thing have 103 securities in the NASDAQ 100? And the answer to that is that there's a few securities in this index here that have more than one class of security. And this one, for example, it has 3 different securities that, for example, that have more than one class. And so the same thing is true, for example, with the S&P 100. It has 1 additional security, and then the S&P 500 has 5 there. So in this one, again, it has 505. But again, that's just a commonly asked question that I get when taking a look at these different strategies here. All right. All right, looks like my system test here is actually moving pretty slow here. So let's go in, well, actually there, now it's starting to kick out there, and we'll see what that's actually doing there as well. So this will take just a minute, but this is actually a pretty good one, and I want to show this to you before we move on here. So, and are there any questions, anything that I can help answer real quick, Jeff, while this thing is running? This thing should come through here pretty quickly, but if there's any quick questions I can help answer right now.
Sure. Kathy wanted to know, did you refer to the name of a book at the beginning?
Oh, yeah, I did actually. And it was written by Martin Zweig, and the name of the book, let me take a quick look at it, is called Winning on Wall Street. And I think it was published back in, I want to say maybe like the early 80s, maybe the later 80s, I should say, because the system test that he published in there ran from 1966 through 1988. So, yeah.
Michael says this, Kevin, you know that from time to time, us Kiwis are a bit slow. I mean, number one, what time is it in Australia? Or what, you know what I mean? Like, it's like pretty early or pretty late in Australia. But he's like, will this only work with the base being the value? And unless you trade the US and will not apply to my market? So will it apply to the Australian market? I think.
Oh, that's actually a perfect question. With all these formulas, basically, that I'm showing you here, is all I was really trying to do is duplicate what the authors were doing. And they were using specifically the value line index as their base security. But the nice thing is that I'll show you specifically, you know, when you become a member in our videos, I'll show you specifically how you can change the symbols and you can use anything that you want. So if you're anywhere else out in the world, I mean, again, you can choose any index, you can choose any security, whatever you like. And I show you specifically exactly how to do that as well. So
yeah, I think it's funny. I think it's funny that he says he's a bit slow. I'm so tired right now after work after 3 days of this.
Oh, but, I can imagine. Well, I know in New Zealand right now it'd be really early in the morning. That's for sure. So
and Michael's been with us for a while. So welcome.
Okay. Well, let me finish up here real quick, and it looks like it did finish here. So let me go ahead and show you the results here, and we'll come back to any other questions that you might have. But the reason why I wanted to show you the results here is that I have run over the years of my testing and so forth. I've run literally thousands of different systems over the years, and again, this is a really, really simple trading strategy here that can be used on anything. And when I tested it across a lot of different types of securities and markets and so forth, this thing looks like it has been testing very, very well. So in this particular example, again, we tested 103 securities on the NASDAQ, and you can see only a few securities here at the very end actually tested negatively over that period of time. You see right here at the very top, Amazon, of course, that's our top, you know, winning security here. It generated 1,200 points. It had the buy and hold was up 2,800 points. It had 9 winning trades. The average 4 losing trades. The average winner was 163. The average loss was 66. Let me just go back here. Booking holdings, for example, is another good example. It generated 987 points versus a buy and hold of 1,200. It had 13 trades. Only 6 of them were winners and 7 losers. But the reason why it was so profitable is your average profit was over 262 points and your average loss was 83. So, and the other thing, again, I can't stress this enough, you were out of the market almost 4 years of this time. So again, when looking at this number of 987, again, you were only in the market basically, what, 60% of that time. And again, versus the buy and hold here. So that's just, again, something else that I think is actually important to take a look at there as well. So based off of that information, then what I did here, and this, hopefully this will summarize it here a little bit better, but I ran it again all over the Dow 30 stocks, the S&P 500, the NASDAQ 100. And for example, in the Dow 30 stocks, you'll see that it had 26 winning trades. 4 securities actually tested negatively. The average winner was 57, over 50, almost 57.5. The average loss was 13, and the median was 43.17. So if you're not familiar with what the median is, the median means that half of the securities tested better than that, and half of the securities tested worse than that. So that's actually a kind of an interesting number that I always like to look at when I'm testing a large group of securities. And then the last number, the trade profit to loss, that 6.21 means that your average winning trade was over 6 times the size of your average losing trade on the Dow 30 stocks. And then testing it on the S&P 500, looking at all 500 securities over the last 10 years, we had 457 tested positively, only 46 tested negatively. 103 was your average winner. Your average loss was only 12 points. Your median was 47, and your average trade profit to loss was over 3. And then lastly, on the NASDAQ 100, this one actually tested 99 securities to be positive with only 4 losing securities. The average winner was 192. Your average loss was 15. Your median was almost 100 points, and your average trade profit to trade loss was 5.77. So again, almost 6. So what was interesting about these is all 3 of them actually, had their strengths and weaknesses, but the Dow had the best trade profit to trade loss at 6.21. The S&P 500 had the lowest average loss at 12.8, but the NASDAQ 100 had the highest ratio of winners to losers. It had the highest average win, and it also had the highest median at almost 100 points. So again, my point is that this is a really simple trading strategy here, and this is really kind of the real power of MetaStock, is that, learning how to, use the MetaStock and use the different tools. This is the kind of stuff that we can help you with at Learn MetaStock. This is exactly what we do. We train you on basically anything that you want, for example, having to do with a MetaStock program there. And we'll help you, for example, in just getting started all the way up to advanced formula writing and just about everything else in between. So let me just show you our website just real quick. But our live classes that we host is underneath this tab right here. And there we go. Okay. If you go up to learnmetastock.com, if you click on the live classes, this will show you the schedule for the upcoming week. We do currently right now, we're doing a couple classes at noon on Tuesday and Wednesdays, and then we do one class on Thursday a little bit later. And these, of course, can always change, so you need to go up and take a look at it, on a weekly basis. But primarily where most people spend their time on our site there is underneath the video library, where we literally have, I don't know how many videos and training tutorials that we have up there anymore, but it starts right off. If you're new to MetaStock and technical analysis, you might want to just literally start right at the very top and just start working your way down. And underneath the getting started, that'll get you all through the MetaStock program. And if we scroll down here a little bit, then you can jump over to the power tools, whether it be in the forecaster, the expert advisor, option scope, system testing, the Explorer. I mean, it just goes on and on. And for those of you, for example, that are interested in really kind of getting more out of the program and testing different ideas, one of the areas that you'll definitely want to take a little time to learn is the formula capabilities inside the program. And we've got a lot of ways that we can help you in that area as well. We also have a number of videos on the RMO. Stops is actually a pretty interesting category as well, because if you think about it, anybody can get into a trade at any time, but where you get out of the trade is going to determine whether you're going to make money or you're going to lose money. And for that reason, stops are actually pretty tricky. And for that reason, we've done a number of different videos there just based off of stops and the different types of stops. And again, with these different stops that we have, we write a lot of these formulas and then we give them to you through the website. We have a number of videos on the indicators, and the video or the class that we just did today, we have the video up on the website, and you'll see again, it's called the 4% System Revisited. So if you want to go up to the website and you want to watch this again, you can click on this watch now. And when you do that, as with all of our videos, if we have formulas available for you, they'll be right over here on the right-hand side. So when you click on this, this will download any of the formulas that we create for you directly into your MetaStock program, which again can be just a huge benefit for you, to say the least. But underneath this trading strategy section here, every single video that we have in here has formulas for you to download directly into your program. So we've got a lot available there for you. Then in addition to that, we also do product reviews where we take a look at the plugins and add-ons, and we'll show you, number one, we'll train you how to use it. And we'll also show you, for example, like the strengths, weaknesses, what works, what doesn't, possibly work, and so forth. So this is another area here that I've gotten a lot of good feedback on as well. And then lastly, down here at the very bottom for our real-time customers, we have approximately about 15 different videos on just the Zenith platform, which of course is the real-time version or the real-time platform for MetaStock. So I hope that that's helpful. At this time, let me go ahead and pass it back over to Jeff there.
All right. Do you have time for a second or another question or two?
Absolutely. What do you got?
The name of that? What's the name of that book again?
The book is Martin Zweig, and it's called Winning on Wall Street. I can show you. It's just called Winning on Wall Street.
Okay.
Yeah, by Martin Zweig.
Actually, she asked me to text it over there, or said the title. So here it is, Kathy. So.
All right.
So how can okay. I think that's about it. Let's show them how to get set up for it. So we can help you set up for that. Kevin, I want to say thank you for coming today. Good work. Way to cap off the day for us. And if you guys want to sign up for learnmetastock.com, give us a call at 800-882-3040, and we can help you get set up. Kevin, thank you for your presentation. Out of all those different technical indicators, what are your top three? Waleed would like to know.
Well, that's a good question too. Yeah, as far as like the different indicators, I mean, as you know, there's literally hundreds that you can choose from. But quite honestly, I really end up kind of at the basics, over and over again. Using simple moving averages, for example. Some basic oscillators, and just like different combinations of them. That's kind of the beauty of MetaStock is that, once you go back and you read these different articles, more often than not, what they really do is they just show you a different way to look at the same indicators that possibly that you're already familiar with. So, and that's again where we can help you out there as well. So.
All right. Let's see. Kevin or Michael says, always informative and helpful. Thanks, Kevin. So
thank you.
Appreciate it. Again, you can get 3 live classes a week, hundreds of those recorded videos, technical analysis, MetaStock topics. You do a weekly market outlook. One of the things I really like is he'll sit down and for classes, he'll sit down and look at a stocks and commodities article and kind of create the system for MetaStock and test it and give feedback and thoughts on it. It's a really well put together site. Good job with it, Kevin. So if you want to sign up, you can get for basically $33 a month for the next 3 months, $99. 800-882-3040, or visit us online at metastock.com/sales chat for that. Lynn says, thank you, Kevin. Pretty interesting information about MetaStock. Thank you, Lynn. We appreciate that. Okay. Any final thoughts, Kevin?
No, I just want to say thanks again. I know you got to be pretty tired. That's a long couple of days, to say the least.
Yeah, but it's been great. We've had everybody's done a fantastic job. Had a couple technical glitches, but this has been just an amazing conference. I hope everybody enjoyed it. I am going to kind of throw out a promotion for the premium conference that we're doing tomorrow. It's going to be great. We're going to have Steve Bigalow, Alexander Elder, Alex Carbone. 4.5 hours of education tomorrow, $450. I hope to see all of you there. Give us a call for that as well, 800-882-3040. Kevin and all of the rest of the speakers today, I want to say thank you for coming. Oh, I forgot to turn this on. We are getting tired. For all of you that are watching here in YouTube and on GoToWebinar, thanks for coming. I hope you learned something. I hope it was helpful. And I hope that we see you at the next event. And in fact, the one tomorrow. Come on, 800-882-3040. We'll see you next time.